I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open right here on NDTV Profit with me, Neeraj Shah, and my colleagues Hiral Daria and Sharad Dubey. And interesting day of trade, guys, simply because I think the world markets will be a bit, how do I say, watchful of what comes out of Nvidia per se. A company the size of our economy, though there are many companies like that now per se, but also the fact that while there is a lot of to and fro and threats from Donald Trump, oil prices continue to stay elevated, and that remains a bugbear.
And Neeraj, the yields, that's the concern
Big
coming
one.
in. The US 30-year yields, they have hit its 2007 high levels, and of course the Japanese and Indian.
5.19, right?
Exactly.
Across that's the situation. Just one thing to add when you're talking about size is Singapore Stock Exchange, that's the Singapore market, in terms of size, it's actually pipped Indonesia, and all this while Indonesia was the largest in terms of Asia. So that's a did you know for today for you.
Interesting. I didn't know this. So Southeast Asia, Indonesia was the largest, you are saying?
And now
Singapore has overtaken that.
overtaken.
Interesting. Okay. Wow. Well, interesting trivia. Yes, for sure. Okay. So global cues, what are we looking at?
So overall, Neeraj, the global cues is of course a basis on Trump, and he has stated an important commentary coming in, and he has stated that overall he's moving rapidly towards ending the war in the Iran segment. Now there are some important points which I have made from here. Trump's renewed threat to resume military strikes on Iran if it has failed to accept the US peace terms. Now Trump's commentary on Iran deal is still keeping the markets, entire equity markets, on toes. The global stocks have retreated for the third straight day. Interestingly, I was checking the Asian markets also, and they have also fallen for the second straight day. The yields are surging, as we were discussing with Neeraj and Hiral. NATO, interestingly, the media reports is suggesting that they are weighing in to plan to escort commercial vehicles, I mean to say the vessels, through Hormuz Strait. The US futures, of course, are remaining steady ahead of Nvidia's earnings, and gold, overall, if you look at it, it's still holding its decline as the investors are assessing inflation risk. And of course, some say that there might be some potential rate hikes from Fed at the end of the year. That's something to watch out for. But nevertheless, Brent crude has not spiked, but still is remaining elevated above that $110 mark. And Neeraj and Hiral, I was talking about the rising yields. The interesting data I have taken out on a year-to-date basis of these yields, and of course look at the jump which has come in the 10-year yields. It's of course on basis points. USA, it's up 49 basis points. Japan, it's 73 basis points. For India, this amount is 52 basis points. South Korea, look at that, 80 basis points, and UK also 65 basis points. But the question remains is, what should your portfolio be, or what should that portfolio construction be in a rising yield scenario? And of course, Neeraj, one is the equity segment where you can focus on the cash rich, dividend paying, and even financials. And if you look at the fixed income, debt mutual fund and corporate bonds also become attractive in this scenario.
Fantastic data, Sharad. And by the way, guys, so at 10 a.m. when we talk to the market guests that we have today, we are going to use this data point to question the gentleman on what should an ideal portfolio construct be. So superb data there. But since we're talking about the global piece first, let's hear out what US President Donald Trump had to say, effectively saying that the United States is moving rapidly towards ending the war with Iran very quickly.
And now we're blowing it away. We're blowing everything away, and we're going to end that war very quickly. They want to make a deal so badly. They're tired of this. Should have happened for 47 years. Somebody should have done something about it, and it's going to happen, and it's going to happen fast, and you're going to see oil prices plummet. They're going to come down. There's so much oil out there. They're going to come plummeting down.
Well, let's see. Oil prices come plummeting down is music to the ears. The question to Jeffrey Dennis, independent markets commentator, and somebody who's looked at global markets so closely, and he's a regular at our shows. Now, I don't think I need to introduce Jeff Dennis. So many of our viewers know him so well. Jeff, is anybody gonna believe a statement coming out about the conflict ending, or will people say, let it happen and then we'll talk about it?
I don't think people are going to believe, because President Trump's been saying that for a long time. He's either been threatening, to bomb Iran back to the Stone Age, or he's been saying we're going to get a settlement imminently. And frankly, it's very, very hard to get a settlement for all sorts of reasons, not least the unwillingness of the Iranians to come to the table and agree some sort of settlement, because they are digging their heels in. Arguably, this is a more hardline regime than the previous one, and that is a problem, I think, for getting a deal. And even if we were to get a deal in the near term, you've got the issues of getting the Strait of Hormuz open, getting the so-called blockade removed, and actually rebuilding the supply of oil around the world. So I think if there were a settlement, yes, you might see oil prices peaking, but it'll take a long time for those to come down. And the oil prices as they stand now, or even slightly below where they are now, are causing tremendous problems in these markets because of the effect on inflation, and of course, latterly, the effect on global bond yields as well.
Right. Jeff, good morning. This is Hiral on the side. We're talking about what Trump has been constantly reiterating. However, you have J.D. Vance, who has come out. I mean, his statements that have come in categorically tell you that they are saying that the ball is in Iran's court. Now, to add to that, you have NATO, who's come out and said that they will consider a Hormuz deployment if the strait is not open by July. How are you sensing that scenario play out? Because if NATO comes in, if they're saying this is what we will do by July if we do not see things improve, do you think that will have any impact in terms of things cooling off?
I think the problem is, and I don't blame you, because you have to deal with this, every 12 hours, every 24 hours, but we're just chasing the latest piece of news. And I'm not sure what NATO helping with the Strait of Hormuz in July is actually going to mean to anything. The point is there's a huge amount of oil blocked behind the Strait of Hormuz between Iranian and other ports and the open sea, if you like, that it's not at all clear how that is going to break itself up. What you clearly need is for Iran to say the Strait of Hormuz is open, the US to say the blockade, whatever that means, is over, and we get the oil flowing again, to get the tankers moving. And I have no more confidence in NATO being able to do anything in July than I have in terms of the US and Iran agreeing things right now. So oil has been trading, Brent's been trading 105 to 115 recently, maybe 100 to 115. And I think it's going to take a massive move in terms of moving towards peace and getting the Strait of Hormuz open to see oil prices settling down around $90, for example. So I'm sorry, but I'm very skeptical about this. It's just one piece of news after another, and very often they're conflicting.
Right, Jeff. Good morning, Sharad here. Jeff, another question is on the emerging markets segment. Of course, some concerns are there, and we are seeing the retreat happening for the South Korean markets and even the Japanese markets also in a rising yield scenario also. How do you see the EM allocations playing out?
Well, I've got my own piece of trivia for you today, and that is that I just did the numbers this morning, even though you're starting to see a little bit of a pullback in Korea in particular. Basically, Korea and Taiwan account for all of the gain in emerging markets this year, and a bit more too. EM's up about 16.5% in dollars, and Korea and Taiwan account for about 2,100 basis points of that, so more than 100%. So basically, it's the tech trade that, in particular the AI trade, that has really given the emerging markets at the moment this good year, this plus 16 or so percent, because you've seen some other bad news affecting emerging markets lately, which is the dollar has rallied by about 1.5% since over the past couple of weeks. You've seen Brazil, which was a huge winner in the EM this year, getting battered in the last couple of weeks by the banking scandal down there. What impact that will have on the hope the market has for Bolsonaro's son to win the election coming in the fall. So right now in EM, this is a tech trade, and of course the tech trade's still going in terms of the US, and so to a certain extent it's still going in Korea and Taiwan, against the background of where's the dollar going to go. And the problem I think EM has from here, and this is the problem markets have got from here, frankly, is suddenly bond yields are rising and rising sharply. And they're rising for three reasons. Number one, the oil price going up. Number two, the clear evidence from many countries, the US, UK, for example, of sharp jumps in inflation, which will push up bond yields. And now we've got people beginning to worry for the first time for a while about budget deficits. So, there are challenges here. Now, I wouldn't turn negative on EM because, of course, if we were to get a settlement in the Middle East, the dollar would come back down again, money would push out towards EM. But I think we've got to stop the idea that EM is up across the board. And you know that in India, which is not doing very well this year, this has basically been a Korean and a Taiwan year, helped a little bit by Brazil and Mexico, and Brazil right now is falling. So it's a very odd year. And what we need for EM to do better is we need these oil prices to come down sustainably, which requires a settlement and the opening of the Strait of Hormuz. And we need to see the dollar moving low, which would probably happen in those events anyway. But right now, it's kind of going the other way.
Jeff, that's an interesting trivia that you've shared with us as well. Thank you so much for that. That, this year has been undoubtedly for the Korean and the Taiwan market, and things need to change from here on as well. And for that, oil coming off is the key. But thank you for joining in. In fact, now we have Cameron Brandt, Director of Research at EPFR Global, joining in as well. Cameron, good morning and welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. We were talking about what's happening with the emerging markets. And what I want to ask you is, in a week's time, you had, $13 billion worth of money that has left the South Korean equities in a single week. Now, from the real-time fund tracking that you do, are you seeing this capital probably strictly rotate within the emerging markets? And if so, where are you seeing that flow into? Or do you think that is being left or probably parked into developed markets or even in terms of cash right now?
Definitely the latter. It's really not going to other emerging markets. We're really seeing a focus on individual markets at the moment rather than sort of seeking broad diversified exposure. Korea was immensely popular for much of this year, but the energy equation is beginning to move against it with a vengeance, as we've seen recently. There's definitely interest in Latin America, but not enough interest to absorb that amount of money being rotated from Korea. Some solid flows chasing Taiwan's AI story. But much beyond that, it's once again the U.S. that seems to be playing its traditional safe haven role, even though it's arguably the reason we're in this particular situation.
Right, Cameron. Good morning, Sharad here. Of course, I wanted to understand about the flows, especially if you have a comparison with the developed markets and the emerging markets. Do you think there is still a kind of a question mark happening right now until the clarity comes from Trump?
Absolutely. I mean, the movement in flows we're seeing is very much news-driven, and the news that people are paying attention to is the pronouncements on the state of the U.S.-Iranian conflict. Until the past couple of weeks, honestly, it was, the flows seemed to indicate a willingness to try and look beyond something that investors were hoping would be wrapped up by now, that hope is beginning to collide with reality. And I suspect we're going to start to see a new flow pattern in the next couple of weeks.
Okay, so I think this is going to be developing from here on. Thank you, Cameron, for your views. So clearly, I mean, Neeraj, it's interesting to see everyone was anticipating that the money that's moving out of Korea probably is coming to emerging markets. And in fact, one of the Nuvama notes did note that India could be a beneficiary of it. But from what Cameron is saying right now, it's the reverse. He senses that it's moving to developed markets, or probably people are sitting on cash but not going to any other emerging markets. I mean, don't you think that's interesting?
It's that threat of that rising yield again, it feels like, just going back to the basics, back to the developed markets. But let's see how these things pan out.
Yeah, I mean, it's anyone's guess over here. But let's quickly look at what happened to Indian markets as well in terms of yesterday's session. That choppiness has continued. I mean, we've traded within a narrow range. And if you talk about Nifty, we eventually settled at that 23,600 mark. Now, there is that cautious undertone that continues to prevail in Indian markets, and it's reflecting profit booking near higher levels after the recent recovery rally that we saw as well. There have been sharp intraday swings, and that's suggesting that ongoing tug-of-war between buyers and sellers. And in terms of the Sensex, 114 points downtick is what we saw. Nifty fell around 0.2% to close at 23,618. You have Bank Nifty as well, which has actually witnessed a sharp volatility. We closed at around 55,310, which is down nearly 1.3%. And there is profit booking after the recent recovery rally in terms of Bank Nifty as well. And it's mainly the private banks which have actually played spoilsport in terms of yesterday's session, because across other sectors, everything actually kind of ended in the green. Overall, you have the rupee, which has touched a fresh low of 96.61 versus the dollar towards the closure of trade yesterday. You have elevated crude prices, which have remained a key concern. And there is buying interest remaining mainly in terms of broader markets, with major support coming in from Nifty, IT and Realty. Apart from that, if you see in terms of broader markets, they outperform the benchmark indices, witnessing a strong buying interest. You had the VIX as well, which rose 1.3%, but we are settling at around levels of 16.84, which is indicating a mild bounce after the recent decline that we've seen. So yes, Neeraj, that tug of war has continued. I mean, I don't know what new are we going to even see today.
Let's skip the trade setup, straight away go to the levels, because frankly there isn't much. I mean, yesterday frankly was a good day for portfolios selectively, but just look at what happened individually. I mean, to the indices per se, and they're flat line, so virtually no movement out there for the indices at all, if you will. And frankly, it's very difficult to find reasons for optimism today. You don't have much in terms of what's laid out, and therefore I don't know if we'll indeed show a very sharp bout of recovery the way we did on Monday. Maybe we do, maybe we don't, but are there fundamental reasons for that to happen? Very likely not, and therefore bottom-up stock picking remains center stage. We're going to be talking about chemicals a bit later on, so I won't dwell too much on it, but continuously for the past 3 or 4 weeks, we've been seeing smart money lap up chemical names selectively. I don't think today will be any different. So you'll selectively continue to see action in some of those chemical names. So keep an eye out for them.
Okay, so chemicals is going to be the space that you're watching out for. In terms of factors as well, very similar. The battle of sectors between IT versus banks continues. Your currency weakness has actually boosted the Nifty IT index, which is actively keeping the Nifty 50 above vital support zones. Conversely, Bank Nifty remains the primary drag. I want to talk about this with Kush Bohra as well, because he was indicating that the setup when it comes to Bank Nifty is seeming better as compared to Nifty 50 from a weekly perspective. But yesterday, private banks have been a drag. We've fallen in 7 out of the last 8 sessions with high volatility and zero directional conviction. The sentiment leans slightly bearish. Crucial resistance coming in at 23,735, support at 23,590. And the bulls will need a decisive close above the 23,800 level to actually target 24,000 yet again in trade. If there is a failure to hold the 23,400 mark, then you could see accelerated selling pressure as well. Bank Nifty, yes, it's consolidating with a bearish bias. There is crucial resistance at 53,670 and support coming in at 53,340. The strategic trigger that we should be watching out for is the immediate 53,000 mark, which is the support floor, and 54,000, which is the ceiling. If 53,000 is broken, the next defensive wall is at 52,680 and 52,800. We've been talking about all of these levels over the last couple of days, but the key from here on is what is the F&O and the derivative data looking like as well. Puneet joins us to tell us more. Puneet, good morning. What are the cues that you're picking up for trade today?
Well, good morning to all three of you. It's been, exactly as you guys highlighted, they are very lackluster, away from any kind of triggers at this point of time. And if implied open is an indication, we are back again testing those 23,400 levels. Now, mind you, the last time we did see some buying at that level, went all the way up to 23,700 and now seem to be retreating back. And while it has been a very, very narrow range, it's still something very important as we continue to track the 23,300 level, which has been very sluggish for the markets over the last few weeks. Could be testing that yet again, but continue to monitor all those factors. Macros not helping, and most of those earnings now in the bag. You continue to see the next direction for the Nifty as well as for the Bank Nifty, which has been yet again lackluster at 53,400. Apart from what we saw during the war, we've not slipped below this level going into the 52,000s, at least for now. So that will be the other factor, which earnings largely done as well for the Bank Nifty. You don't want to go and test those levels again, which was during peak volatility of the war as well. And the cash markets, yesterday was a buying figure by foreign investors. Today, 2,800 crores. Yesterday, buying, 2,400 crores selling. And the index long also very close to where it was yesterday at 12.2 to 12.4%. But the put call ratio has decelerated from roughly around 1.42 yesterday, come down materially, and that's largely because of expiry of the Nifty yesterday as well. So you will see if any build up, if any. But finally, in terms of open interest distribution, 23,500 continues to be a key level where both active call and puts continue to have high open interest. And for the stock specific action, Amba Enterprises was one which was under serious pressure on Monday, down 15%. Saw some kind of longs being built up, but wasn't reflected in the returns. And TVS Motors, and we'll put some focus back again on this stock today, where shorts being built up, maybe on the capital allocation part, the street's not liking it too much. And in terms of the open interest losers, Pharma continues to be one where so much interest from traders, both now we're seeing short coverings, has been on both sides as well. So very, very individual stock specific action today yet again, but seems to be a start in the red, and hopefully some better outcome in the second half of the day.
All right, thanks a lot, Puneet, for that. And of course, this is largely looks like a stock pickers market, but interesting names have come up. And of course, small and mid cap space is something which I'm tracking. Especially look at the numbers for Prince Pipes. They have recorded the highest ever volumes in the fourth quarter. FY26, the fourth quarter volumes, look at that, that's up 23% on a year-on-year basis. There was a sharp reduction in the inventory and the receivable days as well. Of course, the third quarter also the company came out with its strong numbers, and there's a benefit of the anti-dumping duty which was put in as well, and you can see the numbers also very strong. Another important bank which numbers came out, and of course the last 2 quarters the numbers are coming really strong, is Karnataka Bank. Asset quality has improved and street is quite bullish after the management change which had happened, and there is a higher interest coming in from HNIs and astute investors. Especially look at the asset quality that has seen a good improvement, looking at both GNPA numbers as well as the net NPA numbers. Even the provisions were on the lower side. And another small cap company on my radar is Sambhav Steel Tubes. We had featured this company recently in KYC also, and now the company has secured its consent from Chhattisgarh Investment Conservation Board. Now they'll be setting up a new cold rolling mill unit with a production capacity of almost 1.2 million tons per annum. And of course, the expansion is something which the street is bullish on for the next 4 to 5 years. Value-added products and the recent investments in carbon alloy segment, that is where the interest lies. So interesting bit of stocks coming in.
Yeah, I mean, on my list also majorly we have earnings that I'm tracking. Hindalco will be in focus as well on the back of Novelis Q4 numbers. Now, as everyone knows, Novelis contributes about 60% to Hindalco's consolidated revenues. A strong quarter is what Novelis actually reported. If you talk about the adjusted EBITDA, that was driven by improved scrap spreads and the cost efficiency initiatives that the company has taken versus the headwinds they actually faced from Oswego fire and the tariffs. Now, Oswego plant fires have severely impacted Q4 shipments and profitability as well, and they're expecting Oswego to restart ahead of schedule. They exited FY26 with over $200 million in run rate cost savings, and now they're targeting $350 to $400 million in total savings by FY28. Tariffs and weak specialty demand remained key pressure points, but in spite of all of this, your net sales have seen an improvement by 4.3%. Your adjusted EBITDA is down only 3% versus what the street was estimating. It's much better. And your EBITDA per ton, that's gone up by 10% as well. They've reported a net loss at around $84 million versus a $294 million profit number. But that was something that was already known that this would be the kind of impact. And if you see the adjusted profit, that is down merely 3% at $227 million. The second one on my list is Godavari Power Ispat. Again, a strong quarter. The earnings have mainly been driven by robust operational leverage as well as that sharp margin expansion that they've seen during the quarter. It seems that, the bottom line growth has outpaced the revenue growth by 3 times as well. If you see the revenues, they are up around 9.7%, EBITDA up 38%, and the margins have improved substantially as well, 27.3% versus 21.7%, and your net profits have seen a growth of around 26 to 27%. And very lastly, Anthem Biosciences, again, an exceptional quarter that the company has reported, stellar performance. The operational leverage is something which has been very strong. Exponential growth is what they've seen within their core contract research, development and manufacturing organization, which is the CRDMO business, and it's the highest ever quarterly revenue. The profit expansion has vastly outstripped your top line growth as well, with revenues growing 26%, your EBITDA 37% kind of growth. Margins also have improved substantially, and the net profits 129%. We've seen a number of almost 190 odd crores versus 82 crores. So all the 3 good set of numbers is what we've seen, Neeraj.
Yeah, well, I have 2 good numbers and 1 bad number. And Sharad Dubey helped me a lot in this today because, there were a lot of small names. So we wanted to try some of the bigger names as well, and hence these numbers. So first is Mankind Pharma. And I think the numbers looked okay. Revenues were up about 11.8% at 3443 crores versus 3079. EBITDA though, that was the marked improvement, which is why I think the brokerages are also excited about the numbers. Up about 36% at 930 crores versus 683 crores. Margins at 27% versus 22.2%. Net profit as a result 31% higher, 554 crores versus 421 crores. They now have a new whole-time director as well. They've invested about 500 crores more in ARM, Mankind, Medicare. And I think I at least saw a JP Morgan note, if not more, on Mankind Pharma and how they're constructive with these numbers. Everybody's watching out for what companies will go through in the first couple of quarters because of supply chain issues. But by and large, they seem to be constructive here. So keep an eye out for that. PI Industries could be interesting today because there's no doubt in my mind that it'll start off lower. It kind of held its own yesterday, drifted off towards the end. Maybe with reason, because the numbers are a big miss. Revenues down 12.4% at 1565 versus 1787 crores. EBITDA margin at 21.5 versus 25.5%. A big miss on EBITDA, as a result of which profit after tax was down 39% at 200 crores versus 331 crores. Now the problem is that there is an EBITDA miss of about EBITDA is missed by 15%, which is a large miss. And of the last 9 quarters, PI Industries has missed estimates 7 times. It's finding it difficult to live up to the street expectations, which is the problem. There clearly is weakness in the agrochem business, and which will probably hurt the stock. The point is there is a con call slated at 1:30, and now PI Industries con calls have become an event to watch the way SRF con calls were, because the stock probably will not do too much until the con call is out of the way, because the management commentary could be very material for the stock. So keep an eye out for that. Trade carefully is the point I'm trying to make here. That's number 2. Zydus, all round, almost everybody's given a thumbs up to this one. So I'm using the Macquarie note to make the point on the numbers. Macquarie is maintained and outperformed with the target price of 1100. They say it's a solid all-round beat, upbeat guidance as well, and they believe that new growth drivers could support the upside. They are raising FY28 EPS by 21%, because their belief is, of course, that there is an opportunity in GL brands for FY28 rather than FY27. Some of the others too have upped this target on Zydus Life, so keep an eye out for that. Even on a dull day like today, and sorry, I'm not using the term dull, on a day when the indices could start off much lower, this is one stock in that right space which might actually outperform well. So keep an eye out for this one. Okay. Lots of other stocks, by the way. What we'll do is we'll take a very quick break. On the other side of the break, get you Parag Thakkar and Kush Bora for their analysis of some of the results that have come out over the last 24 hours and what you could do with some of those stocks. Stay tuned.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global.
Welcome back. You're watching India Market Open on NDTV Profit. Let's quickly look at implied open. We are seeing a downtick of almost 189 points. So, I mean, nothing changes from what that tug of war has been looking like over the last couple of trading days. But as always, let's get in Parag Thakkar, Head Fund Manager at Food Capital, and Kush Bora joining us in the studio. Good morning.
Good morning.
Kush, let me come to you first. And I know you think I'm going to hold you hostage on this because since yesterday I've repeated it twice in terms of what's happening with Bank Nifty. But
I'm looking forward to this.
Yes.
Nice.
How are you? I mean, okay, we started off the conversation yesterday with the kind of strength that Bank Nifty probably is showing from a weekly charts perspective. Does not seem to be the scenario right now because you've seen private banks which have been the laggards in yesterday's day of trade. Today as well, it is slightly looking weak. So if you have to look at Nifty and Bank Nifty, any change of stance, or you still remain very confident of what you've said?
Yeah, so first up, yes, I think you are going to hold me hostage, like you must, right? Of course, accountability is something, that cannot be taken away. I still hold that view. Okay, let me reiterate. So let me just give you a quick index Nifty view just to begin with, and I'll circle back to Bank Nifty also. Nifty is in consolidation. We've said no trade, 23,200 on the downside, 24,000 on the upside. Bang in the middle of the range, not doing much. No trade, continues from a positional standpoint. Bank Nifty ended yesterday lower, right? And you're right that, one day it's the private banks doing their thing. Second day it's the PSU banks. So maybe they're taking turns. You just want both of them to just club together and then push the Bank Nifty higher. But yesterday, despite the kind of this mildly negative downtick, the indicators, PCR, positive divergences, they held on. In fact, PCR slipped further to 0.78 on the Bank Nifty. So then there's a good possibility that if 50 to 700 is held on to, you could see that bounce. Maybe not today, maybe not tomorrow, but maybe in the coming days, right? So I still hold on to that view. But like we say, bhav bhagwan che, right? जब तक प्राइस में वो अपटिक नहीं दिखता है ना, तब तक ये थियरी है 50 to 700 का लेवल है. If that is broken, then this theory is null and void.
Right, डर तो लगता ही है. Yield से सबको डर लग रहा है. And Parag bhai, I have a question for you. A lot of repricing happens, especially for your financials and brokerages during these scenarios. So is there any different angle to look at banks on this also?
So basically, see, one thing is that rate cut cycle has ended for sure, right? We have already seen in 4 countries, we have seen rate hikes. And if this scenario continues, there is no choice left. Because then you have to reduce demand if the supply is not coming up. And that is what Fed also did. So interest rate hikes. So interest rate hike per se is positive for banks. But this time it is driven by supply side shock and not demand revival. So which is kind of, I would say, a negative event. But up till now, from the commentary of banks, large banks, I would say, it seems that up till now, this war-related NPAs have not emerged. They have not seen it on the ground that there are a lot of credit costs going up due to war-related thing. And at the same time, you have to keep in mind that valuations have become extremely attractive in banks. Like ICICI Bank at below 2x, Axis Bank at 1.5x. And with very good ROAs, and up till now there is no clear visible sign of a NPA building up. But of course there might be some slippages, some credit cost increase here or there because of this extended crisis. So I would say net rate hike is a positive for margin trajectory of banks, but the event due to which it is happening is actually negative from the credit cost perspective.
Okay, so taking that scenario into consideration, yes, you're talking from the impact that Sharad mentioned as regards to financials. However, when you have to look at growth and tech-related sectors, this aspect becomes highly negative as well. But what's happening with IT as a sector is that you're seeing that surge that's coming in. Kush, how is the setup for you looking like in terms of IT? Because it's 2 divergent views that we have. The markets are supporting IT as a sector over the last 2 days, but the way bond deals are panning out, it's somewhere dilly-dally when it comes to a sector like IT.
Yeah, and this, by the way, also is a good segue into the next discussion that I have lined up, because yesterday we spoke about how Nifty IT is something that I will talk about. This tug of war that you've identified spot on right now, very clearly the bears have been the winners on this one. Just to highlight some key data points, that if the team can bring up the last 6 months chart, there you go, for Nifty IT, you will very clearly, even if you eyeball it, if you see the highs for the last 6 months, there is a falling trendline resistance right now. Actually, incidentally, that happens to be at the 50-day moving average on the graph there. Nifty IT has seen a rebound in the last couple of sessions, but it's not been able to take out those key resistance levels on the upside. By the way, that level comes close to about 29,700, 600. Right? Guess the high for yesterday, 29,609. So the point being that this rebound has yet to see some kind of a meaningful move. Also, why did we see that rebound? One theory is that this could well be an expiry-led, rollover activity kind of a move. Go and check data for 23rd March and about 24th April. You will see that the Nifty IT had rebounded about 1,000 to 1,500 points during that time. Why are those dates important? Because that's the penultimate week to expiry. Typically what happens is during or just before the expiry is that a sector which is heavily short around expiry or just before comes in for a rollover and you see a short covering bounce. This time, because the fall was sharper, the rebound is also sharper. In fact, if you look at the sectoral contribution, just to drill home that rollover activity point, look at the sectoral contribution for yesterday or a sectoral heat map. The top 3 sectors, or at least 3 out of those 5 sectors have no business being there. IT, realty and consumer durables, right? we know these sectors have been heavily shorted. Just a case in point, look at Voltas. There is weakness, this is a prime shorting candidate, and this has practically given up all the gains that it had from that April rebound rally, right? So point is that you are seeing that rollover kind of activity and hence the rebound on that. Now, circling back to IT, until we see a follow-through move in the next 1 or 2 days, we close comfortably past above that 29,750 DMA on the Nifty IT. I think this could just be a rebound from the lower levels. As far as stocks go, the story is more or less the same for all of them. But one stock that very clearly stands out is OFSS. Look at the run on this one. Dips have also been bought into. So if you want to consider any kind of a buy, on dips, consider OFSS. You could also keep Persistent and Coforge on your radar. So unless some meaningful levels are taken out, this could perhaps be a rebound rally.
And Kush, what will be your technical picks?
Yeah, as far as stocks go, going with a mix of long and short. So Samvardhana Motherson, Torrent Power, these are the targets. These are the calls on the long side, and on the short side, you've got Hyundai. Now, as far as targets go, Samvardhana Motherson for targets of 135 and 139, stop loss at 128. Torrent Pharma for targets of 475, 46.85 and 43.50 being your stop loss, and Hyundai short call for targets of 1760, 1740, a stop loss at 1805.
I'm not surprised with the short call on an auto name. I'm not surprised with the long call on a pharma name. Those seem to be the pockets as well, which are doing well. At some point of time, I'm looking forward for a call on the chemical space from Kush Bohra, because like I said, I hear a lot of people wanting to buy into some of those chemical names. But let's talk about some of the results. And I think one of the names which I kind of spoke about as well in my 3 stocks was PI Industries. A weak fourth quarter, missing estimates, missing EBITDA estimates for the 7th time in the last 9 times. Varsha joins in with details on this one. Varsha, is it how big a recurring problem is it for PI Industries, or could it change tracks come quarter 1, quarter 2?
So, everything depends on the commentary of FY27, because management is expecting, recovery from H2 FY27. But they, in last con call, they did said that sequentially, sales will be improved, which we are seeing. But again, the EBITDA has been, the guidance has been missed when it comes to EBITDA. And overall, there was a miss of estimates by 15%. The performance impact was led by customer delivery schedules, so number 1. The revenue impact that you're seeing is because of weak exports and domestic softness, and the exports declined due to global agrochemical slowdown. And the key issues in domestic markets were, one is of course high inventory, which led to pricing pressure and lower crop acreage. And the weak volumes and realization was also seen in their CSM, which is one of the key molecules, which is pyroxsulfane, and the EBITDA margin was sharply down, which was below guidance of 25 to 27%. Now, talking about FY27, 5+ new molecules are planned to be launched. They're expecting a strong order book when it comes to overall segments, and the agrochemical recovery is expected with better demand and inventory normalization. Also, pharma is expected to have positive momentum with new partnerships, and better pipeline visibility is expected in next 2 to 3 years. And they are cautiously optimistic when it comes to H2 FY27, but expecting a better growth in FY27. But they've not given any guidance yet. We do have con call at 3 o'clock, where the key monitorables would be FY27 guidance and pyroxsulfane, revenues, and of course overall CSM growth, how the outlook would be.
Okay, thanks a lot for that, Varsha. Now, Parag bhai, good morning. And PI Industries, it will not have a good morning for sure. But what happens to some companies like this, wherein there are estimates and the company will say we didn't give those estimates, because the analyst's job to do that. But they are missing estimates 7 out of the last 9 times. This quarter has been weak as well. The talks of effectively want to wait for the con call in this case, because the con call could be different. But what do you do with something like PI?
So basically, first of all, I don't have it, fortunately. But
Parag bhai, we ask you about 500 stocks. If you had all 500, then it'll be a problem.
I'm just saying, see, in this kind of stocks, this is a high quality company per se, right? It did all good things. It had a huge export pipeline. So it did very well. But what happens with investors, they extrapolate that kind of performance. And that's why stock went up to 4,300, if I remember correctly. And now it is 3,100. 1100. And as you rightly said, they have missed the estimates, so stock will fall. But I would say that company remains good, DNA remains good, management remains good. It is only the problem that earnings, and every person, every company goes through cycles, right? That we have to accept. So right now it is going through a tough cycle. And valuations have also not become that attractive, I would say.
So if it dips today, it's not a stock that you would want to.
No. There are many other things. Yeah, many. For example, results also. Yesterday we saw Zydus Life and
Mankind. We are going to talk about that.
Yeah.
Yes. So allow us to come back to you on that. But so therefore, PI, it's a no, right?
Yeah.
Kush Bora, very quickly, any support levels for PI?
2975 to begin with. If that is broken, then you're looking at 2850 also.
Well, that's pretty much interesting, but there's another angle to it as well. The brokerage calls, they are turning bullish as well. And to decode that, we'll have Varsha joining us back with it. Varsha, a lot of bullish sentiment coming in from the brokerages for Zydus Life. What you're picking up?
Yeah, absolutely. Overall, if you see, the numbers were pretty good. Beat estimates, the US, which was expected to have a pressure but did good, and let's see what brokerages are saying. Of course, Macquarie has maintained outperform. Well, according to them, the Q4 was solid, all-round beat. They've also upbeat guidance. They believe that the new growth drivers should support upside, and hence they've raised FY28 EPS by 21%, while Jefferies have also maintained by the hike target price though to rupees 1200 from 1100 earlier. According to them, again, the quarter was the stronger quarter for company. US did better than expected. India remains steady, while international markets saw robust growth. FTF launches innovative portfolio and strong base is expected to support growth. So overall, yes, considering the numbers and the guidance beat, all the brokerages are bullish when it comes to this counter.
Okay, thank you, Varsha, for that. Brokerages bullish. In fact, the numbers, when the numbers came, the stock also did see a good intraday spike in yesterday's session. Parag bhai, yes, your view now, you were looking at a Zydus.
Yeah. So Zydus Life reported very good numbers. I would say US business, see, if you see Dr. Reddy's numbers, because of Revlimid going away, from numbers collapsed. In Zydus Life, we have not seen that. In fact, they have given very good guidance also based on their new launch pipeline in US. Single-digit growth on a very high base. And India business also done well. So I would say that, and it trades at a not very expensive valuations also, market cap of 1 lakh crores, and so PE multiple is also not that high. So I would agree with the broking houses that Zydus Life is and plus, most importantly, in a current geopolitical scenario where oil is up, where every day you are worried, the pharma stock, which gives good results, good guidance, and which has a good history, should do well if it is not very expensive. So Zydus Life and Mankind Pharma both have delivered good results.
Okay, to add to that, another perspective I have is when you're talking about pharma companies, everyone's eyes were in terms of how the US market actually pans out for pharma majors, and that was the key monitorable. And in comparison to that, a lot of the companies have done really well and gone ahead of what the street was estimating in terms of US market. So this could be a sector, and Rupee also comes in as a certain tailwind for pharma companies. Kush, if I have to come to talk to you about it, I know we've been speaking about IT, where Rupee is coming in as a support. Simultaneously, your pharma sector as where you are seeing support coming in with the Indian rupee. Are you seeing, any good picks coming in over there, where probably performance-wise, fundamentally, yes, Parag bhai mentioned Mankind, Parag bhai mentioned Zydus. What are charts indicating?
So just to complete the conversation from a technical standpoint also on Zydus, by the way, this is on the cusp of a breakout, 1050. That's the level that you have to watch for. If in today's opening, it does get that gap up and that is taken out, it'll take out an 19 month long consolidation resistance level. Now, the momentum's obviously strong. Even if it doesn't, by the way, because of the market situation, you should continue holding on to this. There is a good possibility that the stock could go on and hit about 1175 and 1350 kind of levels also positionally. So coming off from a long consolidation phase, the long-term trend, the primary trend for this one has been positive. Went into consolidation. You should hold on to Zydus. Stop loss, by the way, comes at 950. Also, to add to the list, two stocks that we've discussed on the channel as well and have done well in the recent past, Cenorus Pharma and Ajanta Pharma.
Right. So it's of course the mid-cap, small-cap space in the pharma space which has been doing really well. We saw good numbers also coming in. But to get in more little bit perspective on what's the chatter looking like from the dealing room, we are joined in by Soumit Sarkar. Soumit, what stocks are there on your radar?
Given that we are in the fag end of the earnings season, most of the chatter on the dealing room is related to stocks that are expected to come out with numbers. Couple of them on the F&O side, Colgate and Grasim. There are buy flows on the large HNI and PMS desk, and dealers are expecting strong Q4 numbers from both the counters. On the cash side, it's Pine Labs and Lenskart. For both of these, dealers are expecting strong set of Q4 numbers coming in going forward. For Patanjali, there are buy flows on DI desk. Delivery volumes are seen on the higher side, and dealers are also indicating that the selling pressure is largely over in this counter. And a paired trade that multiple dealing rooms are indicating their clients. It's on Radico Khaitan and United Spirits. They are recommending their clients to switch from Radico to United Spirits. They're asking their clients to sell Radico and buy United Spirits.
Thank you, Somit, for that. You know what's interesting over here is the pair trade that Somit was mentioning about Radico Khaitan and United Spirits. However, the charts are reversed, if I'm not mistaken. And I think I can take that with Kush. Kush, do you agree with that? Radico Khaitan and United Spirits, strength is more in terms of Radico versus a United Spirits.
Very well spotted, and I agree 100% on that. I am a firm believer of sticking with strength, right? Look at the last 6-7 weeks of movement on Radico, right? It had a brief profit booking round, but then the surge was quite rapid, and then it's holding and gaining some ground as well. So as long as that is there and it's not giving up gains, why do you want to really switch? So my suggestion, Radico definitely has strength. You should continue holding on to this if you have a position. 34.50, 34.25 thereabout should be your stop loss. United Spirits does have some sort of a pressure on the upside, so I wouldn't really jump into it right away.
So no major trade on United Spirit, but at least a hold when it comes to Radico Khaitan from Kosha. But of course, Hindalco is in focus. Its subsidiary Novelis reported Q4 loss after fires at its Oswego plant in the US. It did hurt the shipments and weighed on the profitability. But despite this, there's an underlying demand and surge in sales. So Somit is here with more details. Somit.
Well, for Novelis, if you look at the Q4 numbers, pretty much in line with what the street was expecting. Street was already expecting a weak set of numbers in the fourth quarter. Net sales were up just 4%. Adjusted EBITDA was down 3%. EBITDA per ton was up 10.1% on a sequential basis, on a YOY basis. And the company did report a net loss because of the fire. But the key thing to note from the Novelis number was the commentary that had come in. And the most important commentary by the management was that the Oswego plant, which was impacted by fire, is expected to restart ahead of schedule, and that was the most important commentary, and that is what the street will be focusing on when it comes to Novelis commentary. Apart from that, they also mentioned that they exited FY26 with over $200 million of cost savings, and they are now targeting cost savings of anywhere between 350 to 400 million by FY28. Now, brokerages continue to remain quite bullish based on the commentary that the management has given. HSBC has maintained the buy rating with a target price of 1310. They believe that the Oswego restart in the next few weeks is a clear positive and removes the big overhang on the share prices of the company. Apart from that, another positive commentary that was made by the management was the capital expenditure that they had announced a couple of weeks back that was delayed, but that won't get impacted because of inflation, and the capex target continues to remain same for this plant at around $5 billion US. And HSBC also mentions that they're expecting underlying earnings to improve in FY27. Similarly, Citi has maintained a neutral rating with a target price of 1,000 rupees. They're expecting the company free cash flow to turn positive in FY27 on the back of the factors that I just mentioned. And they're also seeing that cost savings that the company has achieved in FY26 is also better than what they were guiding in for. So overall, a positive commentary is what will be driving the share prices of Hindalco in trade today.
Well, thanks a lot for that, Somit. And Parag Bhai, in some sense, asset owners, it seems to be a decade of asset owners. I've now, in the last 4 or 6 quarters, I may be off, by the way, but in last 4 or 5 quarters, there have been more instances of Novelis surprising positively, either with an act or with the guidance that they give relative to the street. Does all of this place Hindalco in a favorable spot?
Yeah. So I have always said that what I have liked in commodity space is always Hindalco, JSW Steel. And look at the way they have communicated to the street. In spite of this Oswego fire, the adjusted EBITDA per ton was $544 for Novelis. Now Oswego is going to start early, within few weeks. Their Bay Minette plant is going to start by end of CY26. And now then deleveraging will also start from next year. So I would say that, and aluminum at $3,600. So everything going in for Hindalco. I think it should do very well in near term also. And so I would say that these companies are doing well and communicating very well. For example, JSW Steel, if you see, they are adding capacity at lowest capital cost per ton in the world, $500 to $550 per ton. And so their ROEs, incremental ROE is at 20%. And debt is also now getting reduced. So I would say that these companies have done phenomenally well, and they have now understood the capital discipline, those things also. So now they are unlikely to get trapped like in the previous cycles.
Okay, just to add to that, I think 12 times in terms of EBITDA and shipments is where Novelis has surprised on the upside in the last 15 to 20 quarters, Neeraj. So that's what I will have to add to that. So at least more than 50% of the times on the operational metrics is where Novelis is surprised on the upside, which is positive over there as well. But with Novelis, with the way copper, aluminium, all of them are moving, the metal cycle, we've seen that rally which has already continued over the last couple of months, I would say now. People are still expecting copper prices to appreciate from here on. Parag bhai, if you have to look at a Hind Copper, or if you have to then look at any of the steel companies as well, do you still see value at current valuations?
Yeah, the steel, JSW Steel has been my top pick, structural pick, and I would like to hold on. As I said, that the incremental ROE for new plants is 20%. And continuously they are adding capacities, and leverage is now very, very less, 54,000 crores, while this quarter EBITDA was 8,600 crores. So I would say that I see the EBITDA doubling over the next 4 to 5 years, and net debt not increasing to that extent. So that means market cap has to go up significantly.
Well, surprise. This is Parag Bhai talking positively about a stock which is not cheap. Usually he says that ये 60 times पे है, अगर EBITDA इतना भी grow कर गया तो क्या फायदा है? यहाँ पे he's talking the reverse.
See, first of all, this stock price has done very well compared to rest of the market, but still it trades at 11-12 times EBITDA only, and with safeguard duty.
Resource company, 12
it
times
is not even a resource company. It is a competitive manufacturing company, right? It does not have iron or coking coal. It actually processes steel in a most competitive way in the world.
Are you talking about JSW Steel right now?
Yeah.
Okay. Perfect.
So I would say that.
Sorry, I missed it.
So I'm saying that, and I love the capital discipline. I love this 26,000 crore debt reduction which they have done because of JFE's money coming in. And look at the way JFE had partnered with them in 2008. Now again they are ready to invest with them. POSCO is ready to invest with them in Orissa. So I think everything put together, and of course, see, bond yields are up. Today it might open lower, but I am saying that at every decline I am a buyer in that stock.
Okay, that's pretty interesting on that, a buy in every decline. But moving on, BL, this is also in discussion. It's in focus as mixed brokerage cues are coming in. Goldman Sachs flags a mild miss but says expectations were beaten, while UBS, on the other hand, stated that there was a strong FY26 execution which is already priced in. Varsha is here with more details.
Well, overall, steady quarter what BL has seen, and the order book position hits rupees 73,882 crore. Talking about brokerages, as you rightly said, let's start with Goldman Sachs. So what they're saying, they've maintained buy though with target price of 475. What they're saying is that this is a marginal miss on their estimates, but though ahead of street expectations. FY27 order inflow guidance, execution trajectory and margin sustainability remain key monitorables. Order book remain healthy, implying a strong book-to-bill ratio of around 2.7 times, and company met and surpassed most of its FY26 guidance metrics while marginally missing capex guidance. While UBS has maintained buy with target price of rupees 500, and what they're saying is that company has exceeded FY26 guidance with strong orders. Robust FY26 seems largely priced in, and hence valuations are now that attractive, but commentary on FY27 guidance and order pipeline remains key according to UBS.
Okay, so strong, commentary coming in as well, but the management call is going to be interesting with the way the earnings have panned out. The stock did correct slightly and then recovered. Any views in terms of the defense space, Kush, where you like anything? Because Astra Micro, again, a very strong set of numbers. The stock did see a good reaction in yesterday's session. All the other names have also been doing pretty well. Any picks coming in there?
So I think, after this correction, data patterns in MTAR are looking a little attractive, although my only submission here would be that both of them have ended at the low point of the day yesterday, so you might just want to be a little cautious. So as far as MTAR goes, there's support at about 6150, 6200 levels. If it does dip closer to those levels, that's something that you can consider. For a data patterns 3450, that's the level where there is support, so maybe closer to those levels you can consider. But I think a lot of these names have already run up quite a bit, so like I said, perhaps on declines is when you consider entering for a trade.
Interesting. Kush, I just have a follow-up question. Yesterday, there was a good basket buying happening in the capital market theme stocks. So, pull up the chart of Angel One, Motilal Oswal, even CDSL, and we could say Grow as well. So, is there any kind of a technical momentum building up here, or is it just a one-off?
Yeah, so not really very gung-ho about Angel One and Motilal's of the world, and I've maintained that for a while. BSE, I am practically always gung-ho, but it's run up just too much for now, and even for my comfort. So I would suggest a profit booking in BSE, perhaps closer to 3800, 3850, and the stock does give you dips every now and then to get into. So that's when you should consider. Like I said, I still like BSE from the pack, but closer to 38, 3850 levels is a buy. Angel One, Motilal, yes, they are attempting a breakout, but I think they'll face resistances at these levels or maybe just above, so that's something that you can avoid.
Okay, let's try and now focus on things which could be movers in the session today, and from amongst the stocks that the three of us highlighted, Sharad, Hiral and me, I'm trying to point out two names which could have a move. So we spoke at length about PI Industries and Zydus Life. I wonder if Mankind Pharma looks good from an investment perspective. So Parag bhai, the question to you first, and then I'll ask Chandan Taparia for a trade as well there. He's joining in. But Mankind Pharma results and the margin beat.
Yes, results were good. So I am also expecting a positive response from the market. And stock has also consolidated a lot now.
Okay.
So India business has done well. They have reduced their leverage. So everything is on right track. So I am impressed with the results of Mankind and Zydus Life both.
It does seem that pharmaceutical numbers this quarter have actually done very well. Parag bhai spoke about how the stock. Let's stick with Mankind Pharma and how Mankind Pharma has consolidated. Bring up the 1 year chart as I go to Chandan Taparia for a call on Mankind Pharma. Because that stock at 2500, look at it. This is what consolidation means. It's not gone anywhere for the last 12 months. Chandan Taparia, is it bottoming out? Good morning. We'll talk about the Nifty. We'll talk about specific stocks as well. We'll talk about Mankind Pharma right now. So I want to start with that. Good morning.
Good morning. Thanks for having me. So quite positive on this name. In fact, on the weekly chart, the stock has been making a high top, high bottom. We have seen a follow-up buying for second consecutive months after a declining behavior of last almost 17 to 18 months. So it seems that yes, positive price placement is taking the prices to higher level. So yes, the bullish bias as of now, 24.15 is support, looking for an upside move towards 26.50 to 2700 in Mankind, or even on positional basis, it can go beyond 3000 as well.
Okay. Well, Chandan, we'll get in your opening thoughts on the markets as well, because the markets are about to kickstart trade. We are very likely going to start off lower, 150 to 200 points lower on the Nifty. Don't be surprised if that is the number that we work with on open. The question only is that while maybe IT pulls back, maybe banks give way, are there some outperforming cohorts? I think that's the point. I mean, these rates will be all over the place, but keep an eye out for what Nifty, IT and some of the IT heavyweights are doing after 2 days of strength. Can there be a pullback? I think Kush Bohra believes so, but let's wait and watch. At least he believes that there is not a move of strength, if you will. So, 2 din ho gaya, bahut ho gaya types. But watch out for Mankind, Zydus Life, BEL, PI Industries, a lot of stocks which will be in focus today. Just very quickly pull them. BEL, the brokerages are constructive there. PI, well, this is
10%.
And on the other side, Mankind. So I think these rates will change.
But with this, look at a Z Entertainment in trade right now, at least in terms of pre-open, that's indicating a 20% downtake. Obviously, it will change.
Very weak set of numbers.
BPCL as well, V-Guard, Max Healthcare, ICICI, Lombard, all of this in pre-open are seeing some major weakness. Mankind, yes. See, Infosystems as well is indicating some bit of positivity on the back of earnings. Zen Technologies, Vijaya Diagnostics, KPR Mills, Zydus. So interesting names coming up there, but yes, Neeraj, I think it is going to be interesting because I think the range in terms of the quantum of downside that you would see today in terms of stocks versus the upside is going to be higher.
Yeah, most certainly, most certainly. In fact, let's talk about some of the other names as well. And Mahima is here with the list of those stocks. Mahima, what else aside of the names that we already spoken about?
Right, so Neeraj, on my list are some earnings that could react on the back of the Q4 numbers. On the positive side, BPCL, where overall operational numbers were slightly better than what the street was expecting. Of course, Q1 FY27 is something that we'll be watching out for on the back of crude price hikes for all of these oil marketing companies. But Q4 operationally looked better. Two companies where there was a turnaround quarter. One is Dredging Corp and the other one was Viyash Scientific. For C Info Systems, the overall business has improved on account of stronger execution. So this could also see some positive move. But on the flip side, you have Trident, where lower yarn and towel sales have impacted Q4 numbers. And there's PTC India, where margins was almost down 160 basis points. So these could see some pressure in trade today. So these are some of the names to keep in your mind on the back of Q4 earnings.
Okay, thanks for that. Thanks for that. So watch out for some of those names as well. I think the other factor is the currency, which has hit a record low, 96.88, now closer to 97. And of course, the big talking point for the last few days is the currency weakness. Jayesh Mehta, Vice Chairman and CEO of DSP Finance, arguably one of the most veteran voices on this subject, joins in right now on the show. Jayesh, great having you. Thanks so much for taking the time out. And it seems that every single day that the conflict continues, we are seeing a new low on the currency. Is that how the template would be, that until the conflict ends and crude prices come off, we continue to see pressure? Or could there be some bit of consolidation now that there's been so much of a depreciation?
So I think this crude has become a reason, right? And I think we need to address a larger problem. But yes, once we get some respite from West Asia war, there would be some, improvement there. But again, it could be temporary, because I think the bigger problem, which nobody's addressing, this become, crude has become the reason, and everybody is hoping that once the crude settles, the things would, do well on its own, right? But the reality is the kind of outflow we are seeing on the equity side, right? And I'm not talking only because of the war, but even before, say, till 27th February, right? We have huge outflow going in on the equity side, right? And both sides, right? And there is no immediate solution to that. One is, of course, selling in the market, and we will talk it at some other time, but there is a long theory there. But people do talk about valuation and AI and all that stuff. But apart from that, there has been also a lot of IPO outflows where the private equity money goes out, which is why your FDI shows. I think these are the two larger bearing, because if you really look at it, 110 crude, it's an annual impact of $60 billion, right? So that has some effect, but it cannot have this kind of effect. We have seen this earlier also, right? We had 120 at 14, 15, 16, right? But at that point of time, we didn't have this kind of equity outflows, and that's what is really, really concerning. And, your equity guys say also that it's because of currency they are getting its outflow. So it should be other way around, like they should be actually looking to invest at this level. But then there are some other reasons which is beyond me to understand.
Right. Good morning, Jayesh. Sharad here. Of course, we spoke about the reasons why the rupee is going for almost, you could say, a fall. Every day it's happening. But just one concern, is there any interventions at play here, or is there some other mechanism which can come in?
No, there will be, but when you have so much negative story going in, right, your intervention, yeah, you may put speed breaker, but that will kind of, get wasted in a way, because with so much of negative story going around, and right now with the West Asia war, we don't know when it is ending, right? And maybe today it's at 110, 111, maybe it goes to 120, we don't know. It can go to 100, we don't know. Nobody knows that, right? So from that perspective, and at the same time, you have continuous equity outflow going also, right? It's not only the crude situation which is hurting the rupee, it's also the equity outflow, which is actual outflow happening on a T+1 basis, right? So that's the concern, and I don't see how that stops till the West Asia war stops. So from that perspective, to use your ammunition at one go would not be very wise thing to do.
Okay. All right, I think we've lost his audio as well to some extent, but thank you, Jayesh, for the inputs that you've given us. I mean, the question over here is, where will this depreciation stop? I mean, we have Jayesh back. Jayesh, yes, continue with your point.
No. So we have the stock depreciated. It's basically the outflow, apart from the the crude outflow, which is excessive. But that's going to be $60 billion over a period of a year, right? If it continues at 110. But then you have this daily outflow of 2,500 crores, 3,000 crores, which is really, really hurting. And if you look at year to date, right, we almost have 2,75,000 crores, almost like $25 billion outflow, which has happened in first 5 months, less than 5 months. And that is definitely weighing on the rupee.
All right. Thanks a lot, Jayesh, for that. It's always a pleasure to have you. But on to our segment on the big brokerage call of the day. And Nomura has initiated a buy on Avalon Tech. Puneet is here with the details. Puneet, what are the key takeaways from this report?
Well, thank you for that. 3 key ones coming in. They feel that Avalon, as you rightly said, initiating with a buy target price of 1,722 rupees per share. And Nomura feels that, it's one of the bigger players in the global industrial EMS upcycle, given that they have manufacturing facilities in the US. They also feel that emerging sectors like AI as well as HVDC will, give strong growth for the company going forward, and being able to, commercially, operationalize and get well positioned to, get the structural demand is what they've highlighted. Management has guided for a 2x growth in revenue between FY26 and 29, and Nomura itself is projecting a 31% revenue CAGR between FY26 and 29, with margins improving to 10.8% as well, and leading to a 41% EPS growth. So those are some of the key numbers at a time where you're getting significance on the smaller EMS companies showing a 30% growth like Syrma as well as Avalon, and today is another such incidence where where Nomura has initiated coverage on Avalon today.
Interesting name though, and in that space wherein, while by the way, thanks for that, Puneet, of course, but interesting name simply because there are a few of these stocks which may be in that IT or IT related space but are charting their own course. So maybe Avalon is one, maybe IKS is one, maybe Sagility is one. I think the numbers for some of these also showed up.
The Q4 numbers are quite strong for these names.
Yeah, exactly, that's the point. So watch out for Avalon Tech. Now, Chandan Taparia, a word on Avalon Tech if you will. And of course, give us your call for the morning. How is it that you're approaching trade today if the indices start off the way they are pointing towards right now?
Yeah, so first I'll start with my trading ideas.
Sure.
I'll closely watching the counter like Vogue Pharma in the pharma space, which has bottomed out on the daily and the weekly chart. In fact, the measured trend is now slightly shifting upwards. If I look at the monthly scale, also completed almost 8 to 10 days of consolidation from the bottom near 1510. So now with higher support of 1550, it can head towards 1700 kind of level. So Vogue Pharma could be one name. Apart from that, positive on the few metal name, I believe selective metal counter could see the buying interest on decline. So can look at the stock like Tata Steel on the dips. However, we need to buy only on dip near 200 with support of 193 for target towards 210, 250.
Right, that's the view coming in. But interestingly, look at an important report is also coming in now. India weighs in almost a $1 billion aid for private electric buses, trucks, and India is of course considering these incentives. Almost you could say this is for the private sector adoption for the electric buses and trucks according to Bloomberg. Now largely they will be targeting the privately owned commercial vehicle fleet, and biggest share likely earmarked for intercity bus operators. Let's just pull out the charts for JBM Auto, Electra Green Tech, and even Ashok Leyland to see if any kind of a reaction is happening to these stocks. If you could just get these stocks in as well. And yes, no major reaction coming in. But Kush, if you had to see any technical setup for these stocks which I mentioned, anything looking good here?
Definitely pressure. There has been an attempt at rebound for something like an Electra, something like a JBM Auto as well, but they're giving away gains and fast. So I would be a little skeptical. Both these stocks, by the way, around the 200 moving average. Ola Electric just under, JBM Auto barely holding on to that level. So something that you should keep on your radar. JBM Auto. But is it an active trade? Not yet. Given the kind of downward pressure and the sharp profit booking that both of these names have seen, I would be a little skeptical on these. Ashok Leyland also, by the way, had a good run. Now the volumes on the downside are thinning. So maybe if it does hold on to 145, 144 support zones, you could see, an uptick on this one. But like I said, not an active trade till that price trend confirms so.
Okay, what else? So auto is not quite living up to the billing right now. Let's see. Because it may also be because the day is looking so dull, right? But let's see if the casualties of the day are turning out like that. So PI, are we actually seeing that bit of a downtick that the initial tick was showing, or is it slightly more measured? Well, still 6% lower, so not good. Keep in mind though, the con call may well impact the stock. Zydus Life on the other side, or Mankind Pharma on the other side are names that could actually be doing well. Zydus Life is doing well. Mankind actually flattish, but not bad really for Zydus Life as well. Parag Bhai spoke about him liking it, but 4-5% higher now. Parag Bhai, still value?
No, so basically, definitely I will not jump and buy it at 4-5% above last close, because yesterday also it was up by 2-3%. But I would look to buy on dips. Structurally the story has changed, because US business was likely to decline because of Revlimid going away for all generic pharma companies. But this company has said that they have increased their outlook. So I would say that things remain. And see, if you see on PE basis also, FY28 EPS is around 52. So it is not that expensive at 20 times.
Okay. Well, so that's Zydus Life. What else? I heard from amongst the ideas, Wockhardt Pharma is one of the names on the long side, and Hyundai is one of the names on the short side. I wonder what those stocks are doing. Should bring them up and see what's happening there too. And then watch out for BEL, watch out for some of the others where the brokerage names or the brokerage houses are looking a bit constructive. Okay, since the pre-open rates have settled, let's try and nail it down to that one top idea for the day today. So, Chandan Taparia, if I had to ask you for one top name for the day today, now that you know what the pre-open rates are suggesting, which one would that be?
Yeah, so already I discussed about Wock Pharma, and if you want one more, I'll focus on Mankind, quite positive. It can see the momentum, so can keep on radar. Even after the positive opening, use any small decline to buy. Support is at 24.35, looking for target of 26.20.
That's the important view coming in that. But Kush, anything looking good on the charts? Any technical picks?
I'll go with Torrent Pharma, something that we discussed just a while back. The structure is positive, mild consolidation, profit booking par for the course, but overall the primary, the secondary trend very much intact. Just to reiterate the targets, 4575, 4685, stop loss at 4350.
And Parag Bhai, speaking of consumption names also, Somit was mentioning about Pine Labs also. There's a good set of numbers are going to come in. Lenskart also. Any views on these?
So I like Lenskart. It is one of the new age technology companies, technology enabled companies. The business is what I like, the management I like. Let's see. But I would say that within this new age companies, this is one company which I like. It actually makes profit. If you add back depreciation, there is reasonable amount of cash profit which it generates. Good like for like sales. So I would say that I would go with Lenskart on this.
Yeah, well, one of the names wherein the PE investors of the earlier times also made money, and I think yes, the business model for now looks solid. Let's see what it does. But here's how the markets are starting off this morning. Quite a bit of red actually, 167 odd points, so not surprised there. The breadth looks slightly iffy too, 504 advances to 1233 declines. Mid cap starting off about 1% lower. Banks starting off lower. Small cap index should come up on your screen, I would reckon lower as well, 0.8%. So yesterday's bounce back being sold into, unfortunately for the broader end of the spectrum too. Now 3 out of the last 4 days there have been declines, so some chinks in the armor there as well. Let's pull up the heat map and see what's happening. Are IT stocks giving way, or are they still holding on? Well, maybe outperforming relative to some of the others, because look at that, Wipro as well as TCS are not quite falling as much. The only one in the green is Hindalco. This is quite a start to the trading day today, with Hindalco being the lone ranger in the green, but the quantum of reds, and I would guess Shriram Finance would be there.
No, surprise, not in the top 10. Okay, very interesting. But BEL starts off lower despite the positive commentary. Tata Steel about a couple of percentage points lower. Nestle, Eternal, there's some bit of selling that's happening consistently in Eternal. And some of the auto OEMs are starting off weaker as well today, with M&M and Maruti looking slightly wobbly. I don't think there are specific reasons for any of these things, but maybe the takeaway from on open is that IT is actually faring okay, and this is showing that it is trying to resist any kind of selling at higher levels because TCS has moved into the green, and the top 10-15 names have 2 or 3 IT names out there, which means the index is actually showing some resilience on day 3 of this up move.
Absolutely, Neeraj. I mean, that resilience is what is important here. And the interesting part is you have, pharma names also which are playing some bit of a catch up today because they were one of the, few of the stocks which were in that last leg of losers in terms of closing yesterday. Let's just quickly look at the sectoral heat map and then we'll look at the broader markets as well. In terms of individual sectors, there you go. Pharma is the only one which is pretty much on the borderline with healthcare. IT, marginally lower with 0.2% kind of cuts, but it's media which is under pressure, 2% downtick, and I'm sure it's the entertainment which is actually taking the media index lower. Real estate, again, the cuts that are coming in there are equivalent to the kind of gains that we saw in terms of yesterday's session. Nifty Realty was the top gaining sector yesterday, today down 1.8%. Auto, PSU, banks are also playing spoil sport after the kind of uptick that we saw yesterday. Apart from that, if you see in terms of other sectors, mainly it's the consumption, banking, defense, auto, real estate space that you're looking at right now. Let's quickly look at broader markets as well. If you have to look at the mid cap and the small cap indices, because that's the space where there was resilience in yesterday's session. Today, they've also given up gains to some extent. Your mid-cap 150 is down 0.8%, and similar kind of cuts is what you're seeing in terms of small-cap 250. If you see in terms of the WIX and the advanced decline ratio, the advanced decline ratio is actually flipped versus what we saw yesterday. Almost 1,800 declines versus 450 advances, and your WIX has again spiked today by what, 2.5%. We've again gone back to levels of around 19.14. So clearly, I mean, there is that tug of war which has continued. Let's quickly look at individual stocks. On the back of earnings, you have BPCL, which is in focus today. Operational numbers have been better than estimates, but the stock is under pressure. Prince Pipes, Karnataka Bank, both reacting to a good set of numbers. Hindalco is another one that you're tracking as well, which has posted its set of numbers. Apart from that, if you look at other names, Anthem Biosciences, Godavari Power, a few of the other names. Hudson Agro, marginal gains of around 0.8% coming in on the back of earnings. Godavari Power, Mankind Pharma, Viyash Scientific, no rates, but a good set of numbers that have come in. And just to be noted, Viyash Scientific is actually Sequent Scientific, which has got renamed after the consolidation and merger. See Infosystems as well in the positive. CRM, again, seeing cuts of around 4% on the back of an earnings impact. PTC is another one that you're looking at, along with Z Entertainment, Trident, all of them trading under pressure. PTC India is the one, 6.5% is the kind of cuts that you're seeing. Apart from earnings, ITC and ITC Hotels, both of them in focus on the back of acquisition, both of them trading under pressure. Godfrey Phillip is another one where they've got 100 crore, in terms of a refund. That stock is down 2%. Sun Pharma, Advance is another one that we were talking about. Sambhav Steel, again reacting to a news, 2% up move coming in on a Sambhav Steel. Apart from this, let's just quickly pull up the other names also that we have that are in focus. Naib, a 4% up move, and this is on the back of the testing that they've done. And Paradip Phosphates seeing cuts of around 2%. But and that opportunity that is coming in for the EV players. Electra Green, JBM Auto, Ashok Leyland, again not reacting positively to the news that we are seeing so far. So the entire auto pack, without any reason, you're seeing the pressure which is building up so far. Sharad, apart from these names, anything that you are pointing out where you're seeing some moves that are coming in?
Well, Hiral, looking at the numbers, Prince Pipes is something which I had mentioned earlier also in my stock. So the numbers are pretty strong. The stock is up almost 8% in the day's trade. And apart from this also, if you look at it, Karnataka Bank, that's also momentum is coming in a weaker market also. The company is outperforming, the stock is up almost 2.5% as well. Apart from this also, if you look at it, largely Sambhav Steel also is doing well in trade on back of new announcements coming in. But just from this list itself, I just have a question for Chandan. Prince Pipes, so that stock, is doing largely well, a cash market stock. Do you think that the important technical levels, especially on a positional basis, can show a further up move in this counter? Already Q3 and Q4 was strong.
Yes, that's a very interesting price setup, and we need to keep in mind that in this market there are very selective counter which are doing well in the mid cap, small cap, and forming the positive price pattern. In morning we discussed two names, whether the Vogue Pharma or Mankind, and both the stocks are doing well. And Prince Pipe is also one of that strong setup, which has given a consolidation breakout of almost 25 weeks. It surpassed a major hurdle of 280 and has been making higher top, higher bottom on lower time frame as well. So I believe this ongoing breakout momentum and the volume surge can take the prices high. Those who are the fan of the technical, they can also observe an inwards head and shoulder pattern on the weekly chart, which has the bullish implication. So one can buy, momentum could continue. 282 will be support, and this time it can head towards 305 to 312.
Okay. Well, 9% higher and counting. Kush Bora, I'm going to come to you with the one which got slammed today, and no prize for guessing that one. The point is it near support levels? PI Industries. If somebody had a position, would you average it or no, not really?
Yeah, not a big fan of averaging. I wouldn't average. In fact, I would look to exit this one. Look at the volumes. Of course, this is news based, but look at the kind of volumes on the downside. On this one, 2850, 2900. That's the support zone. It's trying to respect that, but it's given a breakdown after a long period of consolidation. So if you want to give yourself a hope, then 2800. That's the level. Keep a stop loss, and then perhaps there could be a rebound from those. But right now, I would suggest an exit on PI Industries.
Okay. Well, so even if you were long, Kush Bora is saying exit PI Industries. It's that big talking point of the morning, and that stock has really gotten slammed. We know that the likes of Zydus, etc. are doing okay. I wonder if some of the chemical names, Acutaas had a good start yesterday. Is that continuing to do well today? Zydus is, by the way, up 6.5%. Acutaas not so much. KPIT Tech, the last 2 or 3 days in this tech rally, has actually had a good bounce. I wonder if it's doing well today. Another 1.5%. So that's not doing too badly either. Decent showing here in this one too. But Parag Bhai, what within this broader market ecosystem the last 2 or 3 days in terms of results has stood out for you?
So as I said, Zydus Life and Mankind clearly stood out.
For the last 24 hours.
And this is the sector where everyone wants to buy also.
Pharma.
Just to get insulated from whatever is happening on the crude oil side and the bond yield side. So I would say that, so these are the two very interesting results which have come. I would say that, and the stocks are also reasonable in terms of valuations.
Okay, so that's Mankind, Zydus, 6.5%.
Of course, Hindalco's update was also very good.
Correct, 6.5% up move on Zydus Life. Z Entertainment, 4.5% down take. Advent Hotels. The charts have been very interesting with regards to Advent Hotels as well, if you have to look at the last couple of months, I would say, because very random moves is what you see on this counter. In fact, Chandan, let me take a question with you on Advent Hotels and Z Entertainment. Both showing weakness today. What is your view?
Yeah, so talking about Advent Hotel, so yes, here the range bound bias is clearly visible. So not expecting major move. In fact, on the monthly chart, it has been making lower top, lower bottom. In fact, just couple of months back, it came as a listing. As if I look at the data, failed to surpass the previous month hurdle of 175, 177, turned lower. So looks weak, can go to 140, 135. Talking about Z. Here also the structure is weak. Any meaningful bounce is being sold. Monthly setup is negative. We witnessed good recovery in the last month, but again, the momentum is just drifting lower, so avoid.
Yeah, and Z2 is cracked 83, at every single point of time from the journey of 250 odd and lower. I've heard calls talking about how cheap Z is as an asset, and how from this period, Z will actually see some buying, rumors of HNIs coming in and logging in on the stock. And look at that wealth destruction that has happened in Zee Entertainment. Is it a reasonably priced media asset? Yes. The problem is that the earnings delivery is really all over the place, and which is not what you want, especially in a mahal like this. So I'm not surprised that this is happening with Zee. Chandan, I heard you talk about a couple of pharma names today. For a trader who wants to bet on only one, should she or he choose Mankind? Should she or he choose Wockhardt Pharma or something else at the current prices?
So yes, Nikunj, I
Neeraj, you're missing Nikunj, but there's a Neeraj here.
Sorry, Neeraj, I selected both, right?
No, but
because
that's what I'm saying, Chandan. If somebody has to trade only one name, which one would you choose?
yeah, and sorry for this word, because
not at all. Nikunj is a dear friend.
Once the market opens, we are focused on the stocks. That how our viewers and the followers get the benefit of the same.
Yeah.
So try to understand the feeling and the emotions of the market. Positive on the whole Pharma, and looks quite interesting. In fact, looking for an aggressive target towards 1700 to 1750 looks good. And again, if you want to diversify, you can take both also. So have same kind of conviction in both Wock Pharma and Mankind. If you ask one, then I'll focus with Wock Pharma.
Okay, Wockhardt Pharma. So same conviction in both. By the way, look at that Wockhardt, interesting. The Mankind Pharma chart, interesting dip, and that is getting bought into as well. So, well, good going. But by Wockhardt, we haven't discussed that fundamentally, but every passing month brings it closer to the fructification of the Zenith promise.
Yes.
What do you think of this one?
So there is a price anchoring bias, right? I have seen it at a much lower price when this was actually a promise. Now it is getting delivered. So so I would stay away from it. But it is my own problem. It is not something to do with the stock.
Okay. You know, one stock I want to look at is a PTC India in terms of Q4 numbers as well. Profits have slumped, and this is in spite of that strong power demand. The stock is down nearly 8% in trade, because if you talk about the profitability downtick, 66 to 69% is what you're seeing. There is severe margin compression that has come in, and operational expenses have been pretty high this time around. Now, your summer heat wave, that has actually driven massive power demand, and that's what the street has been betting big on. But that's only pushed the company's revenues up by 30%, and this volume-led growth has actually failed to translate into bottom line gains, is what my read is over here. Your view, Parag, by anything on the PTC India, because power as a sector itself, people have been betting big on right now, but you're seeing what's happening to this one. I mean, 8% downtick on the stock.
So basically, I don't track this stock, but in my view, in power sector, definitely some of the stocks which are doing well, Adani Power or NTPC or JSW Energies of the world, and but I would not extrapolate too much into this, power demand increasing significantly because of the summer and all that. In my view, the power assets are regulated ROE assets like NTPCs of the world, and now most of the power stocks are into long-term PPAs, Adani Power, JSW Energy, all. So they'll have a regulated ROE business, so they'll have to be measured on price to book basis. Of course, the growth is one of the other factors where some of these companies are expanding very aggressively, so we'll have to look into it. But I would say that it's a sector to watch, but I think the stocks have overheated in my view.
Okay, well, all of you, thank you so much for taking the time out and being with us. Really appreciate your time and your insights, and great for some people to make money even in a market looking as skittish as it is this morning. So bear that in mind, that the tide is not in favor of the longs. We are also going to consider some short ideas, and you got one or two today. Okay, let's focus on, well, one of the companies in a sector which is, as Parag Thakkar said, looking like a space where everybody wants to log in, and that is healthcare. Now, Jupiter Life reported strong revenue growth in the fourth quarter. Margins and profitability though remain under pressure due to expansion-related costs. Before we speak to Ankit Thakkar, MD and CEO at Jupiter Life, my colleague Varsha joins in with more details of this. Varsha.
Well, yes, as you rightly said, revenue was strong, but yes, we did see impact on profit and EBITDA due to, the new hospital, that is Dombivli, which has impacted profitability due to initial losses. But expansion phase will lead to, near-term pressure, but long-term growth has been set up. Now, PAT impact was, of course, due to, labor code changes, depreciation and finance costs. Now, talking about the operating metrics, occupancy was at 61.2% versus 65% last year. and this lower occupancy is due to new hospital ramp up, and the borrowings have also increased to 500 crore from rupees 321 crore. This is due to expansion plans. Talking about the capex, lastly, they have a target to scale capacity to 2,900 beds, and aggressive expansion is underway across key cities. So key highlights, key question to management would of course be where they are seeing the ARPOB growth to be, and of course when the expansion that they are doing will see an impact on financials.
Okay, well, let's ask these questions to Dr. Ankit Thakkar, MD and CEO at Jupiter Life, Lifeline Hospitals. He joins in right now on the show. Ankit, thank you so much for taking the time out and being with us. This is Neeraj here. Good morning. Sum up how you expect how would you describe what the quarter of the year were like? Because it does seem that there has been growth, but because of the ongoing expansion, which is very welcome for the future, there could be alterations in the quarterly reportage continuing for the foreseeable future.
Hey, good morning, Neeraj. So this quarter has been quite eventful. We operationalized our Dombivli Hospital in February ahead of schedule. It was supposed to come in Q1 of this financial year. We were able to operationalize it a couple of months in advance. So that came in naturally. As a consequence of that, for the first couple of years, there is an EBITDA drag on account of any new hospital that comes up before it stabilizes and then starts contributing positively to the cash flows and bottom line. The other big thing which happened is that we acquired another land in Mumbai in BKC to set up a 400-bed hospital here. So these two big developments in the last quarter. Going forward, as you said, yes, next couple of years we'll see some drag on account of the new hospital, but that is just the nature of a greenfield expansion.
Okay. And for how, I mean, you are a growth company, and hence I'm trying to ask this to you. How do you take this decision of balancing out the growth, the need to do growth, and at the pace at which you do, versus the impact that it could have on let's say the operational metrics relative to the targets that you may have for FY27 and 28?
So we have 3 new projects underway as we speak. We are building a hospital in Pune South. That will be our second hospital in Pune. We are doing one in Mira Road, and then BKC is just announced. Growth is kind of something which you'll have to keep on doing. And essentially, the way we look at numbers internally is to look at unit-wise performance. And as long as the existing units are not contracting in revenues or bottom lines, I think we are doing well. A consolidated impact on account of new units does not bother us because it is the nature of growth, as I just said. On the consolidated level, what we do is make sure that there is enough cushion available in the cash flows to also fund the new capex and also absorb the shock of the new hospital. So that is the way we look at growth.
Okay, Dr. Thakkar, good morning. This is Hira on this side. You've previously guided for a 2-year break even for the Dombivli Hospital. Now, what is that specific occupancy or average revenue per occupied bed that you think will be required in FY27 to achieve that quarterly EBITDA break even as well? Because you said you are looking at it, at an individual level.
So we have the Dombivli Hospital is built for 500 beds. We have operationalized 200 for now. We think that once we cross the 50% occupancy mark, we should be able to be at the EBITDA break-even stage.
And in terms of the EBITDA growth, if I have to exclude the Dombivli Hospital, pretty strong at 24% is what we're seeing. Now, can we look at 23-24% as the floor for FY27 as well, or will the future, say, pre-operative expenses for the other pipeline hospitals that you have cause additional compression in FY27?
So I think the 3 existing hospitals are likely to perform at similar levels. We don't really see why the existing hospitals should suffer in terms of revenue or margins. Dombivli, of course, as I have said earlier, is likely to give you some drag. So I have not really modeled the numbers, but there should be some drag on account of Dombivli, which will impact the overall margin.
I think notes say that cash burn at Dombivli could be about 2 to 3 crores per month.
On an average for the year, yes.
Okay, so you haven't modeled it, but you believe this is what it could be, right?
From our past experience, this is what we have seen when we built new hospitals.
Okay. Now, so one thing that Ankit, one thing that we are trying to ask all companies in the space that you are in is one, that the long-term growth trajectory is very well known. It could the opinions differ from it being a 15% CAGR story for 10 years to 20% to even 25%. 25% is a bit of a stretch, I presume. But I would love to know, because you are in an expansion mode and a younger company relative to some of the others as well, what do you envisage your growth trajectory for the next 3 years, let's say, or the next 5 years to be like, compounded annual growth rate numbers, and could the margin trajectory, where you have surprised in this quarter as well positively, could it actually inch higher along with growth over the course of the next 3 years?
So I'm a doctor, I run the hospital, I'm not an analyst, so I don't spend a lot of time on modeling CAGR numbers.
Sure.
The way I think of growth is in terms of new hospitals coming up, new capacities coming up. So in the next 3 years, as you said, maybe 4, if not 3, all the 3 hospitals that we have now announced should be operational, and leading to pretty much doubling up of our installed bed base. Going forward, I think there is just so much wide space available to add new greenfield hospital as our installed and operating base expands from 3 hospitals to 6 or 7. I believe there should be much larger cash flow available to accelerate the growth journey.
Having said that, Ankit, because you are the MD CEO of the firm, I know of nobody else to ask this question, and hence I'm just trying to understand. You may not have modeled it entirely, but is there a rough estimate? You would have had internal conversations about what's the kind of growth that you guys are thinking of or wanting to achieve? Any sharings you can give us there?
Yeah, as I said, definitely we think of growth and we have to have those discussions, but we think of growth in terms of bed strength addition and not really percentage. I mean, we could do the math at some point, but that is just not the way we really are tuned to think. In terms of bed strength, I know for sure we should double up in the next 3-4 years. I can also say that we are not stopping at that point. At a suitable opportunity as it presents, we'll keep on doing what we are doing, that is build more hospitals, currently committed to the Western India region and committed to this model of greenfield flagship kind of 300 to 500 bed hospitals.
Okay, Dr. Thakkar, I have a question for you in terms of the BKC and Mira Road outlays as well. There would be some outflows that will be happening for both of this in FY27. Will this be met with internal accruals, or you will be taking on an additional debt? Current, if I'm not mistaken, is what, 500 odd crores. So will there be an additional debt burden, or is it internal accruals?
So currently the debt is offset by the cash on hand. So we are actually still cash positive. We have a cash balance of about 50 odd crore and a debt of 500 crore. So currently we are still net cash. But as these 3 hospitals do come up, all this cash should disappear and we should be left with this 500 odd crore of debt. As a board, what we have decided is that we should have a self-imposed ceiling of 3 times of EBITDA as the debt levels. And we believe that this much debt should take us over the line for this round of expansion.
And my side, I mean, this is my last question with regards to the stock split. I know this is something that will improve your retail liquidity as well, but is there any thought process with regards to where an intent to raise further equity capital over the medium term, because the kind of targets that you have is what, 3,000 bed scale? So is there any, intention on that front?
No, so as I said, the 3 hospitals that are already announced, internal accruals combined with debt at under 3 times of EBITDA should take us over the line. which means we don't foresee an immediate round of equity raise.
Okay, got it. Thank you so much, Dr. Thakkar, for joining in. Always a pleasure to speak to you. And this is the time where, you're seeing that entire hospital chain, which has, Neeraj, done the capex. Now it's all about execution in terms of getting everything up and running, and then in terms of getting or bearing the fruits of it. How quick that is going to be is the question, because all eyes have been on the hospital cycle since almost a year now, and now it's going to be with regards to where giving out the rewards to shareholders goes.
Yeah, but maybe they just want to expand at a strong pace simply because it seems that that's the, people want to grab a pie of the market growth, and therefore maybe margins
somewhere will be soft. Yeah. That could be, that's exactly what is seen, right? Your top line is growing, but because of that continued expansion that you're seeing, that is what is compressing their margins to some extent, and probably that will be the story for some time now till they come out of this expansion phase to some extent. But whether that will actually happen with hospitals or not is the question, because managements have been of the opinion that this space has been absolutely underpenetrated when it comes to the Indian markets. And that's the reason why there is much needed, even from a service perspective.
Yeah, well, let's see. Okay, so that's on hospitals. Let's now focus on some of the other names. And a bit of a drag today, not really on the markets, but in terms of the sentiment for shareholders, is Zee Entertainment. The stock is down and out 5.5%. Jasmeet joins in with what the numbers were like and what is it that brokerages are saying. Jasmeet.
Well, very good morning, Neeraj, and thank you for that. If you look at the overall performance in the Q4, we see a weak quarter coming in for the company, and even the brokerages have turned bearish on this particular counter with a reduced target price. If you look at something like an Axis Capital, this being on the better side, they have hiked the target price by 4 rupees to rupees 80 from earlier 76. Now, what they say is the overall revenue was missed on the estimates by nearly 4%, and the miss comes on the back of that ad revenue being down in this particular quarter. Well, to also make a note that the overall West Asian crisis has impacted the overall Q4 ad revenue, and which will be a key concern to watch out going ahead. Now, I also have Nuvama on this, which is maintained by, but they have cut the target price to rupees 112 from earlier 133. While they also make a note that the EBITDA has come below the estimates. Further, they also cut the FY27 and 28 EPS by nearly 18% each. Now, if you look at the other key brokers, I have ICICI, which have maintained the rating but maintained buy on this particular counter with unchanged target price of rupees 120. While they see that the new business, the ZFi, is a turnaround for the company, which has reached the break even. But apart from the ZFi, rest of the business is suffering, and which is down in this particular quarter, leading to the overall impact. Well, lastly, Motilal Oswal also, they maintain neutral rating with a target price of rupees 80. Well, they said that this will end for overall FY26 on the back of that March quarter. Now, given the overall West Asian crisis impacting the ad revenue, the management also comments that this might be the impact going ahead as well. So they also cut the target price for coming quarters as well on the same view of Middle East crisis.
Wow, okay, yeah, and fair points, Jasmeet, but just like we were talking about, it just seemed that for Zee Entertainment, I think the zing has completely gone out. I wonder what it takes to revive this asset and the sentiment around the stock price on Zee. Not saying that the asset itself is bad. What I meant by asset is the stock. And the stocks, the sentiment on the stock is just so woefully weak that, again, not necessarily at the March lows, but if you will, but still looking under pain in the session today. A lot of other stocks are, of course, looking under pain today as well. Okay, what else? There is a big policy push, likely, I'll use the term very carefully, could be in the works for India's EV transition. The government apparently is weighing a $1 billion incentive plan aimed at accelerating electrification of privately owned buses and trucks. No surprise, right, with what's happening around the world. Now, with the sharp focus on intercity operators is the key word here. Puneet Johnson with more details on this. Puneet, I don't think there's an official government of notification on this, but a fair number of agencies are talking about this, right?
Well, most certainly, and I think there is of course a big story coming in on a $1 billion incentive that could be announced, and this will be of course distributed over the lifetime of the bus duration as well. So that could be 10 to 12 years. But even a policy push initiative on those measures will be a very strong one, and this will be targeting their privately owned. So currently, out of the 100 buses that operate in India, 95% are now privately owned. So that segment has to be looked at very carefully. Currently, the EV bus market is largely, the fleet size of things is being looked at from the EV side. But this big share will be for intercity bus operations, and hence a big push for that side of the business as well. Now, there will be interest subvention at this point of time. That could be one of the key reasons considered, as well as some partial credit guarantee scheme also could be announced. So you will see a large push from banks, especially to finance this. And since it's coming from the top, from the government, banks will be okay to give a lot more funding to private vehicles and private companies as well to change up their fleet. Now, that is the other push that they're targeting. And finally, in terms of some of the key beneficiaries, right? Because we've spoken about the electric pure play bus makers like Olectra Greentech and JBM Auto, Switch Mobility, which is a subsidiary of Ashok Leyland, as well as Tata Motors. These will be some of the key beneficiaries, but this will be key for the private vehicles. We've also seen that state governments like Delhi have already given the mandate to schools, for example, of 30% of their bus fleet to be electrified by 2030. But all such measures are now gaining traction, and you could see that benefiting the companies that are already placed in that space right now.
Thanks for that, Puneet. Okay, we'll watch out for these as well. Now, the next conversation is about whether there is a turn in the offing for chemical names, and I mean, there's no reason to necessarily choose these two to compare, but I'm just trying to use profit pools and market caps to just make the point about what could happen ahead. Now, let's go to the first set of graphics. In March 2022, defense, the market cap of NSE defense index was about 1.7 lakh crores. Aggregated and aggregate revenue pool was about 72,000 crores, give or take. I mean, these are approximate numbers, but in or around there. And then you move on and fast forward to today, the revenue has gone up by 70%, not bad, to 1.2 lakh crores from 70,000 crores. The market cap though, profit pools are of course at 23,000 crores. The market cap of the defense names have moved up to 12 lakh crores. This is up 7x. So just see the PE multiple re-rating or EV EBITDA multiple re-rating or price to sales re-rating that has happened for the defense names. Now, I mean, you think of what therefore chemicals could do, and maybe we won't spend too much time on chemicals, but just remember that for chemicals, it's actually the opposite. Chemical and fertilizer is available at an aggregate market cap of 10 lakh crores currently, but the aggregate profit pool is much higher than what the defense names give currently as well. So keep that in mind. And peak profit pool in 2022 was 40,000 crores for chemicals, and the aggregate capex in the last 4 years is about 1.2 lakh crores. I've borrowed this from a couple of fund managers who've done this work as well, but these are aggregate approximate numbers. Keep that at the back of your mind. But what we should do effectively is look at this plate before we go on to the analysts we have, or the expert that we have on air. The divergence between the two sectors, profit growth, market cap, explosive versus flat and contained. Valuation is very rich for defense names versus what's there for chemical names. And the narrative is for a future growth story versus cyclical recovery story for chemicals. But the focus is this, of this conversation. And if we can just take the first plate back on the screen, which is about defense, and let's focus on that sector and try and understand whether defense is now starting to look a bit expensive, or is the future growth story accounting or compensating for that expensive nature of the index. Ankit Sonia from Mirae Asset Share Khan with us on the show. Ankit, thanks so much for joining in. And I would love to know, Ankit, when you think of defense as a sector now and look at the trajectory that the stocks have traveled through for the last 2, 3, 4 years, is it bordering on expensive, or is it bordering on expensive with reason?
So, with respect to, hi, good morning. Thanks for having me here. With respect to defense, the defense always have been in a way, the execution, there's slowdown, there's lower in the executions, but always it's a long-term growth story always. And with respect to the order books, if you see, all the order books are at the peak right now. And if you do see the revenue visibility, it goes off around like till 2032. So this is always going to be the situation around with respect to the valuations shall be little higher on the front, but longer term story, growth story remains intact.
Got it. Okay. So, Ankit, having said that, and you're right that in some sense they will always be expensive. Do you sense that? And I'm not saying it is. I'm just asking you for your opinion here. Do you sense that the levels now are at stratospheric levels, or they are still at levels wherein investments or fresh investments into a basket of defense names could actually yield good results because of execution?
So yes, we believe like a few players in and around. I believe we have a coverage on two the big players, which is BEL and HAL. Those will be a good set of investments out there. And recently, I believe Apollo Microsystems is also having a good set of numbers out there. We do not have coverage on that, but to be looked on to in terms of defense numbers.
Ankit, good morning. This is Hiral on this side. Now, help us understand, you mentioned about the kind of order books that all of these companies are sitting on. Realistically, if you have to look at the conversion, how much are you going to see in terms of FY27? Because 3 to 5 times is the kind of revenue size, if you have to look at the order books right now. And this is specifically the public sector undertakings.
Yeah, so we broadly expect I believe, 15% CAGR growth in the revenues, and we clearly know that this is a long-term story, and any sort of execution, only risk is the execution delays if there's anything. Suppose if it is Bharat Electronics, they've delivered broadly a good mixed, I mean to say, inline performance with what they have been guided. Broadly a little bit on the superseding front also. So if you see over a period of time, this will be there. I mean to say the CAGR of 15% around, and a bit of margins improvement with respect to BEL and HAL could be seen around. And then those could be a good bets to look in.
Okay. So in terms of FY27, if you have to look at execution, because that becomes the key, if you have to look at valuations and basis both of these matrix, give out your top picks in terms of what could lead. Would you really go with, the private sector defense players, public sector defense players, if you have to distinguish between the two, and if you have to add the shipbuilding side of it as a separate one?
So maybe I may not be able to give you a view out on the private players as such, because we do not have it in our coverage. So we have HAL and BEL, and we would be recommending both as an topics. BEL being giving a broader set of numbers with a basic CAGR growth of around 15%. HAL, the key monitorable will be the execution of the Tejas Mark 1 deliveries, which management is saying that they'll be ramping up from around in August or September. If that is clearly executable, then that stock is to be bet on.
Okay, so HAL, BEL, two stocks that Ankit is talking about. Thank you so much for joining in. It's always a pleasure to speak to you and get your views. But it's interesting to see how the shift is happening between the private and the PSU space as well, because the private players are now rapidly moving from component manufacturing in the defense space to, say, probably complex system integrators as well. So that's that shift we are seeing, and that's what is bearing fruits for the private players as well in this segment. But moving on to the real estate space, the sector is one of the top losers today, and yesterday was one of the top gainers as well. And Puravankara has reported a strong set of numbers. The stock, though, down 3.5%. There has been sharp growth in revenue and profitability. Let's understand from the management, but before we go there, let's get in Mahima to talk to us about what are the key highlights at the key talking points that one should be watching out for? Mahima, over to you.
Right, so Hirar, as you rightly mentioned, Q4 was a strong quarter for Puravankara. It, highest quarterly collections in the past 3 years is what they saw in Q4 FY26. Top line was largely aided by increase in handover of units, which increased to almost 1,300 versus that of 671 in Q4 FY25. Subcontractor costs, of course, did increase by around 39 points, but profitability has also increased significantly. Now, in terms of operational metrics, sales volume saw a growth of around 112% this quarter. Customer collections went up by 36%. Average realizations also saw a growth of 37%, and units sold also saw a growth of around 84%. So I think a large part of FY26 growth has come in from the last quarter. I think the key questions here would be to kind of understand as to what FY27 looks like, considering that there could be cost pressures going forward, and what is the pipeline and debt payment schedule looking like.
Okay, thank you, Mahima, for that. In fact, let's get in Mr. Malana Sasalu, CEO South Puravankara, CEO South from Puravankara joining in. Mr. Sasalu, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. If I'm looking at the numbers, highest quarterly sales is what the company has reported. Profit numbers also looking pretty strong. So Q4, exceptional. However, if I have to look at the full year, there has been little bit of, I wouldn't say a stretch, but there is a slim number coming in from a FY26 perspective, and the guidance that you have for FY27 seems to be very strong. Help us understand what actually was the pain point in FY26, which you're seeing go away with in FY27 for this kind of a number.
Thank you, Hiral. Thank you for having me. It's always a pleasure to speak to you. Yes, we had a fantastic quarter. We're very pleased with the outcome of the last quarter of the year. This was because of two fantastic launches that we had. One in Mumbai, Purva Estrella, and also in Bangalore, Purva Northern Star, Northern Lights. Two projects that we got launched, and we did extremely well. The things that went very well for us in the last year was the last quarter, as I said, and the things didn't go so well was the first two quarters, because that we had some launches problems because of some of the regulatory issues that were there in Bangalore, like the e-Khata, and also the Bangalore got into the divisioning of the formation of Greater Bangalore Authority, and so on and so forth. So finally, we got into the good mode in the last quarter, and that saw good numbers. And I think, in my opinion, that we ended the year very strongly with a growth of around 7,400 crore rupees of sales and a CAGR of around 40% compared to the previous year, and also around 4,260 crore rupees of collection and 3,850 crore rupees of revenues, showing that our execution overall was very strong. We handed over units, and we delivered a good EBITDA numbers as well at somewhere around 21 and 22%. And I'm really pleased with the quarter that what happened there. Coming to the FY27, where the positives that are going for us is that some of the projects that we couldn't launch in FY26, they're going to get launched in FY27. So we have given a guidance of around 11,200 crore rupees for the FY27. That is because we are launching projects for some 24,000 crores in both locations in South and the West. So, and that is the reason. And also, of course, we're quite cautious about what's happening in the larger context of economic scenario, because of the macroeconomic scenario and what's happening around the world. But given that, the resilience in market and the preparedness that what we have done for the next year, and I think we should be able to be there to get to those numbers.
So that's optimistic. FY27 sales guidance, 11,200 odd crores. That's a massive 51% growth that you're staring at. To achieve this number, what percentage of the outcome will rely on the 21 million square feet pipeline that you already have right now versus selling the existing inventory?
So basically, in an overall portfolio basis across the country, and we are somewhere around 54% of the sales are coming from the new launches, and the rest of the things are coming from the sustenance. In Bangalore, though, is around 62% is coming from the new launches and 38% coming from the sustenance. So I think we've reached a stage wherein the sustenance and the new launches are getting closer to each other. And our idea would be that probably in the next year, by the end of FY27, that we should be reaching somewhere around 70% coming from sustenance and 30% from new launches whenever we give guidance. And that would be our approach to business.
Mr. Sasadu, is there any possibility of a chink in the armor because of the lower economic growth and therefore the demand for the markets and the nature of the properties that you are in?
I'm quite optimistic about what is happening, what about the India growth story, and also the internal consumption that is still strong in India. And of course, what is not in our control, we couldn't control that. And whatever happening in Gulf and the fuel prices going up and the effects of that and how that will all pan out. And we're cautiously looking at it. We're studying that, and maybe in the next 2 to 3 months, things will unfold. And I hope and I'm optimistic that it will turn out to be for good for the world and for the country and for everybody. And the other side, when we're talking about the assets which are being launched, that if you look at what's happening in Mumbai for us, these are all not so easily, the alternatives are not available. These are all marquee projects that we are launching in Mumbai. And in coming to Bangalore, Bangalore has always been a end user driven market, and we are in that sweet spot of somewhere around 12,000 rupees to 15,000 rupees per square feet on saleable area, which is in highest demand. And also that what's happening in Bangalore, if you look at last 1 year, the commercial office space offtake is fantastic. And it is also continued in this year as well in the first quarter. So overall, that it should give me that kind of positive mindset at this stage, that things will be good even next year as well.
Oh, got it. Okay. Would you need to do any kind of fundraising over the course of the next 12 months for executing or inorganic moves or otherwise?
See, there are the 3 types of fundraising that usually happen.
I meant equity fundraising, to be very honest. You can explain, but I'm just telling you where my nature of my question is coming from.
Perfect, and I will answer that question directly the way you asked me. Probably, thing is that I think we feel that there is a greater value to be unlocked as a company in the open markets. And so till such time that we see that we are priced fairly to be looking at any kind of equity raising in the market will not happen. And we are confident with the position that we are at this point of time. We are very happy with the growth that we are seeing. And unless that we see a fair value, the equity dilution is a little bit far off.
Mr. Sasalu, I will pick up from Neeraj's first question where he's talking about the economic impact or the downturn that we're seeing right now. Yeah, probably no impact on demand so far, but do you think that could have a bearing in terms of the pricing structures across? Because right now the realization cycle is probably a super cycle for all the developers, I would say. The average price realization, you've seen a growth of 37% on a year-on-year basis. How are you anticipating that aspect move in the next, say, 3 to 6 months or even 12 months?
And I believe that I think the growth that what we have seen, that we did not have any kind of price increase since 2014 to 2022, and that demand that price correction happened between 2022 to 2026, and I don't expect it to be going up consistently like this. And what I believe so is that the real estate will always beat the inflation numbers. So anything that above 6%, 7% per annum, we are very happy with that kind of a price increase. And I believe that's going to happen. So I'm not unduly worried about the pricing side of the product.
Okay, so not really worried about pricing. Probably then the strength will continue in spite of that economic downtick that everyone is looking at as well. But thank you so much for joining in. Always a pleasure to speak to you as well.
Thank you very much for having me.
Very quickly, we'll address the markets as well right now. There has been a mild recovery that we're seeing from the way we opened up. Somewhere near, 0.5% downtick is what you're seeing, but we've reclaimed that 23,500 mark on Nifty 50. Let's pull up Bank Nifty as well, and then we'll quickly look at the broader markets. Bank Nifty again, I mean, not as strong as what it's in terms of Nifty 50, so the setup is seeming to be as weak for the Bank Nifty components as well. And in terms of broader markets, you're seeing the mid-cap 150 also near the highs, along with the small cap 250, but all still trading in the red. So interesting day of trade, but we'll quickly slip into a short break. On the other side, we will have Harsha Upadhyay of Kotak Mahindra AMC who will be joining us to talk to us about the markets, and Neeraj will be setting this up for us in terms of what could one really expect. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Back with India Market Open right here on NDTV Profit. Pull up the markets for you. We had seen a bit of a recovery from those lows of the day. Again, kind of giving way, but not as bad. Now, this bit of a template here is that the market is not liking too many highs, getting sold off, yes, but well, even the lows are getting bought into. Now, one of the beliefs, by the way, viewers, and that's going to be our opening question to Harsha Upadhyay. He joins us on the show. But one of the beliefs is that if bond yields are higher across the world, is that a call for action, for peace to come in? Now look at this. Treasury yields, 10-year yields this year thus far. This is data that I borrowed from my colleague Sharad. And YTD, US up about 49 basis points, Japan 73. And Japan is a big one, by the way, but India too. About 52 basis points, if I'm not wrong. South Korea, UK too have had bounces 80 and 65 basis points respectively. And typically in periods like this, while we expect for some call to action for resolving and bringing the yields lower, it's in the US interest to do that. Portfolios need to be aligned accordingly as well, because you're possibly looking at higher interest rates, maybe lower liquidity, so on and so forth. Let's ask Harsha Upadhyay what he would do in a scenario like this. He's CIO at Kotak Mahindra AMC. Harsha, great having you as always, and just the perfect day to have you, because while a conversation about a month and a half ago would have centered around the conflict and higher crude prices, now it also has the added dimension of higher yields across the world and possibly higher rates coming in as well. Would you believe that will be the base case now? And if so, how should portfolios align themselves?
Good morning, Neeraj. Yes, clearly, I think the disruption has gone on longer than most people anticipated. So to that extent, I think now we are seeing ill effects of the transportation crisis that is leading to higher energy prices, which is once again leading to higher inflation and higher yields across the board, across the globe. Right. So to that extent, yes, usually whenever yields have moved up in such a sharp fashion, we have seen some action from the policymakers, from the government. So that's where I think there is a section of the market which believes that maybe this will force some of the decision makers to kind of resolve the current conflict. However, one needs to keep an eye on the yields that have moved up so sharply in the recent times. And of course, if it continues to rise, then of course, that's a negative indicator for the markets. And of course, in a crisis, it's very difficult to say that which valuation level is the right level to invest without fear, etc. However, we have also seen that whenever you invest in a crisis and you hold it for the reasonable amount of time, let's say medium to long term, you end up making money after the crisis. So the long-term investors need to believe in that and continue to make those disciplined investments. But if you are a trader, of course, this is a market which is full of news and you can get whipsawed very quickly.
Most certainly. But Harsha, do portfolios need to align? Okay, the backdrop to my question is that because it is becoming difficult to predict when will the conflict end, you invest with the status quo in mind, right? Because you can't quite predict that conflict will end in 1 month's time, and therefore let's align portfolios that way. So therefore, do you align portfolios or the construction of the portfolio with what is currently present at hand, which is higher crude prices and higher yields? Or do you construct a portfolio with a belief and a hypothesis that at some point of time this will change in the next 2-3 months, and therefore construct the portfolio accordingly?
Clearly, this is not going to go on forever, that's for sure. So to that extent, you need to be positive. But again, it's anybody's guess whether it's going to take a few more weeks, a few more months, nobody knows. So to that extent, it's better to keep the portfolio diversified, not take too aggressive risks, because the moment you take aggressive risks, then timing becomes really a critical point in terms of how that portfolio is going to work. So it's our belief is to keep it diversified as far as possible. And as clarity emerges, then you may pay a price for a slightly higher clarity, but you will still be able to take some of those aggressive positions. So our philosophy has been to remain more or less fully invested and keep it diversified across sectors.
Okay. Harsha, good morning. This is Hiral on this side. You know, when you're talking about treasury yields also, which are inching higher, yes, there is downward pressure, you know, on your capital intensive, rate sensitive sectors to some extent. However, a relative boost that could probably come into your export-oriented or defensive sectors. In that kind of a scenario, is there a churn that you're looking at as well that could be happening?
That currency depreciation positively impacts exporters and they will gain out of this. But we also need to keep in mind that the entire geopolitical situation has changed, not just because of the war, but even earlier, as tariff discussions were happening around the world. So it's not going to be simply a question of how competitive your currency is. There are various other factors that are also going to play on the exporting front. However, yes, all else being equal, currency depreciation help some of these companies. And of course, since geopolitical conflict in one way or the other has been continuing across the globe, the defense exports, whatever one could do, can also get a boost. Yes, these are sectors which will positively get impacted. But again, as I said, it's very difficult to take very aggressive calls on these sectors as well at this point of time.
Okay. And the other question I have is, everyone has been talking about Q4 numbers, the way they've panned out and what it would look like, at least in the first half of FY27. Corporate earnings, again, probably there could be pressure when it comes to margins, even in the first half of FY27 because of the supply chain constraints that the companies and industries have been facing. So according to you, which underlying sectors have the highest earnings upgrade potential to drive the potential cyclical rebound that could come in as well in the near future?
See, I don't think investors are looking at short-term earnings trajectory at all. Of course, Q4 until now has gone on more or less as predicted. If you look at Nifty basket and the results that have come out until now, the average earnings growth for the quarter on a year-on-year basis would be about 7.5-8%, which is broadly in line with expectations. We have not seen much of disruption caused by the current conflict on the earnings front in Q4 at least. However, there will be a set of companies which will get impacted in Q1 and maybe even in Q2 if this extends for a longer period of time. However, assuming that the crisis ends, I don't think investors will be too keen to know which are the sectors which will do reasonably better in Q1 and hence let's go on position there, or which are the sectors which are likely to disappoint and should be reduce holdings, etc. I think the focus will be more on post the crisis, what's going to happen and how the rest of financial year 27 or financial year 28 will pan out will be the questions to answer. From that perspective, we do believe that overall earnings growth, while it may get impacted in Q1 and maybe a little bit in Q2 as well, and different sectors will have different kind of impacts. Overall, we still be in the double-digit zone for financial year 27, assuming that in the short term we are going to see a resolution. And financial year 28 again will be sequentially better than financial year 27. With that in mind, I think one can still go ahead and look for medium-term wealth creation in the market.
Okay. Ashab, we were just trying to look at sectors which have gotten beaten down for the last few quarters/years, and is there a cyclical uptick possible in some? It did seem from conversations and some profit pool numbers that chemicals might be in that bucket. The commentary from a clutch of those names that have come out with Q4 numbers as well have pointed to continued gains, which probably points towards not just inventory-led moves, but even otherwise. Are you constructive this set of stocks or no? Why or why not?
Of course, Neeraj. Chemicals is one of the spaces where we have been holding overweight position in our portfolio. Maybe for the last few quarters, it has not panned out the way everyone expected. There was a bit of pricing pressure. There was inventory destocking that happened and various other issues which really didn't help the sector. But now we seem to be seeing a clear recovery in terms of the overall demand supply situation, and also the anti-involution that China has been talking about will lead to some amount of inefficient capacities going out in certain chemical streams, which means that the excess supply that you see from time to time from those pockets will also get reduced. Demand has continued to be reasonable. The inventory destocking is behind us. So we should be looking at higher demand supported by higher pricing and higher margins. But of course, just like many other sectors, this sector is also impacted because of the geopolitical issues. So to that extent, you need to build that as well in your thesis. However, if you are looking at next 2 years, this is a segment which will probably grow at a higher pace as compared to the average market earnings growth. So to that extent, yes, having overweight stance on this sector should help.
Okay. So that's with regards to where chemicals is concerned. Harsha, if I have to look at it between large caps and broader markets, valuations much cheaper as compared, if you have to look at large caps versus your broader markets are still on the steeper side. If you have to look at a change of direction that's happening, at what valuation do you think that Kotak Mahindra AMC will start getting aggressive in terms of the broader basket?
We are clearly favoring mid caps along with large caps at this point of time, which was not the case maybe a couple of quarters back. We were not so comfortable on anything apart from large caps at that point of time. But now, as we look at it, even mid cap valuations have come more or less near 10-year averages. So, to that extent, any portfolio having any combination of large caps and mid caps should be a decent portfolio at this point of time. Of course, large caps are trading at a better valuation as compared to mid caps, compared to their own history, as well as on a relative basis. However, the expected earnings growth, assuming the crisis ends shortly, we should see higher earnings growth for mid caps as against large caps. So to that extent, maybe a slight premium on mid cap portfolio or mid cap stocks is a reasonable valuation zone, I would say. So yes, clearly the current consolidation or a little bit of downtick that we have seen in the markets over the last couple of months has opened up more opportunities in the mid cap segment. And large caps, anyways, we have been positive. So the overall universe has definitely has got enhanced in the recent times, I would say.
Harsha, leave me with where is it that you are the most overweight on currently? Okay, let me rephrase my question. If you closed an NFO today, which is let's say a multi-cap NFO, and therefore you have the flexibility of investing across market caps, and if you had to create the portfolio afresh in that scheme, where is it that Harsha Upadhyay would put the biggest overweight at the broader end of the spectrum?
Probably in that regard, we will still keep small caps at close to the lower limit of about 25%.
Okay.
And the mid caps probably slightly higher than large caps at this point of time in the rest of the portfolio.
Okay. And sectorally?
Sectorally, we would still be very diversified. We think that the banking and financials being one of the largest weights in the index has to move if market has to move. And also, some of the negatives that have really pulled down the sector in the past may not remain so going forward. For example, last year, we did see 125 basis points of interest rate cuts, which impacted net interest margins for most of the banks. That's unlikely to continue. The credit growth, which was quite weak, has started to go up. And with the expectations of a slight higher inflation, the nominal GDP should also be higher than what we expect. So overall credit growth should inch up. And it's already in the band of, let's say, 15-16% at the system level. So both growth and margins should be fine for banks. And if crisis ends soon, I don't think that will lead to any asset quality issues as well. So that's one of the segments. Apart from that, we discussed about chemicals where we have been overweight. We are also positive on some of the sectors which are not at all impacted by the war or the blockade that has continued. For example, telecom, power, etc., or the segments which are not really impacted by any of this. So I think there are quite a bit of sectors that you can really choose and place your bets on a diversified basis at this point of time.
So interesting sectors that Harsha is mentioning. Thank you so much for joining in. Always a pleasure to speak to you and get your insights as well. So that's Harsha Upadhyay, CIO, Kotak Mahindra AMC, joining in as well. But moving on, let's quickly just look at markets right now, what's happening. If we can just get the Nifty 50 intraday chart, and then we'll look at the contributors as well in terms of today's session. It has slightly again cooled off from the day's highs, but pretty much, a flattened line is what you're seeing in the last couple of minutes. HDFC Bank, ICICI Bank. So again, it's the private banking space, which is putting pressure. BEL, which is interestingly adding that pressure as well. But categorically, Hindalco, Bajaj Auto, ONGC are on the positive side as we speak. But moving from here on, Bharti Airtel. Now that stock has been in focus. In fact, this week itself, that stock actually became the second most largest in terms of market cap. And that was the interesting one to watch out for. And now they're looking at, looking at a high value postpaid subscriber base and looking at improving their customer stickiness as well. For this, they've actually launched a priority postpaid service that promises a faster, more reliable and consistent network experience for users. What does this really mean for the industry overall? Somit joins us with all the details. Somit, over to you.
Right. So what Airtel here has done here is that they have launched the priority service for its postpaid customers. Now, what does this mean? It means that there would be a separate network available for specific user segment. And how does Airtel plan to do this? Because of the standalone 5G technology, this empowers mobile operators with advanced feature like network slicing. And because of this network slicing technology, operators will be able to dedicate a separate network to specific user segment. Now, how does this benefit a user or a customer? It will definitely lead to superior service quality in terms of better network and higher data speed when connected to standalone 5G. Now, why Airtel is doing this only for postpaid and not for prepaid? Because if it does for everyone, then again the network would be congested. So hence they are choosing to stay with postpaid, because postpaid customers yield higher ARPU and also exhibit a lower churn rate as compared to what we see when it comes to prepaid. Now, what would be the financial impact on Bharti Airtel because of this move? Now, if you see at these the plans that Airtel has introduced, they are similar to what the current postpaid plans are. But this could lead to more postpaid users shifting from other networks to Bharti Airtel to enjoy this kind of premium service. Also, it could lead to migration of higher prepaid users to postpaid users who want to access superior network quality. Now, just to give some perspective and numbers here, Airtel's postpaid plan starts at around 449 rupees plus GST, while the prepaid plan starts at just 249 rupees, which is inclusive of GST. So even if a prepaid user migrates to postpaid, then there could be an ARPU bump up. And if you look at the current ARPU for Bharti Airtel, that stands at just 257 rupees. So if more postpaid customers is something that Airtel gets, then their ARPU could significantly increase going forward organically. And this is without any tariff hike. What is the competitive positioning about this in the market? Vodafone does not have a standalone 5G network, so they cannot compete. Moreover, there is a risk for Vodafone given the fact that they also have higher postpaid customers on their network, and these postpaid customers could choose to switch to Bharti Airtel. When it comes to Reliance Jio, they have the largest standalone 5G network in India, but historically, their postpaid customer user base has always been on the lower side. And lastly, when it comes to regulatory risk, at this moment, analysts do not see any regulatory risk coming in from this superior network that Airtel chooses to operate. But earlier attempts of priority service were met with regulatory interventions regarding net neutrality. As of now, analysts are not expecting any kind of intervention, but it remains to be seen how TRI responses to such service such service that Airtel is looking to provide.
Okay. Somit, thanks for that. Important from the telecom perspective as well. The market's skittish, the bounce back also not quite living through, and don't blame the markets really. It's a big day from a global markets perspective because Nvidia numbers come out as well. So lots to unpack over the course of the day for Indian markets as well as global markets, with the yields being what they are. But for now, we need to call it a day on this leg of India Market Open at least. So from Hiral, me and the team that put this show together, thanks so much for joining in. But stay tuned because Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani. With me is Puneet Zaveri, and this is a show that gets all your stock-related queries answered. So start, sending us all your queries on the numbers that are flashing on your screen up there. But before we start doing that, also let's take a quick look as to how the markets are doing at the moment. Well, not a very good day for markets. Yesterday, per se, was slightly better as compared to how we've seen last week. But today, the Nifty 50 is trading around 0.3% lower at its day's high point, though there's recovery from the day's low point for sure. But we'll be watching out for as to how things pan out. And it's a narrow range of trade, 63 odd points is what we're seeing when it comes to Nifty 50. Let's try to pull the chart, the Nifty 50 heat map up and see as to what are the counters that are making it to the list in terms of both buzzers, both ends buzzers. You have BEL losing the most ground, 2.7% of a downtick on the back of its Q4 numbers. There's Tata Steel, which is also still under pressure, down 2.3 odd percent. Eternal yesterday did see a rally of around 2 odd percent, and today is seeing profit booking of around 1.4%. And I think that's the story with Eternal. One day it will see a run up, and then it will see profit booking.
So the rally isn't Eternal, is that what you're saying?
Yeah, probably. And there's JSW Steel, which is also seeing a downtick of around 1 odd percent. But on the flip side, you have Hindalco, which is up almost 3.26%. We saw Novelis numbers coming out. Bajaj Auto also up 1 odd percent. You have ONGC also gaining by about 1%. Reliance seeing an uptick of around just 0.6 odd percent. Let's try to pull up the sectoral heat map and see as to what sectors are doing right now. In the morning, you had the entire screen in red. At least Pharma seeing some bit of a leeway, but Pharma now has gained around 0.5% as we speak, followed by Nifty Energy, which is up 0.4%. But media continues to be the top laggard, down 2.1%, followed by Realty, which has seen profit booking in the last couple of days, down 0.9%. FMCG also down by about 0.8 odd percent, and Bank also down by about 0.6 odd percent. Bank, I mean, let's try to pull up the Nifty Bank because it's ranging in that 53,000 levels as we speak. So we'll have to watch out for as to how that fares as well, because it's a range of around 350 odd points today. So that's with regards to where the banks go, and the advanced decline ratio, because that gives us a picture as to what's happening in the broader end of spectrum, because largely the moves are driven by earnings or news flows, and you still have it in the favors of the bears as we speak, but the gap at least has narrowed, right, between the advance and the decline ratio. You have around 1600 odd declines versus that of 980 odd advances. So I mean, even the broad end of spectrum is not very lucrative today.
Yeah, most certainly. I think it's been a day of recovery in that sense, because I think at the start also just one nifty stock, which was Hindalco, was in the green, now getting to the 19 to 20 mark. So hopefully that recovery mode essentially continues at this point of time, but the mid cap and the small cap also reflect that, and that's visible on the screen as well. So Mahima spoke about the advance decline ratio. Let's look at the mid cap 150, starting to see some recovery from the lower end, but still in the red, and the small cap 250 also at this point of time, where it's continuing to see that momentum in the red, very similar to the mid cap. But the individual names though, and we've been talking about it since the morning, that these individual names continue to dominate the market. So the BSE 500 also, while showing some strength today in certain key names, PCBL, Zydus, Life, Balaji Amines are some of them. Prince Pipe on results also. There are subsequent losers also reflecting that in PI Industries, Z Entertainment, IFB, as well as what we are seeing on Hindustan Copper and JK Paper as well. But that is the picture of the markets today as well. Let's start answering your stock related queries as well now. And let me welcome in our guest for today, Vaishali Parekh, Vice President Technical Research at PL Capital, and Gaurang Shah, Senior Vice President at Georgette Investment. Both of you, thanks so much for joining in. Let me go across, start taking the first stock related query for now. And this one's coming in on Zydus Life. Our viewer Pavitra is holding 85 shares at the 1014 and asking what she should do with this counter now. So she must have bought it very recently or has been holding in for a while. Asking if she should hold on or book profits. Gaurang, a very good morning to you. Thanks so much for joining in. I don't know if you have this stock under coverage, but really strong results yesterday and that momentum continuing as well today. What's your outlook on the stock if you cover it, and if not, anything in the space that you like right now?
Thank you so much, Puneet, for having me on your show this morning. Good morning to all the viewers of NDTV Profit, to Vaishali, to you, and to Mahima and to the entire team. A small disclosure that all recommendations that I'll be sharing with you this morning on your show, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Georgette, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So I think in the current events which are unfolding with respect to the Middle East geopolitical tension and to and fro flyby by President Trump and Iran in terms of peaceful resolution being documented, signed, seen, and delivered. There are a couple of sectors which hold out, Puneet, and IT and Pharma are the ones. This also is in the sweet spotlight because of the weak rupee against the dollar, because these two sectors have a tailwind positive whenever this situation erupts. As far as Zydus Life is concerned, well, if you have time by your side, and of course the numbers were slightly better than what we had estimated for Zydus Life. If you have time by your side, I don't think you should be any kind of hurry to exit the investment. Hold on for long term.
Okay, all right. So that's the view coming in on Zydus Life Sciences. In fact, the company also went ahead and announced a buyback, and we saw an uptick in the counter today. Today also it's gaining by about 5%. But moving on to the next one, which is coming in from Charan, who is writing us from Bengaluru, asking about Jyoti Structures. Now, comparatively, this is a small company with a market cap of around 1400 odd crores. Vaishali, he is holding 340 shares at the levels of 32 and wants a view on the charts from a slightly long-term perspective. Any view that you can give?
Hi, very good morning, Mahima, Puneet, and Gaurang. So, starting with Jyoti Structures, I think the stock is currently taking support at around 12 levels. I think continue holding because this stock has seen good active and it is just showing signs of bounce back. So, I would say on a broad base, 10 should act as a support. And if this about 14 rupees, this can go for a further upward going towards 18 and 20 and so on. So as risk ratio is favorable, 10 be the stop loss.
Got that view, Vaishali, and welcome to the show as well. The next question coming in, and it's a disputed one on IT. Coforge is the one that Birandeep is asking on. He's holding shares at 1230 and asking if he should book profits now or wait, wait for some more time at this point of time with this counter. Gaurang, yesterday was a day of recovery in IT, but what's your view post, the earnings season? Do you feel that there are selective names that you could get bullish on, and what's your view on Coforge as well?
Well, so Puneet, I think a couple of stocks from the midcap IT universe were in the spotlight for all the good reasons. Coforge was one of them. Yesterday we saw 6% uptick with names like Tata Tech. And like we were discussing about Pharma, I mentioned about a tailwind positive for IT being Rupee lifetime low against the US dollar. 1600 plus is the target from a long-term point of view for Coforge. Puneet, and I would also like to make one disclosure that 5-10 years back or maybe more, the kind of run rate in terms of delivery on investment that IT used to give, that is in the rear view mirror now. That will not be, replicated again, given the challenges in terms of innovation, complex tools, and AI. Companies will have to reinvent themselves to keep up with the competition and the changes. Companies who don't will possibly fail and fade. Companies who can will shine and prosper. So as of now, continue Coforge. 1600 plus, review your position.
All right, so that's the view coming in on Coforge. The next one is also a long-term query, Gaurav. This is on Bajaj Housing Finance. Our viewer Balaji from Chennai is holding around 1200 stocks, bought at the levels of 108. Wants to know if we can continue to hold this for the next 5 years. What's your view?
So Mahima, we're positive on the sector. We like two names, LIC Housing Finance and Canfin Homes. And though, Bajaj Housing Finance, when the IPO came, Mahima, it came after almost a decade, correct me if I'm wrong, from the group, Bajaj Group. And the stock is currently languishing below its IPO price. Again, I stand to be corrected if I'm wrong. We don't cover Bajaj Housing Finance, but like I said, we are positive on the sector. LIC Housing Finance and Canfin Homes are the two names. One word of cautious immediately in the short to medium term because of rising inflation. The estimates or calculations or the mathematical approach that we did at the beginning of the year in terms of interest rate cuts, because of inflation moving up, I think we are in a pause right now, as mentioned by the Honorable RBI Governor last time in the credit policy. In case if inflation inch up, I think we'll have to revise our calculation in terms of higher interest rates. In that kind of a scenario, interest rate sensitive sectors and companies will be a little bit negative overhang from short to medium term.
Got that view, Gaurang. It's going back, to those lows that we saw at the end of March, roughly around 78, went down to 75 as well. But that's Gaurang's view on the space essentially of what's to look at as well. But next counter coming in on Bank of Maharashtra, and our viewer Ash from Patna actually is holding shares at 77.8. He's holding 5,000 shares for the short term. What would you recommend here, Vaishali, on the charts? Is there any view? I think we see.
Well, so chartically it is in a good.
Yeah, Vaishali, go ahead. I think there's some lag in your internet connection, but we'll give it a go.
Yes, so it is chartically, it is quite in a good uptrend, and continue holding because it is just a regular retracement. But however, keep a stop loss of 75 because in all likelihood, this can retest 85 and perhaps even higher, go towards 90, 95.
Okay, all right. So that's the view coming in on Bank of Maharashtra. The next one that we have is on Belrise Industries. Now, Sharath from Bengaluru says that he has around 755 watt shares at an average price of 171. Wants to know if he can go ahead and accumulate more at the current market price from a 2-year perspective. Gaurav, any view on this one?
So, Mahima, again, no specific comments, but we may have covered it when the IPO was there. And if we had covered it, we had given a, subscribed from a long-term point of view. I don't recollect it clearly, so I won't give any specific in terms of buy, sell and hold. I'm sorry about this.
Anything on the charts, Vaishali, that you like for Bellrise? Because you've seen a very stellar move since listing as well, and we're flashing that 132% from that issue price of 90. Anything on the charts for you?
Well, it looks very buoyant, and I think even currently it is just consolidating. So if one has to start buying, I would say wait for a little bit of a dip, perhaps up to 190, 200 levels, and that would be the level to get into the trade, because that can be a good fresh entry level, and look for a target of 250.
Got it. Well, 250. That's going to be a good target for Bellrise, and has been in a one-way move as visible on the charts, up 114% right now. But let's go across, take another caller from New Delhi, and Sanjay is joining in for a stock query. Sanjay, very good morning. Welcome to the show. What's your query?
Yeah, my query is regarding Ashiana Housing, which I bought it, say, about 2 years back on my anniversary in September 2024. Okay. 500 shares at the rate of 368 rupees, 65 rupees. It has come again after 2 years again at the same level. What should I do? Either I should exit or shall I wait for any such profits in it? It's almost exactly more than 2 years have been passed away.
Got it. That's a view and a pertinent one at this point of time. But Gaurang, I know you gave a view on the housing finance space and in terms of that question. But anything that you for Bajaj Housing, but anything that you have on Ashiana Housing by any chance, and if not, what's in coverage for you in that space?
Well, so I'll let Vaishali take this because we don't have a coverage. And like I mentioned, Puneet, amongst the housing finance companies, we are positive on LIC and Canfin Homes. To give this gentleman a word of pacification or comfort. So while your investment didn't do anything over the last 2 years, markets have also not done anything. So no complaints.
Got that view, and I know it doesn't help directly on that question, Sanjay, but hopefully you can see a little bit more in terms of the results when they come in Q4. Let's go across and take another query then, and this one. It's coming on Fujiyama Power. It's a recent listing, has done well for investors, and our viewer Rajesh has actually bought it at 287. And let's look at the 1 year chart also. Of course, it's not listed in the last year, but the long-term chart also. He's holding 50 shares. Gaurang, anything on coverage for the renewable energy or that space? And there you go, the 23% return for since listing for Fujiyama. But anything that you like, Gaurang, in that green energy space, renewable space, anything that you like in the solar module space? What's your topic?
So amongst these, on Fujiyama, no specific comments, Puneet, since we don't have coverage, but we like the sector, and Puneet, our view is that with the ongoing conflict, which has resulted into a little bit of more negative impact on our country because of our dependency, I think government is going to do a lot more in terms of renewable, clean and green power. Two names appear over there, Vari Energies and Suzlon. We're positive on these two, but other power generating companies have also gone into solar and wind. For example, Tata Power has stepped up quite well in terms of solar. They have made some deep inroads in terms of semi-urban and rural India getting a good market share. So we remain positive on these names.
All right, so that's the view coming in on the entire power space. But I think we've got Aruna who's calling us from Hyderabad. Aruna, very good morning to you. Go ahead, ask your question.
Hi, very good morning to all of you, ma'am. Thanks for taking my query. I'm having Angel One of 1,000 quantity at 280 average. So, yeah, what is the long-term and short-term view on this?
Okay, got your question, Aruna. And by the way, Aruna, we've been, getting viewers have been asking us and have been pointing out that you've been calling us from different numbers and using different names. So I suggest you don't do that. We generally take one query per viewer every day. So we'll request you to stick to that. We'll of course take your calls, but please stick to one query per day. That's a humble request. But I'll take up your query today with Vaishali. Vaishali, your view on Angel One. She's been holding 1,000 quantity at the levels of 280, I think she mentioned. What are the charts indicating?
Yeah, so as a disclaimer, we have been recommending this stock for a trading strategy. So yesterday only we have recommended 305. So now that she has bought from lower levels, keep trailing stop loss of 305 because this is on a verge of a breakout. About 330, if this sustains, this can go towards 340, 345. So this is the strategy for as far as the trading levels are concerned. So act accordingly.
Got that view, Vaishali. But the next question coming in from Ram from Chennai, and his question is interesting one on Barbecue Nation. Stock's not doing too well, but Gaurang, he's mentioning to us that he's been following he's been following you from the Ask BQ days, which is of course the previous avatar for us, and he feels that you look younger and younger. I think there's a lot that we would also agree on, but any view that you have on Barbecue Nation, if not on the space, anything that you like?
Well, thank you so much, Ram, for being a follower for such a long time. And yes, it has been a change of avatar, not only for the channel, but for myself as well, Puneet. Grays have been coming in, salt and peppers, the kind of thing right now. Having said that, amongst the QSR segment, one company which was one of the leading or maybe a primary establishment which came into QSR segment is Jubilant Foodworks. We had a coverage during IPO, if I'm not mistaken, many years back, Puneet. I don't recollect it very well, but currently we do have positive coverage on Jubilant Foodworks. The fact of the matter, Puneet, is that our 140 crore plus population, 35% is young, and they have got some tickling taste buds for the offerings that these QSR companies offer. Won't go specific into Barbecue Nation, but yeah, we like the sector. Jubilant Foodworks is the topic.
Okay, all right. So that's the view with regards to where the QSR space goes. But the next one is coming in on consumer durable space. Our viewer Jaideep from Mumbai is holding 4,500 shares of Electronics Mart, which he purchased on at the levels of 149, and he wants to know whether he should continue to hold or sell. What's the overall outlook for the entire consumer durable industry is what he's asking from a 1 to 2 year perspective. So, Gaurang, I'll stick with you for this one. Your view on Electronics Mart and the entire consumer durable space?
So, again, a relatively new name. Don't have much inputs on Electronics Mart, but I'll give a brief about the sector and the current challenges, Mahima, that the sector faces in terms of input and parts. And that's been very well elaborated by companies which are into consumer durable appliances. So we have positive coverage on Havells, we have positive coverage on Blue Star, Voltas, Symphony. We had a subscribe recommendation for LG Electronics when the IP was there just some time back. So there has been a price revision, Mahima, over the last couple of months, and the verbatim given by some of the consumer durable manufacturing companies' management is that they are going to go in for price hike because the cost of landed goods or raw material that goes into making a final product has gone up substantially, and scarce is the availability as well. So, we can expect a price hike in the next couple of months from these companies. Will depend upon how much each company is able to pass on and how much of it the company is going to take it as a sacrifice in terms of the profit margins. But we like the sector overall.
Okay, all right. So that's the view coming on consumer durable. In fact, Blue Star did speak to us very recently, and they've gone ahead and said that an 8% of price hikes is something that's already on the cards, plus a 5% going forward would be required considering how things pan out. So, you rightly mentioned, Gaurang, that price hikes will definitely be on cards for a lot of these consumer durable names. But moving on and taking a look at the F&O space, we have Sharad joining by to give us a perspective on what the F&O setup is looking like. Sharad, over to you.
Well, Mahima, it looks like it's the same exact copy of the last two trading sessions. We are still in a range-bound move, a little bit of consolidation, but yes, a negative sentiment is still weighing in, and of course, Reliance, a good recovery has come in. It's one of the top gainers in Sensex, Sun Pharma, L&T, M&M also, and a little bit of strength coming in from the IT stocks as well. But definitely, Eternal, Tata Steel and BL are under pressure. But yes, it's still in a narrow range, but there is still value buying happening in SMIDs, especially the Q4 number reactions are showing either sides a good momentum. But coming back to the F&O space, let's see what's there in the long build-up here. largely Zydus Life on back of earnings, and even Hindalco Novelis's numbers were very strong. And that's why we're seeing a good volume-based buying across both of these counters. Apart from this long build-up, let's also focus on the other stocks. That's the short build-up. PI Industries stock is down 6%. Remember, in the afternoon there's a con call also, so this counter will remain volatile. While for Ludha over here, we're seeing some kind of reversals there. Yesterday we saw realty stocks gaining in trade, but now a reversal. Long unwinding for Godfrey Phillips as well as AU Small Finance Bank. But remember, the signals are still in a very narrow range for most of the F&O counters. And short covering, interestingly, is coming in for Persistent Systems and Astral as well. We had mentioned about the mid-cap IT space where the strength is still there, of course, over the last 2 to 3 trading sessions. So this is how the stocks are moving in the F&O space.
Thanks so much for that, Sharad. But viewers as well as Gaurang and Vaishali, it's now time for the rapid fire round in this edition of Fast Profit. Keep your answers as short as possible. The first one coming in on IRCTC, bought at 686 by a viewer, Tom. Vaishali wants to know what he should do with his 95 shares.
Exit.
Okay, the next one that we have is on Shriram Finance. Our viewer Vivek from Himachal is holding 50 shares at the levels of 1040. Should he continue to hold or average at the current levels, Gaurang?
Do both, hold and average for long term, Mahima.
Pawan is holding on to HAL and is currently at an 8% loss. Gaurang, any view on what he should do now?
A strong competitor, no specific comments, but the order book is strong. Earnings visibility is much stronger.
Okay, Britannia bought an average price of 5830. 10 shares is what Mano from Gurugram is holding for almost 2 years now. Can he continue to hold further? Vaishali, on the charts for Britannia?
Hold, and if it dips at towards 5,000, add more.
Our viewer Jigar is holding on to HDFC Bank at 650, so he's been holding on for a while. Gaurang, should he continue to do that? Is it a good time to add more?
Well, honestly, I don't know when he bought it because 650 is not the level I have seen in the recent times. We have a positive coverage, hold and add for long term.
Okay, Uno Minda. Gaurav, your fundamental view on this one is what our viewer is looking at. He's bought 35 shares at the levels of 1140. Average, hold, exit?
Average sub 1000 levels or closer to 1000, we have a positive coverage for long term.
Vaishali, our viewer Mr. Rao wants to know if it's a good time to enter any of these IT names, TCS, Infosys, HCL, Tech Mahindra.
I think Tech Mahindra and Infosys.
Okay, Capacite Infra bought at the levels of 267. 1000 shares is what our viewer Jawahar Babu is holding. Vaishali, your view on the charts, add or sell? Capacite Infra is what we're talking about.
Yes, I think keep a stop loss of 220.
Between Hindustan Zinc and Hindustan Copper, which is the right one to buy right now? Gaurang, would you recommend either of them right now?
So Hindustan Zinc is something that we have a positive coverage on.
Okay, Genus Power, 300 shares bought at the levels of 313 for a period of 1 week. Can our viewer continue to hold or sell it? Vaishali, short-term view, very short-term view on the charts.
Short-term view, 300 is the support and 320, 325 is the target.
Mazgon Doc, Vaishali, bought by a viewer Priyanka at 2489. Looking for a short-term view on this one as well.
So Mazgon Doc currently 2404. I think hold, continue holding 2450, 2480 can be the target.
Okay, the next one is for you again, Vaishali. Swiggy, 110 shares bought at the levels of 380. Harsha from Vijayawada wants to know whether to continue to hold, add or sell from a short-term perspective.
Hold with a stop loss of 245 and can see 280.
Senthil is holding on to Cochin Shipyard for a while and is still in losses. Gaurang, any view on what he should do now?
This was difficult for me because we had a coverage on the positive side. That's under review. No comments.
Okay, the next one is on Gillette India. Our viewer is holding since the level of 7708. 50 shares is what Murli has been holding. Fundamental view on this one, if any, Gaurang?
It's one of the most promising companies in the FMCG, especially the men category and now even women category, the kind of products they have. Very strong company. Won't give specifics since we don't have coverage.
Next one's from Krishna from Hyderabad. He bought Tanla Platforms at 816 to almost 4 years ago. He's still in losses. Vaishali, on the charts, is there any revival here to sustain? What should he do?
It is showing signs of revival. 450 is the support, and if this stock moves above 600, it gets into a good strong trend going towards 750.
Got it. Well, that is the end of the first round of the rapid fire in this edition of Ask Profit. There's another one in about 20 odd minutes. So viewers, stay tuned. We'll just take a very short break. Come back with a lot more stock related queries on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends.
Welcome back. You're watching Ask Profit right here on NDTV Profit. And if you haven't already, do start sending in your stock related queries on the number that's flashing on the top of your screen. You can also call us on the landline number and speak to our guests directly as well. And Lakshmi from Chennai has exactly done that. Lakshmi, very good morning to you. What's your query?
Very good morning to all of you, sir. I wanted to buy Tata Steel.
Okay.
So what is the price to enter and what is the short-term and long-term target for this?
And are you looking at the charts while entering this counter, Lakshmi, or are you looking at the fundamentals?
Charts only, sir.
Okay. Vaishali, let me come to you then on Tata Steel. You've seen a very strong run-up. But what's the momentum on the charts now?
So I would say overall full metal sector has given a good run up. It's just consolidating. So Tata Steel, I think a good support level would be between 195 to 200 levels. That would be the level that one should consider to get into stock. And once we see a sign of reversal, this can go towards 220. So short-term view would be that.
Okay, so that's the view on Tata Steel. The next one that we have is on Siemens Energy. Mr. KV Narayana Rao from Visakhapatnam is holding 100 shares at the levels of 3,200 and wants to know from a 2-year perspective, can he continue to hold, maybe add more at the current market price? Gaurang, your view on this one?
So Mahima, since the time this arm got separated and listed at a separate entity from Siemens into Siemens Energy. So as a disclosure, when the combined entity was there, Siemens, we had a positive coverage. We continue to have a positive coverage on Siemens. On Siemens Energy, we don't have coverage, but this entire sector again looks very, very promising. Whether it is to do with Hitachi or companies like Siemens Energy or companies like Vartek Vabag or companies like Thermax, a very promising business outlook in terms of orders coming in, and execution of orders for these companies is above industry standards because of their capability, capacity, experience, manpower, and technology. So it's a strong company, very competent player and able to take up challenges. Won't give specifics since we don't have coverage.
Okay, all right. So that's the view on Siemens Energy. I think we've got Chetna who's calling us from Gujarat. Chetna, very good morning to you. What's your query about?
Madam, last June I was purchased 171 shares of Kaveri Defense at rupees 124.66. But after that it was rising, then suddenly it came down. I was thinking like it may go high. I was waiting and I was added some more shares also, but it's right now it's 50% of loss. I don't know what to do. Please guide me.
You said Kaveri Defense, is it?
Yes, madam. Kaveri Defense. KAVDEFENCE.
Okay, all right.
Cow Defense, like that it will be.
Okay, it's a very small company, Chetna, and I'm guessing you looked at the charts while buying this one?
Yes, madam. No. Without knowledge, I was purchased. I was new trader.
Yeah. Okay, understood. So, understood your point, Chetna, and I'll take this up with Vaishali. Vaishali, it's a very small cap company. Chetna, first of all, before I go to Vaishali, and I think Vaishali will agree with me, it's a very small cap company, a 300 crore market cap. So, if you're starting out very new, you shouldn't venture out to such micro cap companies, right? But if you've had the chance to take a look at the charts, Vaishali, any view that you can give, Chetna?
Well, I would say, and I totally agree with you, that as a beginner, please focus on frontline good quality stocks. But, chartically, there's nothing much happening. All I can say is that it's just a consolidation. So if you're lucky, this stock can, just take a support at 60 levels and give a bounce up to maybe 80. Else, I would say, please switch to a good, healthy stock.
Got that view, Vaishali, and hopefully that helps you, Chetna, as well. But the next question coming in on from our viewer Venkat Ramani. He wants to know about Prince Pipes and if it's a good time to enter this counter considering Q4 results. But Gaurang, from the piping space, we were expecting inventory gains in Q4, but that could reverse in Q1, right, because of the volatility. So should investors take a look at these results with a pinch of salt? How are you viewing the space? Anything that you like?
Well, so we do have positive coverage on Prince Pipes and Fittings. Other than that, Astral is the other one that we have a positive coverage on, Puneet. And this entire theme that the government has very well elaborated and implemented at ground level, and that is Har Ghar Mein Jal or Har Nal Se Jal. Difficult times, Puneet, when the Met Department or the SkyMet tells us that we're going to have a deficit monsoon of 92 to 94% of long-term averages. But I think there's been a very well elaborated plan in terms of connectivity, in terms of water supply, irrigation, etc., etc. Long term, remain positive. So if you have it, hold it. If you have it at higher level, maybe on dips you can add it, and if you don't have it, you can buy it for long.
Okay, all right. So that's the view coming in on Prince Pipes. We've got our next caller. I think Shirdi is calling us from Hyderabad. I hope I'm pronouncing your name correctly. Go ahead, ask your question.
Yeah, my it's cool. Yeah, thank you. So my question is on K-Fintech. I see the stock dropping over like 16%, 17% from where I bought at 974. I see that the profit YOY has declined, but I'm seeing that this will be like a revival story again once the Ascent Fund Services, whatever they've acquired recently, actually synergizes with the business. So that's my take, and I wish to accumulate more at this particular juncture. I want a fundamental view on this.
Okay, fair. Got your question, Shirdi, and I'll take this up with Vaishali, because Vaishali, it's not been a really long time since the stock hit 974, but today it's down and it's come down to hit a low of almost 806. So corrected quite a bit. Your view on the charts, considering that are you seeing some revival? Do you think that the downturn is now over and there could be some up move which could give some profits to Shirdi?
Yes, Mahima, that's what I think, because the stock has just corrected one way and right now it's in deep oversold and trying to come out of it. So at this juncture, of course, I would not say exit or something. You can expect a bounce back. If the going is good, I would say 750 would be the support. And if we see a good bounce, this can go perhaps to 950 to 1050. 1050 is the big hurdle because that is a strong 200-day moving average resistance. So hold on with, now that you've held on for so long, 750 should be the stop loss and wait for this to surge high.
Got that view, Vaishali. But the next question is coming from Akshay. He was holding on to Tata Motors before the demerger, so he has both those shares now. And wants to know what he should do with this counter. And if he should hold on or exit. Gaurang, I think Q4 for the PV business, India was, I think, one of the best that we've seen ever. But the JLR business continues to hamper the profitability. His price post, that has also come down a little bit. But what's your view on the stock? Anything that you like between the two, if there is a preference?
Well, so we had a coverage as a single entity, Puneet, before it got hyped out into two different businesses. Tata Motor was consistently in our coverage at that point of time. And post that, currently we have a positive coverage on Tata Motor CV. And CV business is doing quite well compared to the PV business. And like you rightly mentioned, JLR has been a little bit of weight heavy for the Tata Motor PV balance sheet. There is a little bit of uncertainty in terms of when the business is going to pick up. And in these kind of times, Puneet, it even becomes more challenging for such companies to perform. But from both, we are positive on Tata Motor CV.
Okay, all right. I think we've got Krishna waiting by. Krishna, a very good morning to you. What's your query about?
Good morning. Actually, I wanted to know about the HDFC. What would be the current stage and how long I can hold it? Is it for short duration or preferably long?
Okay, so you've not bought it yet, I believe.
I have few.
Okay.
I just want to add up some more.
So when you bought them, was it the charts that you saw or did you see the fundamentals of the company?
It was based on fundamentals, but it was quite long. It's consistently falling now.
Fair. Okay. I got your question, Krishna. I'll take this up with Gaurang then. Gaurang, we already took your view in the rapid fire round, but if you can give an elaborated view on HDFC back to Krishna.
Well, so Krishna, if you're a long-term investor, I don't know, you not mentioned at what price you got in at. But in case you got in at 800, 850 or 900 levels, or maybe at higher levels, my view is, first of all, our recommendation from our fundamental team is to hold on to it. Your question was whether to add more. Now, given the fact that I'm not aware about what level you got in at earlier, if the stock is available maybe 5-10% or maybe more compared to what you got earlier, maybe if you bought in at 900, 950 and currently the stock is trading at about 760, my advice to you would be that whatever quantity you hold earlier at a higher level, maybe 50% of it, if you have investable amount from a long-term point of view, maybe 50% you can average. And if you have a little bit more risk appetite, you can average a little bit more. but continue to hold and average should be the strategy.
That view, Gaurang, and let's go across, take another query now. This one's on EPAC Durable. The company comes out with results today as well, so keep a note of that, viewers. But Viro Pakashay is actually holding shares at 180 and he's holding 1,000 shares. So he is currently in profits, but of course it's come down considerably from that 400 level that he used to trade at. But Gaurang, you mentioned about the cooling product space. You have coverage on Voltas, Blue Star, Symphony, etc. But EPAC also in that space, but has been one of the bearing the brunt essentially of that lower consumer durable AC demand. What are you watching out for in this quarter for some of these companies? Blue Star has of course come out with results, so has Voltas. So your takeaway, if people should continue to hold, given that quarter one is generally a summer season, but what would you recommend?
So honestly, Puneet, I think a delayed summer and then price hike did dampen the demand outlook for consumer durable companies, specifically those who are into ACs. My view, our personal view, Puneet, is that the demand from semi-urban and rural India is going to go up to a great extent. And that's what some of the managements have elaborated and given a detailed verbatim as to demand not only coming from metros, tier 2, tier 3 cities, but more so from the semi-urban and rural India. And the fact is also that every year you have seen temperature rise. I think it was not a time in Mumbai especially to see temperatures of maybe about 42 degrees and 45 degrees. It feels like, that kind of a temperature. And up north, the temperature is always rising. So from long term, the demand is going to come back. And that is going to help all these companies.
Okay, all right. So that's the view coming in on a lot of these consumer durable as well as EMS names. But the next one is from Setunath from Kochi, and he's done his research well. What he's saying is that he wants a long-term view on South Indian Bank. He says that considering that the management has mentioned that gold loan curb from RBI could kind of impact their financials going forward, and that's something that the CEO highlighted in the con call. So he's studied the con call as well, but he wants Gaurang, your view on this one, if any?
Well, so gold loan, this is a tricky one, Mahima. It is not going to be only negative for South Indian Bank, but all the banks and especially the gold loan companies, given the volatility in the gold and silver prices. So from a long-term point of view on South Indian Bank, we have an accumulate stance. And I don't think short-term negativity in terms of one-off quarter should be a reason for changing your goals and objective as far as long-term investment is concerned, Mahima.
Okay, all right. The next one that we have is on Samman Capital. Shankar from Dubai is holding 550 shares at an average price of 165. Wants to know if it's a good idea to add more, continue to hold or sell. What's the technical outlook on this one is what Shankar is asking. Vaishali, your view on the charts for Samman Capital.
So actually it is in a downward trend, but today's candle shows some revival. So I would say keep today's low as stop loss and continue holding. 145 is acting as a crucial resistance. If it moves past, then you will look for your targets of 165 and so on. So today's low should be the stop loss.
Got that view. The next question coming in now, this one, on Avalon Tech, we actually had a brokerage note from Nomura also, which initiated coverage on this stock. And our viewer, Bindu, wants to know if it's a good time to buy right now. Gaurang, in the EMS space, how are you weighing the counter? Because you've seen the top 2-3 names, Dixon, Keynes, Amber Enterprises, not enthuse the street. You saw a big brunt of that on Keynes as well. While the smaller names are starting to see more conviction, if I can use that word, in terms of sustained 30% growth. Which camp are you in? Anything that you like?
Well, in the equity market, Puneet, it is always better to be on the positive camp, right? Negativity doesn't help over a longer period of time. Having said that, Puneet, the negativity or these stocks have not enthused the market only in the short to medium term. I think over the last maybe about 5 days or maybe 7 days or 10 days. Beyond that, if you actually go to see, names like Amber or Dixon or Avalon, or maybe names like under which we have coverage. So we have coverage on Amber Enterprises, we have coverage on PG Electroplast, we have coverage on CG Power. All these names have done well. So maybe, and some of them may have run up before the numbers and post the numbers they have corrected. So long term, again, keeping in mind the government PLI scheme, focus on Atmanirbhar Bharat, reducing dependency on imports of whether it is chips, semiconductors, PCBs, etc. I think we have a long way. And companies are adding more capacities, Puneet. Now, that's a very good positive takeaway as far as the long-term growth trajectory is concerned. So we remain positive on this sector, EMS. We are positive on, as I mentioned, Amber Enterprises, CG Power and PG Electroplast.
The next one that we have is on Ether. Our viewer Chandrasekhar from Bengaluru wants to know if he can go ahead and buy at the current levels from a slightly long-term perspective. Vaishali, your view on the charts?
Yes, it has a very strong uptrend. I would say accumulate. I mean, not in one go. Buy now, even if it dips to around 850 levels, 830 levels, still add more, because I think this stock is going to go to much higher levels in times to come.
Talking about Aether Energy or Aether Industries, because both counters are near that 800 to 900 mark. Just want to get a clarity.
I spoke about Aether Energy. If you want me to give you
in industries also, if you can give a view.
Yeah, so I think this too is looking good. Can be added at this level, 1050, and look for a near-term target of 1300.
The other one, it's on on JK Tires. Actually, if it's the right time to enter, is what Kiran is asking. On the charts, Vaishali, anything that you're picking up?
Yeah, so this was beaten down, I guess, because of high crude and maybe extra this. But I think deep oversold, long-term trend is still good. Start buying from here on. You can see good returns from here.
Okay, all right. The next one that we have is on Garware High Tech. Sumana from Dubai is holding 50 shares, bought at the levels of 4,600. Says it started to move up a few days ago. What's the upside target for this one? Vaishali, your view on the charts?
Sorry, Garware High Tech.
Yes, Garware High Tech. Currently trading at 55.69. It's spelled as Garvare.
Yes, I got it. I got it. It's already in an uptrend. So what is the question? You want to hold or book profit, or what is it?
Target is what he's asking.
Okay, so I think this can go towards 6,000. The trend is good. It has gone above all the highs. So I think this can go for the near-term target of 6,000. So continue holding with the trading stop loss of 5,400.
Got that view. The next question, that's coming in now, it's on BEL. Viewer has Sayan from Kolkata actually bought it at 340. So he's currently sitting on profits and he's holding 260 shares as well. Asking if this is the level, if he can add a little bit more at this point of time. It's been good results, Gaurang. Would you recommend adding more now? It's slightly at the pricier junction, right? At 35 to 36 times.
Look, anything good in the market is going to come at a premium, and anything bad is going to come at a discount, right, Puneet? So happens to be a very strong player in the entire defense-backed BEL. We've been having a positive coverage. Our targets, if I recollect right and my memory serves me right, is somewhere close to about 505. Very strong order book. Other than having the strong order book, Puneet, the company's got, again, manpower, technology, and machinery to execute that order book. My only request to all your viewers, if you eventually understand defense sector and you decide to invest in defense, have 3 to 5 year kind of time horizon, because these companies make very complex engineering, high technology products. You can't deliver a missile, whether it is surface to surface, air to air, or air to surface within 24 hours. It takes a lot of time. So have 3 to 5 years plus kind of time horizon.
Advice, Gaurang, and a valuable one. So thank you so much for that. Time for a rapid fire round. Vaishali and Gaurang, try to keep your answers as short as possible. The first one is the data patterns. This is for you, Vaishali. Uma from Bengaluru wants to know as to what price should she average. She's bought at the levels of 3958.
Okay, so average at 3600.
The next one's, Crompton Greaves, 700 shares bought at 280. Gaurang, any view?
So, Crompton Greaves, I believe you're talking about Crompton Greaves Consumer Electricals.
Yes, that one, yes.
Puneet, and if that is the stock, we have a positive coverage.
Okay, Mazagon Doc, 30 shares bought at an average price of 2712. Continue to hold from a long-term perspective. Surendra from Bengaluru wants to know. I think Gaurang already answered that, but Gaurang, quick view.
Well, again, if long-term continue to hold on, and if you want to add to it, you can definitely do that. We have positive coverage.
Motia Loswal bought at 913 by a viewer. He wants to know if he should still continue to hold. This is Jaideep. What would you recommend, Vaishali?
Hold.
Okay, the next one that we have is on Geo Financial Services. Our viewer Mahalakshmi from Hyderabad wants to know if she can continue to hold this for 2 years. She's got 1,000 shares at the levels of 253. Gaurang?
Hold on and add for long term.
L&T bought at 4,000 odd by Subhojit. What should he do, Gaurang, with this counter now?
One of the most promising and profit-oriented companies in the entire cap goods engineering, diversified as we know it. Hold on and act on dips for long term.
Okay, the next one is on KC International. Satyan has bought at the levels of 680. He says he's been sitting on a 30% loss since the earnings. But can he continue to hold? What are the short-term targets suggesting? Vaishali?
I would say add more to this level.
The next question coming in is on Tenneco Clean Air. It's a new listing and Vanita actually has bought her at 506. So she's currently sitting in profits. Asking what she should do with this counter. Gaurang, any coverage by any chance if you covered it during the IPO or anything that you like in the auto ang space?
So auto ancillary, like I mentioned, Uno, Minda, Madhusan, Samardan, CIE Automotive are some of the names that we are positive. But this one, I think it'll better Vaishali take it.
Vaishali, any view by any chance on Tenneco? I know recent listing, limited charts.
Yeah, so if the trend is intact, I think continue holding with a stop loss of 560 and this can go towards 630.
Okay, NHPC is the next one. Prashant has bought 2,000 shares at the levels of 83 rupees. Continue to hold, Vaishali?
Hold.
The next one coming in now, it's on Avantel, bought at 158 by Dilip. What should he do with this counter, Vaishali, now?
So Avantel currently at around 153. Continue holding and I think look for a target of 180.
Okay. Okay, the next one is on Force Motors. What targets, Vaishali, do you see on the charts for Force Motors for the next 12 months?
Can be 25,000 levels again.
Railtel bought at 330 and Ramana currently sitting in losses, asking if she should still continue to hold. Would you recommend that, Vaishali?
So I think Railtel continue holding with a stop loss of 305.
Okay, Biocon, 3,000 shares bought in 2004. Neerja wants to know as to what should be her strategy going forward. Gaurang, your view?
So this one has been one of the most underperformers in terms of pharma pack. But yeah, if you're a long-term investor, continue to hold.
Next one's on KRN Heat Exchangers. Our viewer Sudhir from Jammu wants to enter this counter now. Vaishali, would you recommend that?
Good level to enter is 850.
NTPC Green, is this a good time to invest? Shankar from Bengaluru says he's planning to buy 500 shares. Vaishali?
Yes. Most of the green stocks are doing well and getting in momentum. This too looks good. 100 should be the stop loss.
Okay, alright. So that brings us to the end of this rapid fire round as well as Ask Profit. Vaishali and Gaurang, thank you so much for helping us answer all those stock related queries. But viewers, we are completely out of time. But if we've missed your query in this edition, then you can tune in at 2 p.m. and ask all your stock related questions. But do stay tuned because Know Your Company comes up next.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com. is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Interesting show of KYC where I get you hidden gems, interesting market cap, companies, and also the place where a lot of action happens, especially on the buying front in the open markets. And today a very interesting company has come, but before that I'd like to give you some hints. It's a bit difficult to guess. It's in a very complicated sector, but I'll try to simplify it for you. They manufacture polyester films and specialty polymers. Interesting company. Also, recently the company has come out with its Q4 numbers, and if you look at sequential basis, the company has delivered. That is where my interest came, and of course promoters also were increasing the stake in this company. Stock itself is up 37% from March lows. It's a bit difficult company to guess, but try to do that. In the packaging segment, we have 5-6 companies. One of them is Esther Industries. This is what we are going to talk about. And why are we calling this company? That's the big question here. It's largely a small cap company. Why the interest? The question is on the Q4 numbers. There was a little bit of turnaround, and will that sustain going ahead or not? And remember, there's a lot of crude derivatives at play when you deal with a packaging company. So let's just look at the key questions. Why are we calling this company? The first one is definitely going to be there on the improvement in the trade environment. Is the momentum going to continue, especially on the trade tariff front? That is where the clarity has come in as of now for this industry. They have a higher exports also, and the rising raw material cost. Is that a concern? Is there a pass through there? All these questions we'll try to understand, especially learning the industry. And will there be any margin pressure in the first half of FY27, or the global pricing will offset that? That's the important question to be asked, and of course this becomes also important. Apart from this, there are some questions also which we'd like to focus on, and that is the implementation of plastic waste management rules. That's a major retrigger, especially in the recycling theme. And recently they did a 165 crore fundraise via warrants. Where will the application be? That's the key question to be asked. And the European Union's eco-design for sustainable product regulations. The next 2 to 3 years, there is more time left. What benefits does this happen? And this is very interesting, and this is what we will talk about. Esther and Loop JV. This is where the specialty angle comes in, and the company is moving towards that. So maybe this is an inflection point to an otherwise a commoditized business. And of course the capex expansion plans ahead as well. Will they take it? Will they kind of delay it on the geopolitical issues? That's what we'll try to figure out. But we have a turnaround specialist in this industry, so the conversation will be really strong. We have Vaibhav Jha, CEO at Esther Industries. where he'll talk about how the company might move ahead, especially whether it's at an inflection point or not. But let's try to understand Esther Industries करती क्या है. छोटी कंपनी है, प्रमोटर अपने स्टेक ने acquire किया है थोड़ा, और that is where the interest has come in. 40 years old company, it manufactures polyester films, specialty polymers and rPET as well. These are the recycled PET, to put that in perspective. But where are the applications? So this is of course there in the primary flexible packaging space, and we are seeing this long-term trend going ahead. Specialty polymers, they are in the niche area. This is into the rigid packaging, textiles, especially in the technical textiles. That is where a little bit margins also come. Customers are in over 50 countries and a good exposure they already have. Apart from this, let's look at the other key details, and this includes 3 state-of-art manufacturing facilities across India. Some is there in Haryana, some is in Hyderabad. 20 granted patents they have, and a very important strategic partnership they have with Loop Industries JV, especially with Nike as an anchor customer. That's what we will be looking out. And 62% revenue comes from exports. That means the depreciation of rupee is actually aiding the company. They have a key customers. They include Godrej, Huhtamaki, Dabur, Britannia, Unilever, ITC as well. And also, if you look at the FY26 revenue breakup, still the 87%, the majority of that still comes from polyester films. This is the revenue segment that's around 13% coming from specialty polymers. This is where the value-added segment also lies. So it will be pretty much interesting how this product mix changes going ahead. And this is the installed capacity. You can see polyester chip, polyester film and rPET. This comes under your polyester polymers. And there's a second segment which we spoke about. This is specialty polymer. These are the installed capacities. But what's the key management commentary in this Q4 earnings? They are focusing on the premium specialty product mix. So that'll be interesting to talk about. rPET, there's a higher production and demand happening, and this is for the sustainable packaging, and this is the future I would like to talk about, especially if you're tracking this sector. Uncertainty is there in particular segment in specialty polymer, so we'll try to understand that from the management, and that was the impact in the Q4 numbers. But there are key concerns. Higher raw material costs and that input, is it going to impact more in the first quarter? Second concern for this stock is there's a lack of FI and DI participation, and that brings it to my next point. That's the lack of analyst coverage, and this is why we get these companies in KYC to you to make better and informed decision. Return ratios are also muted, and that is where the concern lies for Esther Industries. But is the worst over? That's my question. Another take I'll want to give, because the recycling business in India might drive alpha, and of course from foreign customers as well. Now they have an improved global pricing right now because there has been an increase in the Chinese origin prices. That's what the management has also stated. And interestingly, a lot of anti-dumping duties coming on the BOPET. This is one of the key products of theirs in their film imports, and this augurs well for domestic players like the company. BOPET films export headwinds are abating on the tariff clarity. That's what they mentioned. That's what we have seen in the Q4 numbers also. This is very important to note down that maybe the worst is over for the company, and promoter buying continues in this counter. That is where the interest for me lies in Esther Industries. But let's try to understand more step by step in our KYC. What are the ratings we generally give to a company when we judge them? First and foremost, of course, the income statement, balance sheet, and cash flow is something which we definitely look at, and these are the most important ones. Then is the return ratios, especially I'll try to get you the ROC numbers to see over the period of 4 to 5 years how the company has performed. Shareholding, how much has been moved. Of course, FIDI is something number which I'd like to show and point out to you for this company. Street cred for the last 5 years, has the company actually made money or not? Valuations, it's a very competitive market, especially in the packaging segment. Is there a commodity at play, or is there a valuation comfort, or isn't? That's the key question to be asked. And lastly, the outlook, the medium term, long term and short term. I'll get you all of them in our rating parameters. But before that, let's start with the first rating parameter, and that is the income statement. And this is where a little bit of concern lies. On a long-term basis, there hasn't been much. The 3-year CAGR numbers, EBITDA has been strong, but top-line growth hasn't been that strong. So overall, not a very strong set of numbers coming in. But if you look at the Q4 numbers, I really like the net profit in the company from a loss turned into net profit. That is where the turnaround has happened, and this is what is something which augurs well for the company, and that is what I feel is negating their long-term performance. But the margins, at once it was at 17.9% in FY22, and then you see how much volatile the margin setup is, and this is the entire nature of the industry. Do not blame the company, at times the industry as such, and that is why at times what happens is a derating happens in the industry as well. So that must have impacted the company as well, and that's what we can see on the screen. So it's a neutral rating right now on income statement right now, especially focusing on the Q4 numbers. That's where the turnaround might sustain. Balance sheet is pretty strong, I would say, and their borrowing levels have come down around 438 crores. There it is stable at 404 crore rupees. Remember, there is a working capital is also required in this business, and it's decently, cash flows are there in this company around 104 odd crore rupees. The cash balances, and they recently did a fundraise also. So yes, net, the balance sheet management of the company remains strong. So I'm going to give this a thumbs up. But let's talk about from income statement and balance sheet, let's talk about cash flows, what's happening here. And remember, there's a little bit of lumpiness also at times in the way geopolitical tensions work. Remember, 62% of revenue comes from exports as well. So there is lumpiness, as we discuss, but look at the cash flow from operation, that has done well. And of course, the cash flow conversion has also been strong. But will it be, sustaining all throughout, or will there be some volatility? To give that perspective, I'm going to give this a neutral rating because this industry is as such. So that's the neutral rating coming in for the cash flow segment. Return ratios, and that's where my concern starts coming in. ROCE numbers, generally you should expect something between 14 to 15%, but the way volatility comes in, and see in FY22 this amount was 14%, now that has come down, it's very lower side. That is why a little bit of concern comes in the return ratios, especially when I'm tracking the ROCE numbers. That means a lot of stock returns have also not been made in long term. I'll get to that, but as of now it's a strong thumbs down when it comes to the return ratio. Let's talk about the shareholding, and shareholding, the promoter stake, it's unchanged, literally 62 odd percent. A minor buying happened in the March quarter, and after that also little bit of reports suggest that promoter buying was there in this counter. Public, it's been around 38 there, but look at the FIs and DIs, there hasn't been any kind of bigger move coming in, very negligible exposure. That's where my complaint is. Why is that? Is there lack of analyst coverage, or does the company needs to come out with something more? So as of now, let's keep a neutral rating for the shareholding segment. Apart from the shareholding segment, let's talk about street cred, and this is very much important because has the company actually made money for the investors? Of course, a lot of packaging players there's a lot of stories over the last 3 to 4 years that this industry will do well, but there seems to be a derating, and this is where the concern lies. From March lows, a lot of stocks went up. The company also went up 37%. But to give you another picture, look at this. From 2025 highs, the stock is still down 34%. एक साल में देखें तो 19% का घाटा. But the biggest hit, if you are a long-term investor, is for the last 5 years, the stock is down 32%. So big concern. It hasn't made money for medium-term and long-term investors. So I'm going to give this a thumbs down as well. Let's talk about valuations. Despite correction, are the valuations attractive? In my analysis, no. Why? Look at that. These are the trailing 12-month P as per Bloomberg's data. I've taken Esther Industries still at 64 times. But you compare that with the other players, especially Uflex and Cosmoforce, they are ranging between 15 to 17x. And the story is the same. If you get even Polyplex, that's coming in at 13 times. Compare that with Jindal Poly, yes, that's on the higher side, that's 49x. But amongst his peers also, Esther Industries is expensive. So we need to see the earnings, good earnings comes in, then this ratio falls down. So this is the entire picture. But as of now, in peer comparison also, I'm going to give this a strong thumbs down. Let's talk about outlook. That is where, my interest lies. The company is optimizing, or they are showing optimism, from medium to long-term perspective. So that's a very long kind of a statement coming in. Let's get into a little bit more details. What else the company is focusing on? They recently did a 165 crore capital infusion. How will they go ahead with it? That's something to ask about. And also the anti-dumping duties coming in from the government is against China and other countries is a positive trigger as well. There was a good turnaround in the fourth quarter, and the Chinese pricing is on the higher side, and that is where the bullishness happened. But take everything with a pinch of salt. Why? Because there's a rising interest rate scenario. Of course, pass-throughs and price hikes do take time in this industry also. So I'm going to give this a neutral rating. So let's try to figure out what's the total KYC rating for Esther Industries. Largely untracked, but an interesting name came in my analysis. Income statement, cash flow has been neutral. Balance sheet is nicely managed, but the concern starts coming in when I talk about the return ratios, the shareholding, the street cred. That is where the concern lies. Outlook is largely neutral, and of course there is a concern that there is no FI or DI participation. So the company needs to come up with something in the numbers also, and of course a good momentum in the stock will also aid investor sentiment, but as of now there is a lack of analyst coverage. Let's see the total numbers. It's on the lower side of the averages generally which I give for a company in KYC, and Esther Industry gets 3 out of 8. But that doesn't mean that this is going to be forever there. Of course, if company starts improving, there will be chances this number goes up as and when we get them again in KYC. So to put that in perspective, we have Vaibhav Jha. He's the CEO of Esther Industries. He'll be talking about, the growth outlook for the company, and interesting trivia about him. He's the ex-CEO of Reliance Sibur Elastomers. He had led this company in a turnaround. So he's a turnaround specialist, and 2 decades of experience he has in chemical and synthetic rubber, and also education from IIT Bombay. So we'll try to get him all details with, Vaibhav, but just after a short break.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on.
Welcome back to KYC, and now we are joined in by Vaibhav Jha. He's the CEO at Esther Industries. Good afternoon, Vaibhav. It's always a pleasure to have you, and of course, a very strong set of sequential number growth which I have seen coming in the company, and of course, the management commentary was also strong. I just wanted to understand, with so much uncertainty involved, you have a higher exposure to exports. Do you think this turnaround or whatever these numbers had come in the fourth quarter, do you think this momentum spills to Q1, or is there some caution also at play?
Thank you, Sharad. Always a pleasure to speak to you. Sharad, see, I think there are two factors at play, right? When you try and assess what we are trying to do here at Esther. One is the industry structure, and the industry structure has undergone a change, both domestically and internationally. So whatever were the headwinds which we faced in the previous quarters, they have transitioned into tailwinds. On the industry side in India, there has been a big structural push which we have got in terms of improvement in BOPET demand due to the recently notified PWMR rules, which mandate incorporation of a certain amount of PCR content in the rigid as well as flexible packaging. So what this means is that the brands who actually are the end users of the flexible packaging, they are going to move a lot of their laminates from substrates like PPP, other substrates to BOPET, because BOPET is the only substrate which can help them fulfill these recycling norms which have been notified under PWMR. Also on the rigid side, where 30% of recycled content needs to be incorporated, it's going to create even better demand for rPET compared to what we had seen over the last few quarters. So there is a demand pull. On the capacity side, we are seeing reasonable stability with very few capacities which are likely to come up in next 3 years. So all in all, what this means is domestically the operating rates are going to be high. There is going to be a leverage in terms of the profitability that the industry can command. On top of that, DGTR has recently introduced or notified an interim duty for BOPET film industry. And we are expecting that very soon, Ministry of Finance is going to notify it. And this anti-dumping duty, whenever it is applied, will be on the low-cost imports which the industry was struggling with from countries like China, Thailand. Yeah. So overall, to summarize, structurally, we are seeing great strength in industry. And
so
therefore,
Vaibhav,
we think they should sustain.
Vaibhav, the strength we can understand is a very important statement you've given, that from headwinds, the sector turns into tailwinds. But just to understand a little bit more, the raw material pricing is getting costlier also. I just wanted to understand, will that kind of impact the margins in first quarter or the second quarter? Because there is an impact definitely there. And if yes, any price hikes in the annual, because there must be a time period also where there's a lag and then you give out your price hikes as well. So just wanted to understand both the margin outlook and the price hikes.
So see, margins in this industry are depends on the competition from imports as well as the domestic operating rate. The industry has the ability to pass through the raw material increase, so to say, right? So I don't see a challenge in terms of sustaining the margins or improving the margins because of the tightening supply-demand balance in the markets.
So that's an interesting take on that. But the high margin segment, Vaibhav, we are talking about it also, management commentary coming in the high margin specialty product segment. And also let's put that in perspective in the value added segment. So over the next 2 to 3 years, how much of your key products, changes into the value added segment or the specialty premium as you call it?
Right. So let me give you a little bit of background. So we have two specialty segments. So one lies within the BOPET films, right? So there we are right now at a 25% share, in terms of specialty films as a part of the overall basket of BOPET films that we sell. And volume wise, we have seen a growth of almost 15% despite losing some market in US due to the tariff issue, which we are going to regain now. The other specialty set of product that we have is what we call specialty polymers. And so these are the two segments. And going forward, our target is that we want to take specialty film share from 25% to 60% plus in next 2 to 3 years. And specialty polymers, we want to grow at a sustained CAGR of 20 to 25% over next 2 to 3 years. So those are our targets backed by the business development pipeline, which we have built over past year and a half, and which we continue to build. So those are the targets that we are looking to achieve.
Okay, these are two important targets coming in. So of course the margin profile changes of the company and a little bit of turnaround in the perception of the industry and the company also comes in. But I just wanted to understand, there was a recent 165 crore fundraise as well via share warrants. What's the application like? Because I presume you are not going very heavy on the capex right now. I just wanted to understand where this usage will be coming in.
So you're very right, Sharad. So within the Esther industry, we are going for very targeted, specific capexes, small capexes, which would enhance our ability to deliver and expand on our specialty portfolio. This 165 crores is something that we have raised for our next growth investment, which is the Elite joint venture, which is a 50-50 joint venture between Esther Industries and Loop Technologies. The total investment is going to be in the range of $160 to $180 million, going to come on stream in 2028. This is first of its kind cutting edge technology which we are putting up for chemical recycling technology. Which will make textile to textile recycling a reality, and which is very difficult to achieve anywhere in the world. We have signed Nike as our anchor customer for this joint venture 2 years before the commencement. So this gives you an idea of how much in demand the products to be manufactured by this JV is. So we raised this 165 crores to fund the equity part of this JV.
That's pretty much interesting. And then, of course, so two new triggers comes in. One is, of course, this JV where we'll see the benefits from FY 28-29, and also the way you're moving towards the value-added segment. And of course, Vaibhav, history speaks for itself. You have a good exposure and experience in the turnaround segment. But I want to understand a little bit about the global front also. The European Union has some important standards also, apart from the PWDR, which we spoke about it, eco-design for sustainable product regulation. What does this mean? Where does the company stand? And what kind of moves we can expect? You already mentioned market share gains in US market is coming in a category. But over here, what is it for the European Union?
So European Union, I think they are a leader in sustainability regulations, and they break the charts when it comes to the sustainable businesses. And this particular regulation is something which is going to benefit the JV Elite that we just talked about. Now, what this regulation does is it makes it mandatory for any apparel sold in EU to have a certain percentage of textile to textile recycled content. And this essentially means that any textile that you are selling in EU needs to have this recycled material sourced from a textile. And there is hardly any technology out there in the market which can make it a reality other than the Elite JV. So this is a big, big plus for the demand of the products which we are going to manufacture out of JV, Vaibhav. And it's going to be quite positive for us.
Right, Vaibhav, we are running out of time, but you have given us almost a 360-degree picture and clarified a lot of queries which are raised in by viewers at KYC, and that's why KYC is one of the #1 shows. It's always a pleasure to have you, Vaibhav, and best of luck for the future. So
Thanks,
that's the management of Esther Industries, and there are some signs of turnaround. Maybe the company is at inflection point, but that's something which the time will only tell. For such interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut.
Range-bound trade on Dalal Street. Nifty and Sensex trade in a narrow range with gains led by oil and gas and auto stocks. FMCG financials on the back foot. Rupee strengthened a little after hitting a fresh record low of close to 96.96 against the US dollar. Pressure building fast for the Indian currency with oil above $110 per barrel and rising West Asia tension hitting sentiments. India is lining up close to over $1 billion in incentives to accelerate electric bus and trucks, targeting private fleets over the next decade. Intercity operators could be the biggest beneficiaries as policymakers step up efforts to cut fossil fuel use and ease the energy crunch. Prime Minister Modi met Italian PM in Rome. The two leaders held talks over dinner and discussed ways to deepen India-Italy ties across key sectors. Russian President Vladimir Putin reaches Beijing for a two-day visit to China to hold talks with his Chinese counterpart. Discussion on energy and trade on agenda, along with on geopolitical conflicts. Meanwhile, Putin will attend the BRICS summit in September as well. Good afternoon, you're watching Markets at 12 with me, Soumit Sarkar. This is the show where we get you updates on the top buzzers and the news updates at the noon. But first thing, let's look at the market. If you look at the Nifty, after 2 days of straight gain, we are seeing a stellar recovery in the market after the sharp fall that we saw in the early hours of trade. From 23,400, we have recouped back to around 23,650. But again, this 23,650, 23,700 is continuously acting as a key resistance for the benchmark. Similar move is something that we saw even in the Nifty Bank Index. From the lows of around 52,800, we recovered to 53,400. But again, 53,400, 53,500 continues to act as a key resistance for the Nifty Bank Index as well. When it comes to sectoral indices, FMCG and banking names specifically, the PSU banks are trading in red, metal as well in red, down around 0.2%. And on the gaining side, we have largely the energy and the auto names and real estate. This is the third consecutive session where we are seeing buying interest coming in when it comes to the real estate names. F&O stock specific action, Zydus Life up 4% on the back of strong commentary that came in. The company reported its numbers yesterday during market, but the conference call was held post that. When it comes to Hindalco, again, strong commentary coming in from Novelis. The stock is up 3.7%. HPCL, CG Power and Hitachi up anywhere between 2.5% to 3%, while Mankind Pharma also gaining on the back of strong numbers. The numbers were reported post-market. PI Industries yesterday late night numbers came in. The stock is down 7%. A big miss coming in on the EBITDA front, 15% miss compared to what the street was anticipating. Bharat Electronics, the conference call is today, so the key commentary what comes in would be important to track. The stock is down 2.9% after reporting its numbers yesterday. Similarly, Godfrey and LTM also down around 2.4 to 2.7% in trade. But one counter that continues to remain in focus is Welspun Living. A strong set of numbers is what the company reported in the fourth quarter of FY26. To understand the way forward now, let's get in Dipali Goenka, the MD and CEO of Welspun Living. So firstly, to start off with, ma'am, FY26 was a troubling year owing to multiple factors. But given that now things have largely normalized on the tariff front, by when do you expect to get back to the FY25 levels or surpass that?
So first of all, I think if you see our quarter four numbers, they actually signify the recovery and the way forward. And I think that's where we will look at the next year to be like. As we go forward, I think our focus is not only going to be on the US, but also if you look at our numbers, we have seen a 40% growth, in our Europe and UK and the rest of the world. So that contribution again will start growing as the FTAs roll out for UK and Europe significantly. Indian market also continues to grow. If I look at our numbers there, our brand shares increased to 19%. And if I look at Welspun, it has grown by 44%, Spaces by 19%. So definitely that will again become a very important aspect towards our growth plan. And our focus towards 15,000 crores remains.
Okay. Also, if you could just highlight on the recent disruptions that we are seeing in the Middle East, how has that impacted you? Any impact on the cost side or any impact on the top line side? Any delays in shipment, anything?
So one thing, let me tell you, the world hasn't been the same. Last year was tariff continues, it'll roll out. Now the disruption in Middle East and the crude hitting its all-time highs, rupee hitting its all-time lows, cotton again has gone up. The commodities and the macroeconomics definitely are going to impact. However, I think with Welspun being integrated facility, having our own ecosystem, we are looking at it very, very focused. And we will continue to not lose our customers, continue to deliver, our orders on time. And all that has been really taken care of very, very prudently.
Basically, what I wanted to understand, ma'am, here was that is the festival-led demand in US impacted because of the recent disruption? Because I believe the orders start coming in around sometime now only. And what is the order book when it comes to the US apparel segment?
I think order book overall looks quite robust. And I can also tell you, Sumit, is that, the next half one, we have a decent visibility of orders. And as I spoke about in my investor call as well, we are looking at a double-digit growth and also recovery of our EBITDA.
Okay. And now talking about the other FTAs that you were mentioning in your opening statement, how much volume is shifting towards the zero duty markets like the UK and the UAE to offset the US slowdowns, and what is the difference in the margin profile between the US and other export market? If you could give us some insight on that.
So one thing, Sumit, I think, let me also clarify. I think the important thing is that Welspun is in the better and the best categories. The good and the opening price points was where, we definitely are not playing that much. And the opportunity is very, very, I think is huge here, because if I look at, we'll come at a leveling playing field with Pakistan, Bangladesh and the countries. So that is a huge opportunity. And as we see that happening in June in the terms of UK, Europe coming back in January, that whole potential is already looking at, because the customers have already started speaking to us. Apart from this, let's not also forget countries like Japan, countries like Australia, New Zealand. And that's where we will see a good opportunity as well.
Okay, just wanted to understand how will the end of the temporary cotton import duty relaxation impact your Q1 margins, or will there be any impact at all of this?
See, we already have taken a very weighted call. Our order book has already been, blocked, and so there won't be any kind of whatever we had planned and estimated is what we will see here.
And ma'am, from long-term perspective, just wanted to understand this. Are you winning long-term fabric contracts from global brands which are looking to diversify away from China?
That has continued here, and that will also continue as we go in the near future as well, and the next year as well. So we will continue to get that business. We already are talking to a lot of customers and a lot of, retailers across the globe, and that displacement is, by default happening, not only with China but also with our neighboring countries, as you see a kind of an upheaval there in the terms of their economics and macroeconomics.
Okay. On the balance sheet side, your net debt has improved significantly to 775 crore. I believe last year this number was more than 1600 odd crore rupees. By when do you plan to be net debt free?
So, we can be net debt free anytime now, because if you look at our balance sheet where we are, so we worked a lot on our balance sheet, but I think as we are committing towards a capex of around 400 crores this year, but we also are not actually stopping to evaluate opportunities in the terms of as the FTA opens up, in the terms of the growth that Welspun Living can have. So that is something we'll continue to evaluate and see how we can, look at growth there as well. Because as we are present in 50 countries and growing to 60 countries, we want to be leaders all over the world in home textiles.
Okay. And just some insights on how have been the domestic brand business trending so far, and what is the outlook that you're seeing for FY27?
So as we see our domestic brands growing, I think this year, Q4, we saw Welspun, which actually is looking at taking on the share of the unorganized segment, has grown by 44%. Spaces has grown by 19%. We definitely see a great opportunity. And we always say that, India is at an inflection point right now. And as we go forward, in the midterm, we are looking at around 1,000 crores coming in from our domestic market, along with our hospitality and the other segments of commercial in India. So yes, it is ready, and already our go-to-market strategies are clear, our distribution strategies. We are absolutely, on the ground, feet on the street, absolutely on the go.
Well, thank you, ma'am. Thank you for joining us and giving us the way forward for Welspun Living. Well, that was the management. 1,000 crore domestic revenue, 15,000 crore revenue, overall revenue guidance remains intact, and they plan to be net debt free very soon. So that's the key takeaway coming in from the management. From shifting focus from Welspun Living to overall markets, let's welcome in Sachin Shah, Executive Director and Fund Manager with MK Investment Managers. Sachin, to start off with, given that we are now at the fag end of the earnings, how has Q4 panned out, and which sector stood out for you, and which sectors were a key drag here?
Yeah, so I think overall I would say that Q4 earnings have been actually much better than feared. Clearly, most of the results are very, very good across sectors, whether it's automobiles, whether it's your banking space, whether it's private sector, public sector, even within the pharma space, whatever results that we've seen, all of them have actually been fairly good. Of course, IT services as a sector overall remains to be a bit muted. I think other than that, all the results, most of the company results have been fairly decent. They have been either in line or better than expectations. So there has been no major disappointment per se. But I think even more important, when we hear the management commentaries and the outlook for the for the next few quarters, I think what is very encouraging is that as far as the demand is concerned, the demand side is concerned, I think most of the managements believe that at the ground level, the demand seems to be very strong. The demand has come back after probably good 6, 7, 8 quarters. So I think that's a very positive sign. Of course, the only challenge that remains is in terms of your the raw material sourcing or the raw material inflation. So the entire supply chain challenges. I think those are the key things that everybody is a little bit worried about because to some extent the writing is on the wall. And how much will that actually impact the the end demand is the key question, because there is going to be inflation, there is going to be cost push inflation, there is going to be some supply chain challenges.
Right.
So the real worry is in terms of, can the demand still hold on?
Okay. As you were mentioning about the cost side, I just wanted to check with you, what is the FY27 earnings growth that you're penciling in, given the fact that crude and commodity prices continue to remain on the elevated levels?
Yeah, so the whole thing is a function of how quickly this Strait of Hormuz gets opened up and how quickly does the energy prices actually cool off. So suppose, just for argument's sake, if everything gets sorted in next 1 week, then yes, we will not have too much of challenges, is what we believe, maybe 1 quarter or so. But beyond that, I think the next 3 quarters, we believe that things should be much better. Because, again, what we are hearing and what we are seeing also at the ground level, that the manufacturers have also behaved very maturely, because they have not taken some very obscene kind of price hikes in terms of their product level, because they are also trying to manage that how can they allow the demand to not get distracted, or how can they allow this demand momentum to sustain. So I think that's the real key thing. So at this point in time, I think we are keeping our fingers crossed, and if things don't go too bad, or if things actually get better off quickly in sometime in this month, or early next month, then I don't think we are going to see a major impact beyond the first quarter, at least the next. All right, let's even if I have to be a little bit more conservative, I think the second half of FY27 should be a much better time, is what we believe at this point in time.
Right. Now, speaking about sectors now, you were talking about IT. Yes, the earnings were not that great, but we have already seen a significant fall in the share prices and the index. So do you think that the valuations are now attractive, or there could be further fall from the current levels as well?
Well, that's a very great question, I would say, at this juncture, particularly for the IT services, because the whole narrative against the IT continues in terms of the AI tsunami that we all are witnessing all around. But parallelly, what we are seeing is that today the stocks are available at probably 5% or 6% dividend yield. So the valuations, are they factoring in maybe 1 year or maybe 6 to 9 months kind of a very low growth? Because even today, if you see, some of the managements out there are fairly confident that their order inflows are very strong, and a lot of their business which is not happening is not to do so much with AI tsunami, but it's more to do with a lot of discretionary spending at their customer end being a little slow because of other external challenges, whether it's geopolitical, trade tariffs, the worry about the US economy having a hard landing about say 12-15 months back. So all of this was playing out, which is what has slowed down the discretionary spending. So as soon as probably that starts coming back, there is a good possibility that some bit of growth will actually come back in the IT companies, and then current valuations will look very, very reasonable or attractive. So yes, there is a case at this point in time where, and if you see even the last 1 week, IT services stocks have actually outperformed. If you see, the sector has actually given good 5% return.
Right. And lastly, just wanted to check with you on the banking side. Private banks have been underperforming for a very long time. Do you see this as a structural derating or a cyclical opportunity now?
We strongly believe that the private sector banking, particularly the leaders within that, today are at one of the best risk-reward valuations, the risk-adjusted returns, or even from a risk-reward ratio. I think they are at one of the best opportunities to invest for investors thinking with a 2-3 year horizon. Because if you see the valuations today for most of this large private sector banking, they are in the range of probably 16 to 20 times. And at the same time, we believe that they will grow at least 15% compounded for the next 2, 3, 4 years, because we've already seen credit growth also picking up quite significantly. The market share win by some of these banks is very decent, particularly on the deposit sides, and which is what to our mind is more critical, because that will lead to higher credit growth and better asset qualities. So to our mind, this is one of the best risk reward today in the markets.
Well, thank you, Sachin. Thank you for joining us and giving us your perspective on the markets and the sectors that we discussed. Well, banking is the best bet at this moment on risk-reward ratio is what Sachin's key takeaway is coming in. Now, shifting focus from markets to stock-specific action. Firstly, on TVS Motor. Right since the time the company has announced its investment in Jana Small Finance Bank, the street has been having two kinds of view. One of them is saying concerns on capital allocation, while other ones still believe that the valuations are quite cheap and it's not a big investment coming in. Let's get in, Puneet, to understand what is the bull versus bear scenario for TVS Motor.
Well, thank you for that. That's definitely the first bear scenario that we are putting through, that capital allocation concerns because of the investment in Jana Small Finance Bank could be one of the key triggers of what's impacted the stock from almost 3,800 to the sub 3,400 where it trades right now. But Morgan Stanley today released a note they are overweight with a tactical buy, target price of 4,327, and continue to feel that this is one of the preferred plays given what we are seeing as well in terms of stock price correction. When you look at the second case, that exactly continues that momentum. They feel that TVS should trade at a premium versus its peers given the broad-based portfolio that it offers and has been with scooters amongst others giving a key portfolio growth area. But Axis Securities on the other hand feels that the lack of well-defined capital allocation policy could remain a concern and bearing, and this could well be again happening with some other investment at this point of time. When you look at the third one, and that's focusing on Norton. Now, the reason why I'm focusing is that this company and this subsidiary was acquired way back in 2021. Subsequent investments have been made to launch a product portfolio, but the last 3 years have reported over losses of almost 1,000 crores. When you look at the launch pipeline now, Q2 of FY27, 5 years on, will be the first time we see a product for the company under the Norton brand, more global in nature. And while this will be a very big positive, you could see some more losses at least in the near term as well. And finally, the fourth key point on valuation, stock has corrected now, trading at 28 times FY28 price to earnings. But you have some other peers like Hero as well as Bajaj that trade in a much lower band as well. So there are some considerations for TVS always on its play on auto and the broad portfolio. But this is a fresh concern that investors will have to take a bullish call or a bearish call on, given what we are looking at from the company's perspective at this point of time.
Well, thank you, Puneet, for all that detail. Shifting focus to three counters that would now remain in focus. That's Trent, Shriram Finance and Hindalco. Now, this is on the back of Sensex reject that is expected to be announced anytime in the next couple of days. Now, this is the June 2026 reject. The announcement is expected by May 22nd tentatively, and the changes or the adjustments would happen on June 19th. So, as per brokerages or as per Nuvama analyst, Trent is one counter that is expected to move out of Sensex index, and this is largely because of a decline in its free float market capitalization following the recent underperformance in the share prices. And on the stock that could replace Trent here, there are two names that are propping out. Firstly is Shriram Finance, the second one is Hindalco. Now, analysts believe that for Hindalco, the chances are on the higher side, given the fact that index committee might prefer keeping a metal counter for broader sectoral representation within the BSE universe. Now, if that happens, then Hindalco could see an inflow of close to $366 million. But if Shriram Finance gets included, then Shriram Finance could see inflow of close to $445 million. On the flip side, Trent, which is expected to move out of the index, that could see an outflow of close to $257 million, which is nearly 4.4 times its 20-day average. So these are broadly the three counters. Trent will move out, either Shriram or Hindalco will come in, and the announcement is expected in the next couple of days. Now, if you look at the banks, HDFC Bank is embracing hybrid work. Now, the lender will now allow 2-day work from home for corporates and business teams. IndusInd Bank and Axis Bank too are incorporating the work from home model. Nimit is here with more details on this.
Yes, so absolutely. So after PM Modi's call earlier this month to conserve fuel, especially a lot of these private sector banks are now coming out and announcing policies whereby work from home hybrid policies are being put out. The most recent of that is HDFC Bank. Now what we understand is HDFC Bank has come out with a policy, a 2-day work from home policy for select employees. Remember, this is for non-customer facing roles, which is largely corporate employees, and enabling teams which do not have to face the customer front end to work from home, directly answer answering a call in response to what PM Modi asked for. Now, important to understand here that the customer-facing staff, as I said, will not be eligible for this work from home policy that continues. And remember, it's important to understand that 30 to 40% of all bank employees in general are non-customer facing. We'll come to those numbers in a bit, but that's an important number to understand the value or the amount of people that could be affected by this policy and the amount of fuel then that could be saved. If we move on from HDFC Bank now, we also have to understand that IndusInd and Axis Bank are also been rolling out these policies. For IndusInd specifically, early in May itself, they came out with a policy where they said that a trust-based people's practice is being put in place, and the same 2-day work from home policy has been put in place. Now, Axis Bank, for a matter of fact, has been just implementing their COVID era policies continuously since that point of time, where non-customer facing employees have been asked to work mandatory from office only for 2 days a week. Now, let's move from private banks and jump into public banks at this point of time. Now, while for public banks, there's no mandate yet from the government for work from home, but austerity measures have been announced by the Department of Financial Services. Now, what that says is for state-run financial institutions, including banks, insurance companies, and so on and so forth, curbs on foreign travel have been imposed, work from home policies have been asked to be implemented, and also a gradual transition to electric vehicles. Now, this includes the State Bank of India, one of the largest employers in the country, Bank of Baroda, the Life Insurance Corporation of India, and all these among the largest employers are being covered by this. Now, whether they come out with these policies, only time will tell, but the government push is already there, and it looks like they may answer to that. Another important point to understand here is they've been shift their physical meetings to consultations via video conferencing. A huge chunk of travel may be saved there. Now, important to understand the numbers here. Overall, HDFC employees and these are FY 2026 numbers, 2 lakh people. IndusInd Bank employs 44,974 people, while Axis Bank employs 1 lakh people, just over 1 lakh people. Now, if you take on average the 30-40% number that I had mentioned earlier, 30 to 40% on average are non-customer facing. What this brings us to is a total employee work from home policy that will apply to about 1 to 1.5 lakh employees, a substantial chunk of people who will now be working from home, a strong answer to the plea that PM Modi made earlier this month.
Well, thank you for all that detail on the work from home policy that banks are looking to implement. Well, shifting focus to top gainers on the F&O side, Zydus Life and Mankind Pharma are gaining on the back of Q4 results. What were the key factors that led to this kind of move? Let's get in Varsha with more details.
Well, let me start with Zydus Life Sciences. We all know that company has, posted a good set of numbers, and hence brokerages are bullish when it comes to this counter. Well, Macquarie has maintained outperform. They say that solid all-round beat when it comes to Zydus Life Sciences, upbeat guidance. They believe that new growth drivers should support upside, and they've raised FY28 EPS by 21%. Jefferies have also maintained a buy, and they have hiked target price, and they say that the US did better than expected, and FTF launches innovative portfolio and strong base to support growth. Talking about Mankind Pharma, again a good set of numbers. Domestic business, if you see, grew 13%. Chronic segment share increased to 40%, and cardiac grew 15% overall. A sequential recovery seen in acute therapies like gastro and VMN. While on the margin side, if you see, EBITDA margin is expected to has expanded to 26% versus 22%. This is led by better product mix and operating leverage. Export only grew 4% due to geopolitical headwinds, and company has launched 4 new products. So overall, a good set of numbers when it comes to Zydus, and hence brokerages are bullish, and Mankind also delivered a solid set of numbers, and hence you are seeing both the stocks gaining up in today.
Thank you, Varsha, for that extensive detail on both the counters. Well, that's all we have on the show today. Stay tuned and keep watching NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the NDTV Profit Market with all the action in the markets today. Sharad, it's an interesting day of trade overall because the moves in terms of Bank Nifty are still muted. The setup continues to remain weak overall, and if you see in terms of Nifty 50 as well, since opening we did see some bit of an uptick that did come in. There was a mild recovery, but I think that's something which is not sustainable, and you're still seeing that tug of war which has continued.
Well, that's true. Good afternoon, Hiral, and you're right, there is a tug of war happening. Recovery was there at play, but then it's slightly coming off, and we are near that flat levels there for Nifty. Let's see what's there for Nifty Bank. Of course, it's a lackluster day of trade. Not major action happening, and whatever it was trying to get that flat levels, it's still coming down as well. So strength is not coming in the market. Range bound movement is happening. So what are the key factors you should be watching out for? First one is, of course, the global and domestic cues are not offering any certainty. Because of that, we are seeing moves, on either sides. Markets are expected to remain volatile for both Nifty and Nifty Bank, but don't worry, it's still a stock-specific market. If you're a stock picker and earning trades related moves are happening on either side. Also, let's look at the other key factor, and that is a select buying is happening in the auto, capital goods, and of course OMCs. But the range is not very high. Earnings related range is much more on the higher side. Select midcap IT is showing strength for the third straight day. So that's a good, sign, at least for the midcap IT space. Apart from this, the rupee is near its record lows. It's already touched its record lows earlier in the opening. Little bit of recovery, but still in that lower levels. Yields is the biggest concern for Indian markets as well as global markets. Now the focus globally shifts to Nvidia's earnings tonight, and of course US FOMC minutes as well. What happens, and back in domestic markets, it's the earnings season. We are at the fag end of it. Three important Q4 earnings coming in. Apollo Hospitals on the positive side, while Grasim and Bosch are on the negative side. Their numbers are expected to come in as well. So it's largely going to be Hiral, a stock-specific market. Nothing major coming on the indices, and this is for the last 3 days. But yes, the overall sentiment is slightly on the negative side.
Yes, the overall sentiment is on the negative side, but today I wish a parlay was listed, Sharad, because if you see the visuals on the screens, the gift that Prime Minister Narendra Modi has actually given to Meloni, his dear friend as well, it is a packet of melody, and that's an interesting gift that I am looking at. It's an interesting combination that we've been talking about as well. But those are interesting visuals with Prime Minister Narendra Modi and Meloni.
Right, and not only that, Hiral, there is one in childhood, there used to be a saying, melody itni chocolatey kyun hai? And yes, we can see that now.
Melody itni chocolatey kyun hai? Exactly. It was the jingle that everyone remembers as well. And that's just an interesting tweet that we're picking up from, Prime Minister Narendra Modi as well. So far, a surprise gift for Giorgia Meloni that he has taken along with him to Italy. But let's get back to where markets go. In terms of what's on our watch list, Hindalco, a likely inclusion into Sensex is what you're looking out at. And the other thing is Novelis has reported numbers which have been pretty good, and that's the reason why the stock is seeing some smart moves. BEL as well. A weak, Q4 in terms of margins is why the stock is reacting in spite of brokerages being really positive. Zydus Life. International markets have been performing really well, and the EBITDA has missed estimates by 15% for API Industries. Mankind Pharma, a good number coming in there. PCBL Chemicals seeing some strong volumes. Olectra JBM Auto, there is a potential of a $1 billion aid that could be likely for the EV buses business. Z Entertainment, PTC India, Viyash Scientific, Dredging Corp, Apollo Hospitals, all of them reacting to numbers in today's session. And you have Grasim and Bosch, which are in focus ahead of Q4 numbers. So that's what is on our radar today. But Sharath, over to you to take the rapid fire with Gaurav Sharma of Globe Capital.
Well, thanks a lot, Hiral, for that. Good afternoon, Gaurav. It's always a pleasure to have you. And we'll start our rapid fire segment. And the first stock in focus is definitely going to be, Zydus Life. The stock has been reacting, and of course, on the numbers front. But technically, what do you think? There is a positive momentum likely to continue?
Hi, Sharath. Very good afternoon to you and to all the viewers of NDTV Profit. Thanks for having me today. The stock opened with a huge gap on the higher side, courtesy better results. Citing, I think, a further 2% cut from these levels will take it to a very attractive price point. So buy on dips is the strategy one should adopt for Zydus Life.
Right, and Gaurav, what about Mankind Pharma? Good numbers coming, especially from the domestic business, EBITDA beat as well. Do you think, is there any good risk-reward opportunity here?
Absolutely, Sharath. One of the least talked about pharma stock that is trading at a market cap of over 1 lakh crores. So it is a large cap pharma company now, looking very attractive at the current juncture. Any move towards 2460 is a good buying opportunity, as the stock has already rallied from 2200 to 2550 odd levels. So therefore, buy on dips is again what I'm suggesting. As of now, on the higher side, 2700 is the immediate upside level that one can look at.
Right. Apart from that, just wanted to understand Hindalco also. It's one of the top gainers also in the Nifty index. Just wanted to understand, there's a good medium-term setup looking like, especially on the weekly charts.
One of the top Nifty gainers today, and my hot favorites as well. The leading aluminium manufacturer, the way prices of aluminium has appreciated at MCX is advantageous for Hindalco. Novelis numbers again posted and boosted the positive sentiments. Even at these levels, stock is looking attractive. One can take a position at current levels only.
Right. Next stock is PCBL Chemicals. Very strong volume buying happening here. Just wanted to check, the overall volumes of this. And do you think there's some more follow-on buying likely in this counter?
Close to 8-9 times of volumes that this company has posted, whether it's the past 1 year, 1 month's average. Further up move towards 315 looks pretty much possible. Hold is the suggestion that I would give.
Right, and Gaurav, your views on Olectra, Green Tech and JBM Auto. There's a relief package likely of almost $1 billion coming in. But out of these two stocks, which one is a better placed?
Sharath, for these companies, the current situation automatically becomes very much suitable. 2 times rise in petrol diesel prices, 2 times rise in the gas prices, and these companies are in the business of battery makers, so they are in a naturally advantageous position. Both of them are equally good. A difficult choice to make. I'll still go with JBM Auto.
Gaurav, your view on Z, a very weak set of numbers coming in, the stock also taking a tanking. a good time to nibble for a kind of an up move going ahead, or do you think that there's further fall there? And if there is a further fall, what will be the stop loss?
It is better to get out of Z at the moment. More downside move is likely. Stop loss level has already been breached. Therefore, exit at market price is my suggestion. Further decline towards 77-75 zone looks pretty much possible in the immediate near term.
Right. Interesting counter Karnataka Bank, I'd like to point out. The stock was, showing a good positive momentum, but now you see a good spike is coming in this counter as well. Gaurav, your views on that?
I think this is specifically on today's move. This is institutional buying that I can sense, because a very, very large number of delivery volume, cash volume buying is being witnessed. Overall, the stock has done well. Hold is my suggestion with a stop at 255.
Right, and on the earnings front, the last one, both of them doing well. Turnaround quarter, Viyash Scientific. Earlier it was called Sequent Scientific, and Dredging Corp. Either of these two, anywhere you can see a good time to book profit in these counters, or do you think both of these counters are showing a good strength? One of them, what will be your option?
I stick with dredging at the moment. On the verge of a fresh breakout. 1150 is a breakout point where it actually tested that mark today as well. Once that is taken out, it will quickly run up towards 1300 and higher levels. So a hold on dredging corp.
And just before the earnings, Apollo Hospitals, Grasim, these two are there in the focus. They're both nifty companies. Either of them, where does the chart setup look good?
Apollo Hospital has been doing well. Clearly, no doubts. Although it is slightly on the valuations are on the little on the expensive side, but still one can hold on to the position because its past performance has really been good, and that arises hopes that the future going forward will be brighter for Apollo Hospital. So I'll stick with Apollo at the moment.
All right, that's the end of the rapid fire. But Hiral, what are the trending stocks which you are gathering?
Sharad, for that, thank you, Gaurav, as well, for joining us on the show. But in terms of Google Trends, let's quickly see what's on the list today. Yesterday, you had names like BEL, you had Bharat Forge as well. Today, you have IOC, Vodafone Idea, interesting names. Hindalco, for obvious reasons, you have nowhere. List numbers that have come in, as well as you have a likely inclusion that you're looking at. Zydus Wellness and a Tech M is also something which was trending in yesterday's session. So interesting trends that we're picking up on Google Trends so far. But moving on. CE Info Systems, a standout fourth quarter is what the company has delivered. Healthy revenue growth and margins have expanded sharply, but the stock seeing pressure at the day's lowest levels. 4.5% downtick is what you're seeing in terms of the counters so far. To talk to us about the quarter and the outlook going ahead, Rakesh Verma, co-founder, chairman and managing director at MapMy India, joins in. Mr. Verma, welcome to the show. Always a pleasure to speak to you at NDTV Profit. This is Hiral on this side. A strong Q4, strong revenue growth, and the growth has been led by map-led products, which is up nearly 100%. If you have to look at taking cues from the fourth quarter getting into FY27, what are you staring at?
Thank you for calling me here on the show. Well, Q4, as you rightly said, has been a bumper quarter. And it also has been an inflection point of our muted growth during the Q1, Q2, Q3. Now, the Q4 definitely is showing a trend what will happen in the future. With a strong order in hand, which is 1,750 crores, we are quite bullish about FY27.
Rakeshji, Sharad here. Just wanted to understand the outlook. If there is any outlook given, especially on your margin or the order book front, if you could just share that with us.
Sure. See, in Q4, our EBITDA margin was 45%. The entire year, the margin was 37%. We had given a guidance last year that our EBITDA margin will be 35% plus, and we achieved that objective. Coming to FY27 is your specific question. Without getting into the number this time, at the end one, we'll certainly give you guidance about the revenue growth and the EBITDA margin. But at this time, all I can say that both are looking very promising. And we do see that the Q4 pattern should continue going forward.
Okay, Mr. Verma, interesting insights there. But one concern I have is, if I'm looking at the sequential growth, which you said is giving you a trend going into future as well, but FY26 as a whole has been slightly muted, where your profits have declined by a little over 9%. Revenues have seen a degrowth of around 2.3% as well. So is there any structural growth issue that investors should be looking at? Because your year-on-year revenue growth has effectively plateaued. When can investors then expect a double-digit sequential growth if I have to look at it on a year-on-year basis?
Okay, year-on-year from Q1, you will see the growth happening because the Q4 has shown a trend. Now, if I look at the 5 years period since we issued the IPO, there has been a 25% year-on-year CAGR for revenue. There has been a 19-20% on the EBITDA CAGR year-on-year. 11% PAT year-on-year since IPO. See, this is what has happened. Last year, for the full year, yes, we had been talking about it from Q2, Q3, that it is muted for some of the consolidation phase we were going through. And we have taken care of that very nicely with making at the leadership level a very clear accountability, responsibility. And that has brought us to the stage where Q4, you see what has happened. So now all those things are left behind. Some of the revenues which we could not convert last year, and it was asked in earnings call also, without naming the accounts, we explained to them, investors, that look, these got delayed because of the customer side delay. Like an example I can quickly give you, if the vehicles are not ready, I cannot go and install an IoT device.
And Mr. Verma, the last question is on the AI front. I just like to add, what kind of integration is being done in this mapping industry? And if yes, what's the incremental benefits, if you can quantify that?
Well, AI is playing a role in multiple parts of our mapping business, if you want to know. Whether it is creating the what we say high definition maps, which is the future, and we are investing heavily into that. The high definition maps, just like we had the standard map so far for last 25 years, the AI is playing a big role in that high definition maps. AI is playing a role in improving productivity and bringing innovation in the platform service that we provide to our customers. Because you have heard the name PaaS, MaaS, and SaaS. So the focus on AI has increased because of the availability of lot of technologies now, and MapMyIndia is fully taking advantage of that.
Mr. Verma, the other question I have is 1,000 crore FY28 revenue target is that you have. FY26 around 470 odd crores. MapMyIndia will actually need to double its top line in the next 2 years if you have to achieve this target. Is this something which is achievable or realistic? Or do you think you will have to revise that guidance or vision downwards, number one? And two, in terms of your order book monetization as well, the pipeline is very strong at close to what, 1,750 odd crores. So what is that execution timeline that you're looking at?
Well, coming to the 1,000 crore guideline, that was given in 2023, 3 years back. All we are saying is 1,000 crore has not moved. That remains part of our roadmap. The timing might change, and I'm not able to say the timing will change. I'm saying possibility of the timing could be a deferment of, let's say, 1 more year.
Got it. All right, Mr. Verma, thank you so much for speaking to us and having that candid conversation as well. So that is Rakesh Verma, co-founder, chairman and managing director at MapMy India, talking to NDTV Profit, where the 1,000 crore roadmap, which the company had guided for in FY23 to be achievable in FY28, there is a potential or a possibility that it could be delayed as well by another 1 year. That's the word coming in there as we speak. In fact, let's get in Sachin Jasuja, Head of Equities, founding partner at Centricity Wealth Tech as well. Sachin, welcome to the show. My question to you is, you heard the management of MapMy India as well. The stock is under pressure in spite of a fantastic fourth quarter. Are you sensing trouble? Because 1,000 crores is what they said they will achieve by FY28. The management has said that there is a potential it could get delayed.
I mean, I don't see any trouble in that. Reason being, see, these kind of businesses who get a lot of customer data, that Internet of Things, tracking fleets, and some kind of signal of how the logistics market is also doing, because Flipkart and Amazon kind of clients they are having, and that market is doing well. So even if it is delayed by 1 year, let's say, so in next 2 years, if they are able to achieve 1,000 crore kind of sales, it is again more than 25% kind of CAGR. And see, valuations also have corrected a bit. I remember when the IPO came and the company used to trade in the zone of 75 to 80 kind of multiples. But now, yes, it has come down to that range of 30 to 40 multiple, growing by 20-25%, showing some signs of recovery also. Profit margins are fine. So looking at that scenario, and I was listening to management, so seems like for the future tech kind of a play where AI embedded services will go online, and the mapping services will be more refined on the productive basis. So from looking at that scenario, I think it can be explored, and it can be the dark.
That's an interesting view coming in, Sachin. But of course, let's focus on BEL also. Stock is falling in trade, it's down 3% but earnings came yesterday, but brokerages have a mixed reaction to it. And to give that all in perspective, we are joined in by Varsha. Varsha, hi. What are the brokerages talking about BEL?
Well, let me start with GS at Goldman Sachs. They've maintained buy, and they've with the target price of 475. What they're saying that the results were marginally miss on estimates, but though ahead of street expectation, FY27 order flow guidance, then execution trajectory remains the key focus. Also, order book remain healthy, implying a strong book-to-bill order of around 2.7 times, and the company surpassed most of its FY26 guidance while marginally missing capex guidance. While UBS has also maintained buy with target price of 500. According to them, FY26 was robust, seemed largely priced in. That means valuation not attractive according to them, and the commentary on FY27 guidance and order pipeline remains key when it comes to BEL.
Stay with us, Varsha. Just wanted to get a view on Sachin on BEL right now. Medium-term perspective, are there some more clouds coming in, or is there some clarity here?
So on the medium-term perspective, I think the only concern remains, the valuation part. See, all these companies have done really well, and we know that radar system, electronic management system, and the missile, these are the future, segments where the growth will come in the defense. And healthy numbers are that at least on the export side, they have grown by more than 30% year on year. Right. So it is only the valuation concern where we may see some consolidation into that segment. But if you talk about the segment of the defense, which is growing fast, whether it is data pattern or BEL or BDL, so that segment, I think, will continue to grow by more than 20%. And they have got the healthy order book of, I think, more than 75,000 crore. So again, it comes down to the execution. But overall, in the long run, it looks fine.
Okay, the counter looks fine, but one counter which is certainly not looking fine is PI Industries. Can we say it accident of the day, Varsha?
Well, I would say, Sharad, PI Industries, of course, the weak set of numbers, and they have missed their guidance for the 7th time out of 9 quarters. And, the performance impact was, of course, led by customer delivery schedules. Revenue impact that you're seeing is due to weak exports and domestic weakness. And the export decline is due to, a global agrochemical slowdown. And the key issues in domestic business were, of course, one, high inventory, which led to pricing erosion or pricing pricing pressure and lower crop acreage, and the weak volumes and realization in one of the key product also impacted sales. And EBITDA margin was also down sharply. This is big, which was below guidance of 25 to 27%. So overall, yes, weak set of numbers, but company is expecting good growth in FY27. But con call today at 3 o'clock and remains a key in focus. What guidance company will give?
Right, that's pretty much interesting. Thanks a lot, Varsha, for that. And we will be looking at the company, especially on their con call. But we are running out of time right now. And that's all, folks. But Hiral, anything new?
Yes, Sharad, one interesting company that we should be talking to right now, Deccan Gold Mines. They are sharpening its growth story with a fresh mineral discovery and improving financials. In fact, the company has identified nickel and copper deposits in Chhattisgarh, adding to its resource pipeline. To talk to us more on this business, we are now joined by Mr. Hanuma Prasad Modali, MD at Deccan Gold Mines. Mr. Modali, welcome to the show. Always a pleasure to speak to you as well. It's very interesting, and I think everyone is strongly awaiting as to Sona kab niklega or Sona kab dikhega. That's the story over here, because now we have Prime Minister Narendra Modi also, who has come out and said that imports are not really viable at the moment. We should be restricting that. So all eyes are on Deccan Gold. But before we speak about gold, talk to us about the nickel and copper discovery that you have made. I know it's just initial stages, but what are you looking at in terms of, exploration by the time to cross through the regulatory hurdles and get into revenue stage?
Well, thank you very much. Thanks for having me on this show. Obviously, we'll come to the gold part later. But in terms of this nickel discovery, it's very significant for us because there is a background to it. Like as a company, we have been doing a lot of research on this nickel, copper, platinum deposits in India, because as you know that India doesn't produce any nickel or even platinum, palladium. We do produce some copper, but we again depend heavily on the imports. So we have been doing a lot of research a couple of decades back, actually, to tell you. But this project, it's always on the radar of us. And in the 2020, post 2020s, when we got this through auction, and last year we got all the approvals in place for the exploration work. So immediately we started off the exploration. Last 6 months, we fast-tracked this project. We completed the geophysical surveys, ground surveys, and even three-dimensional geophysics were completed. And then we started up the drilling. I think it's I should congratulate our team. With the first few holes itself, we are able to see the nickel, copper, palladium mineralization in this area. So as on today, 7 drill holes we have completed, about 1,200 meters long mineralized zone has been identified. And I firmly believe this is going to be a key asset for the company. And we are going to fast track the drilling operations in the next few months. And in terms of timelines, in next 1 year or so, we have to lodge the mining lease application on this project. Of course, it's subject to various things in terms of drilling and other aspects of the project. But we are confident in next one year, we should be able to lodge the mining lease application, and then we'll take it forward from there.
Okay, so a year is the gestation where we will then start to get to hear numbers as well. We're running short of time, but Mr. Modali, what is in terms of gold? Because FY27, the production forecast is nearly 160 kgs in terms of the Kyrgyzstan outlook. And in financials, you're targeting 300 crores revenue, PAT near 100 crores, and attributable PAT to Deccan will be nearly 60 crores. Are you on track to achieve this?
Yes, we are on the track. Actually, from the next month itself, we'll start producing a small quantum of doré bar. And by end of July, the plant commissioning will be done. And I think from August, we are going to produce full stage in Kyrgyzstan. So that is going, we are on the track as far as the numbers and the timelines are concerned.
And what about the Junagiri gold mine? Forecast again is very strong. 900 crores in terms of revenue, EBITDA 630, PAT 470, and what is attributable profit to Deccan is what, 120 crores. So are we saying 120 plus 60, 180 crores is what we should be aiming at in terms of profitability from the company in FY27?
Yes,
and
definitely you're going to see that.
And no deviation there?
I don't foresee, unless the gold price drops significantly low, which I don't expect as well.
So tell me one thing. If the gold price drops, this is in terms of value terms is what you're seeing. In terms of quantity, how much are you forecasting in terms of Jonagiri as well?
See, Jonagiri, the Geomysore is expected to produce 600 kilos of gold next year. That is the FY27. And then in terms of Kyrgyzstan, we will be producing anywhere around 160 to 200 kilos of gold.
Okay.
So around 800 kilos, 750 to 800 kilos of gold that we are going to produce.
Okay, Mr. Modali, currently, I just have 20 seconds. Currently, how much are you producing?
It is only from Jonagiri, the trial production that has started. Like in the last quarter, I think we have shown some profit as well from those operations. Now, at a rate of around 30 kilos is being actually produced in Jonagiri, and also a small quantum, about a kilo or 2 kilos are going to be produced from next month onwards from Kyrgyzstan, but that will be ramped up to almost 30 kilos from August itself.
Okay, so interesting. Everyone's watching out for that. Thank you so much for joining in. Always a pleasure. Completely out of time. With that, it's a wrap on this edition of Trending Stocks from all of us on the show as well, and the ones who've put the show together. Thank you so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded.
Range-bound trade on the Lal Street. Nifty and Sensex trade in a narrow range with gains led by oil and gas and auto stocks. FMCG financial services, on the other hand, on the back foot. And India is lining up over $1 billion in incentives to accelerate electric buses and trucks, targeting private fleets over the next decade. Intercity operators could be the biggest beneficiaries as policymakers step up efforts to cut fossil fuel use and ease the energy crunch. Prime Minister Modi met Italian PM Giorgia Meloni in Rome. The two leaders held talks over dinner and discussed ways to deepen India-Italy ties across key sectors. Meanwhile, Russian President Putin reaches Beijing for a two-day visit to China to hold talks with his Chinese counterpart. Discussions on energy and trade on agenda, along with talks on geopolitical conflicts. Meanwhile, Putin will also be attending the BRICS summit in India in September. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. First things first, because you do have a little bit of a range-bound session that you're looking at, when you talk about the markets. When you talk about the broader indices, they seem to be mirroring benchmarks, just similar moves also coming in when you talk about mid caps and small caps, but a little bit of outperformance really being seen when it comes to mid caps. Small cap can't really say that. It's very similar to what you're seeing in terms of the picture coming in for the benchmarks as well. Now, when you talk about the sectoral picture, it's actually a very interesting sectoral picture right now, and not a little bit of a mixed setup that you're looking at. So oil and gas and energy and auto, realty, in exactly that order. Those are your top sectoral gainers. What's not doing so well is FMCG, metals, financial services, nifty, bank and IT from some of the major sectors as well. But let's also talk about some of the counters that are buzzing away in an otherwise tepid market. So something like a Felix Carbon, GE T&D India, some of those counters are buzzing away. And what's also doing well from within the Nifty 50 pack is a Hindalco, Reliance Industries also about a 2.5% uptick coming in. Bajaj Auto, M&M, ONGC, Wipro, Apollo Hospital, all of those counters up anywhere between about 1% to 3%. When you talk about the list of losers, something like a BEL after its numbers, Tata Steel, Nestle India, Tech Mahindra, Shriram Finance, Eternal as well as ITC. Those are some of the counters that are trading with a little bit of downtick at this point in time. That said, let's quickly take a look at the entire complex of commodities as well. Take a look at Brent prices, because they're hovering very close to that $110 a barrel level. That's something that you're seeing Brent also maintaining at this point in time as well. So that's something that you have right now in terms of Brent, with that $110 being maintained despite that nearly 1% downtick. That said, let's quickly take a look at all of these insights that we also have lined up for you on the show. In fact, Anuj Gupta, commodity expert, joining us on the show right now. Mr. Gupta, thank you so much for taking time out and joining us this afternoon. First things first, wanted to try and understand what you think about the path ahead when it comes to oil prices. Do you think that they're going to be breaking out of this sort of narrow range that we've been seeing of late?
Good afternoon. We have seen a very sharp range in crude oil prices. If we talk about the Brent, it is trading between 108 to 112, and there is no fresh news kind of thing where we can see some again a disruption between US and Iran. However, Iran sending some few points to the US to decide how to manage the war things, but still US is very aggressive. They don't want to agree on the points. I think that will impact on the crude oil. However, crude oil prices are not moving as so much, but yes, the long-term trend we are expecting on a positive side, and we are expecting it may test 112 to 115 levels.
Absolutely, and that makes perfect sense in terms of those levels also that could be tested here. But going forward, are you then penciling in higher for longer oil prices? Are you at all worried about the supply concerns that could still linger even if the war does screech to a halt?
Definitely, the state of Hormuz is the main concern, and the supplies towards the India are very low. That's why we have seen, sharp jump in the Brent crude oil prices. However, the drilling of the crude oil in the US is increasing, but the supply is main concern between India and Iran. And however, in almost all the Asian countries are, looking towards the more supplies from the state of Hormuz, but still it is not doing as per the requirement. So we have seen the supply disruption is there, and prices are moving towards higher side.
No, absolutely. And speaking of higher side, let's also talk about rising yields and the resultant impact that you're really seeing coming in for gold prices. How are you looking at that as well? Do you see a continuation of that trend as well? Because of late, gold prices have been quite susceptible to the kind of cues that they've been getting from a slightly stronger dollar as well as surging yields?
Yes, in last 2 days we have seen sharp selling in the bond by the US and the central banks, and after that we have seen a sharp increase in the bond yield. So that will impact on gold and the other investment class asset class. However, central banks are very keen or very know about the policy making on the interest side. However, they are expecting the interest rate will increase. If we check the Fed meter, they are giving almost 60% concession that the interest rate will increase in the coming Federal Reserve meeting. So that will impact on the other asset class. However, the inflation is the main concern, and due to the higher prices, we have seen inflation is going to increase. That's why we have seen that today China is not increased their interest rate, and even Bank of Japan is also looking to increase the interest rates.
No, absolutely. And something else that I also wanted to turn your attention to now, ETF inflows seem to be a little weak. You're looking at subdued investor participation. Do you think that if you're looking at fresh buys, you should be waiting for the dust to settle, or even if you have chips on the table as well, should you be waiting for the dust to settle before making new trades when it comes to gold?
I think currently people are waiting to buy gold and silver because there's a lots of ifs and buts after PM Narendra Modi announced that not to buy gold for the 1 year, and even there is lots of ban on gold import, silver import. That's why people are not keen to buy gold and silver at the right time at this now, because people are looking towards the survival point. They are save money for the future perspective. So I think now ETF is also looking on a very range bound momentum. There is no kind of positive trend. So I think it's a time to stay away from the gold and silver ETF.
No, absolutely. That's about the ETFs, right? But when you talk about the physical market, like you said, there's a lot of interest as well, and investors are awaiting some sort of cues. What do you think that they should be doing at this point in time?
I think the physical trader or physical investor should wait for some time, because the higher bond yield will impact on the gold prices, and also the higher interest will impact negatively on the gold prices. So we have to wait for the US data and the Federal Reserve meeting, where they will probably announce the interest rate hike in the coming meeting. So I think investors should wait not to buy aggressively gold and silver right now.
No, absolutely. And when you talk about silver as well, it's been quite interesting in terms of the week that it's had thus far and the kind of moves that we've been seeing now. Largely, you've been seeing it mirror gold as well. But when you just talk about the trend going forward, what are you then penciling in when it comes to silver?
Silver is the part of industrial metal, but due to this higher crude oil prices, the industries are not doing as earlier doing. So I think the demand of silver is also low, and also the investment demand is also going to low. In the physical market, there is lots of ifs and buts regarding the import of the silver. However, prices are elevated in the physical market, but due to the lower import side, international market is going down. Yesterday we saw the silver prices corrected by almost $3 and currently is trading around $73 per ounce. So I think in international market, there is no demand from the India side. That's the prices are correcting in international market.
Absolutely. And what are the kind of price levels that you're looking at when it comes to gold as well as silver? Anything that makes it to your radar in terms of key support and resistance levels here?
I think the $4,400 would be a very strong support for the gold side, and the 4,600. And we have seen in last 2 months that prices are trading between only this range. And in the silver, $70 per ounce is a very strong support level. If it's break this support level, then we'll saw again a sharp correction in the gold and silver.
No, absolutely. And thank you so much for taking time out and joining us this afternoon. So there you go. That's what you should be penciling in when it comes to gold, silver, as well as oil prices going forward as well. Wait for fresh buys. That's the word coming in from Mr. Gupta, because there's some cues, and a further surge in US yields also could really get those prices down for you if you're looking at fresh buys. That's the word coming in there. But let's also move on and talk about HDFC Bank that is embracing hybrid work. The lender will now allow 2-day work from home for corporate And even business teams, IndusInd Bank and Axis Bank even are jumping on this bandwagon, also incorporating the work from home model. Nimit, in fact, is standing by with some of those very important details, Nimit.
Yes, absolutely. Private banks have now joined together in concurring with PM Modi's plea for conserving fuel and doing a work from home policy that he's been asking India's corporates to do. Firstly, the news coming out today is HDFC Bank has rolled out a 2-day work from home policy for select employees. Now, what select employees here means is that non-customer facing employees. This includes corporate teams and enabling teams. Now, remember that largely the chunk to understand is 30 to 40% of all bank employees across the board are non-customer facing. Remember, they will review this hybrid work policy after a month. So this is specifically in response to PM Modi's plea here to conserve fuel wherever they can if possible. Important to understand that this is not the first bank to do it. There's IndusInd Bank has in fact done this earlier in May itself, where they rolled out a large employee policy for a 44,000 base. The IndusInd Bank says the move is aimed at trust-based people practices. This means it's going to be a trust-based. The infrastructure has broadly been in place since COVID. They have to now trust their employees to use it correctly. Also from Axis Bank, they've continued their COVID era policies where they've had a long-term hybrid policy going on. They've mandated only 2 days office attendance, and this is again for non-customer facing roles. For customer facing roles, which is about 60%, the work from office policy continues. Now let's move on to public sector banks. The center is yet to announce a mandatory work from home policy, but the Director of Financial Services has announced an austerity measure that comes in, which means that they're asking these banks and public sector companies, which includes LIC, SBI, one of the largest employers in the country, SBI, BOB, LIC, as you can see, to sort of take on PM Modi's message to shift reviews and consultations to video conferencing, also to implement a work from home policy. Now, the important thing as we freeze here for a bit is to understand the level at which this can work. HDFC Bank employs 2.1 lakh people. IndusInd Bank employs 45,000 people, and Axis Bank employs 1 lakh people. If you take that number of 30 to 40%, as you can see on your screen right here, that 30 to 40% of an overall 3.5 lakh people will come to a total employee base that can now work from home to 1 to 1.5 lakh people, a substantial chunk of the employee base at these banks.
No, absolutely, and thank you so much for putting that entire set of data as well together, Nimit. So there you go. That's the interesting update coming in on the work from home front as well from some of those banks as well. But let's also move on, talk about Labour Minister Mansukh Mandviya, who's, while speaking to the reporters, saying that EPFO subscribers will soon be able to withdraw their employees' provident fund and transfer it directly to their bank accounts through the UPI payment gateway. Let's also go across to Mahima, who's standing by with all of those important details.
Right, so good news definitely for PF investors per se, because anybody who's used the EPF website knows how cumbersome it is to kind of just go ahead and withdraw your own money, right? And this move comes after last year's announcement by EPFO that they'll be working with NPCI closely to kind of help those investors withdraw money very easily via using UPI. And the update is that the Labour Minister Mansukh Mandviya has said that the testing of the facility has been now completed and it will be soon available for a lot of EPFO investors. So certainly a very positive one, because earlier a lot of times these claims used to get rejected and then you had to again apply. So all those hassles will go away. Just that certain portion of EPF still will be frozen, and a large chunk of amount will be available to withdraw with UPI. So that's most certainly a very positive news coming in for PF investors.
No, absolutely. That's good news right there. Thank you so much, Mahima, for getting us all of those details. But let's also move on, take a look at something like a Z Entertainment as well, and that's in focus. Right now, the stock is down about 4.5% in trade as well. There you go, about 5% thereabout. Let's also talk about why the stock is down right now. In fact, Jasmeet is standing by with a verdict coming in from the brokerages then. Jasmeet.
Well, thank you for that. As rightly said, the stock is seeing pressure on the back of the Q4 earnings. Now, in the overall Q4 earnings, we do see that the ad revenue is something that really impacted the company, which came lower than the street was estimating, and that's what impacting the overall stock performance. Let's quickly understand the brokerage view. Most of them have been bearish on this particular counter and have also reduced the target price. Starting off with the first one, I have Axis Capital with me. They maintained the reduced rating while they hiked the target price by 4 rupees up to rupees 80 from earlier rupees 76. While what they say is they say the overall Q4 sees a miss on ads while the margins decline on the higher A&P. While the company also makes a note that the revenue came in 4% below what the CEO was estimating. Further, the ad revenue declined nearly 5% on QOQ basis. While this ad revenue is declined on the back of that West Asian crisis led to the overall FMCG reducing the ad expense and impacting the overall performance of the company. Now, while I also have the next brokerage, that's Nuvama, which maintains buy, but they cut the target price to rupees 112 from earlier 133. While they say that the overall EBITDA came below estimates, while the domestic ad revenue grew low single digit in Jan and Feb also, but in the month of March is something where there's some major issues coming in with the Middle East crisis. Well, I also have ICICI Securities where they maintain buy rating on this particular counter with the unchanged target price of rupees 120. While they say the overall improvement in the ad environment might be further delayed in the coming months as well. For the same reasons, they cut the overall expectations going ahead. Now, what they say is the overall network has improved for the company. The ZFi side of this is helping well for the company, but the ad side is something to worry about.
No, absolutely, and that worry seems to be reflecting on the stock price as well. Thank you so much, Jasmeet, for joining us with that update coming in terms of the brokerage verdict. So not only is the street not enthused about the numbers, brokerages are also not looking at it very bullishly. Let's also move on, talk about another counter that reported a rather weak set of numbers, PI Industries. That one is in focus on the back of missing estimates. When you talk about the stock down about 6.5% thereabout, you do have the revenue that's declined amid export weakness and softness in the domestic market. In fact, Varsha is standing by with the earnings fine print here.
So, everything depends on the commentary of FY27 because management is expecting, recovery from H2 FY27. But they, in last con call, they did said that sequentially, sales will be improved, which we are seeing. But again, the EBITDA has been, the guidance has been missed when it comes to EBITDA. And overall, there was a miss of estimates by 15%. The performance impact was led by customer delivery schedules, so number one. The revenue impact that you're seeing is because of weak exports and domestic softness, and the exports declined due to global agrochemical slowdown. And the key issues in domestic markets were, one is of course high inventory, which led to pricing pressure and lower crop acreage. And the weak volumes and realization was also seen in their CSM, which is one of the key molecules, which is pyroxsulfane, and the EBITDA margin was sharply down, which was below guidance of 25 to 27%. Now, talking about FY27, 5+ new molecules are planned to be launched. They're expecting a strong order book when it comes to overall segments, and the agrochemical recovery is expected with better demand and inventory normalization. Also, Pharma is expected to have positive momentum with new partnerships, and better pipeline visibility is expected in next 2 to 3 years. And they are cautiously optimistic when it comes to H2 FY27, but expecting a better growth in FY27. But they've not given any guidance yet. We do have con call at 3 o'clock where the key monitorables would be FY27 guidance and pyroxsulfane, revenues, and of course overall CSM growth, how the outlook would be.
No, absolutely, and thank you so much, Varsha, for getting us that roundup as well. So the FY27 commentary is quite upbeat, but failing to cheer up the counter. And out of the last 9 quarters, the company's missed estimates 7 times. Also something that is weighing on this particular counter. But speaking of some other companies as well, there's an entire list of companies that makes it to Shivam's radar right now. Shivam's joining in with all of those updates coming in on the back of news flow as well as earnings.
Well, yes, the first stock in our list today is Mangalore Refinery and Petrochemicals Limited, which is up around 2.3% as the company has received the authorization from Petroleum Natural Gas Regulatory Board for building, operating and expanding the petroleum and petroleum products pipeline. Now, the petroleum product pipeline will initiate from the place named Devangoti to existing and upcoming facilities inside the Kempegowda International Airport in Bangalore. And if we talk about the capacity of this pipeline, it will be be equal to 2.5 million metric tons per annum. Now, the timeline for the execution of the project is scheduled for 36 months. Second stock is Himadri Special Chemicals. The board has approved a further investment in Sicona Battery Technologies. The investment will be done through the compulsorily convertible notes. And prior to this, the company has also invested in the Sicona batteries. Now, the investment was done of 14.19 million Australian US dollars, and further the company will invest around 25.59 Australian US dollars. Now, the balance of the 16 lakh and 94,000 convertible notes is to be invested in further tranches, and these convertible notes will get converted to equity shares as per the agreed terms in upcoming period. Third stock is Karnataka Bank, which is up around 2%. The bank has released a good set of results for Q4, and their margins has improved on the back of higher share of low-cost deposits. The advances growth has also been led by the retail and agri loan segment, and the other income has shown a decline of around 7%, and due to the lower treasury income as the yields remain elevated. Also, the funding cost has seen improvement. The CASA ratio has also improved a lot in this quarter, and asset quality has also improved on higher recoveries and lower provisions. In terms of financial metrics too, the net interest income has seen a growth of around 8%. The provisions have also reduced to 90.3 crores, and the operating profit has also seen a stellar growth of 94%.
No, absolutely, and thank you so much, Shivam, for joining us with that entire list. So, on the back of that great set of numbers, Karnataka Bank up about 6.5%. But let's also talk about gig workers that are coming under increasing pressure. On that note, rising fuel costs, volatile payouts, and fewer incentives are really hitting their earnings, even as demand stays strong. Platforms are now tightening spends, focusing on profitability, and that's breaking the link between growth and hiring. In fact, Rishabh joining in with all of those important details. Rishabh.
Absolutely. What we're picking up in terms of the pressures that gig workers are facing is that with the fuel price hikes and also the sort of deferred incentive system that has come in because of the heat, there is some sort of pay pressure that these workers are facing. And this is despite the demand for their work and the work that they do and the sort of growth that quick commerce platforms are seeing. This is despite the sort of growth that we're witnessing there. What we're picking up is, of course, that across Blinkit, Zepto, Swiggy, Instamart, there are issues that are being flagged by these delivery executives around rising costs and the payouts not really meeting the expenses. What we're seeing is that apps are also reducing rider exposure. They're limiting order allocation during these peak afternoon heat hours. What we're also picking up is the fact that the rate cards remain unchanged. There is no sort of cut in pay there, but the sort of incentives that these delivery riders were earlier getting, that's not to be seen yet. What we're seeing is that they are also being incentivized to come in later in the evening or even during the night hours, and that is when they can earn a bit more, but that crucial day period is going to waste for them. What we're also seeing is that there is also the demand for gig workers that is continuing to rise, but supply is still trailing demand. This is, of course, according to TeamLease, which is a major staffing firm here in India. What TeamLease Senior Vice President A. Balasubramaniam has told me is also the fact that platforms are in consolidation phase, so they are no longer at a stage maybe a couple of years back when they would throw money at their problems, but they are at a consolidation phase. Either they're listed, so they are aiming for profitability, or they are going to be listed, so they want to be IPO ready. So that's the trend that we're seeing when it comes to the listed side of things as well. What we're seeing is that the aggressive sort of payout hikes that we saw earlier, those have also sort of been tempered down now. What we're seeing is also that the Q-commerce platforms are continuing to grow, and that is also hinging on the fact that they are delivering more and more higher worth items and not just grocery. It's moving to higher worth non-grocery items, and that's where a lot of this growth is coming for. So you don't necessarily need to hire more to deliver more in terms of value. What we're also seeing is that though there was a big worker shortage around the West Bengal elections, that is also tempered down. And the more serious shortages are being seen in the construction side rather than the side. So that's what we're picking up when it comes to India's geopolitical economy.
No, absolutely, and thank you so much, Rishabh, for helping us out with all of those details. Let's move on to some other updates. A nationwide strike called by the All India Organization of Chemists and Druggists yesterday has triggered concerns over possible disruptions in medicine access across several parts of the country. The protest, which is directed against online pharmacies and digital medicine delivery platforms, is being supported by multiple chemist associations and may impact lakhs of private medical stores. However, the centre and several state governments have assured patients that essential medicine access will continue going forward as well. But with that in mind, as we wrap up on this edition of Lunchtime Trades, let's take a look at global diplomacy that is taking centre stage with two high-stakes tracks unfolding. Now, PM Modi has kicked off his Italy visit with early engagement alongside Giorgia Meloni, setting the tone for deeper India-Europe ties. At the same time, all eyes are also on the Putin-Xi dialogue as well, coming right after a muted US-China engagement and with the Iran conflict still very much unresolved. 21 agreements is what you're going to be looking at being inked in this particular part of his visit as well. And Putin is also all set to visit India in September when it comes to the BRICS summit. So that is something that remains firmly in focus. But with that, we're completely out of time on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy-related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume or earnings as well. So what's on the show today? Firstly, we'll be speaking with the management of Blue Spring Enterprises. Now, if you look at the company's margins, they've expanded by nearly 100 basis points on a YOY basis. It was one of the acquisitions that led to this expansion in the margins. But what's the way forward is something that we'll try to decode with the management on the show today. Apart from that, we'll be also talking about stocks like KDDL, again strong revenue growth, volumes nearly 11 times its 20-day average. So what's been buzzing here is something that we'll try to get to you on the show. For Jai Bharat Maruti, the key trigger would be margin improvement going forward, and is that the reason why the stock has been buzzing in trade is something that we'll try to decode with our fundamental guest on the show today. And we'll be also speaking about Asian Energy. Again, strong order book, strong revenue growth. Even volumes are nearly 15 times its 20-day average. So what led to this strong beat in the numbers for Asian Energy is something that we'll discuss on the show. And lastly, it will be on Quality Pharma. The commentary that has come in from the management is quite strong post the Q4 numbers. Even in the last 5 trading sessions, the stock is up nearly 24%. Is there more room for further upside is something that we'll get to you from our fundamental guest on the show today. Now, if you look at the markets, the benchmark, that's largely the moves are largely sideways. We are not seeing any kind of a big downtick or uptick in the markets. Yes, we have seen a strong recovery from the day's lowest point, but for the last few hours, the market has largely been flat. But on the flip side, the Nifty Bank Index, that's down more than 200 points. Some weakness coming in here, specifically in the private bank names. On the sectoral side, if you look at the Nifty Oil and Gas, Nifty Energy and Nifty Auto are the gainers, up around 1% odd. On the losing side, we have consumer durables, FMCG and bank. As I was mentioning, it's down nearly 0.5% in trade. Even the small cap index, we are seeing some weakness coming in trade. But which are the key stocks here, Varsha, that have been buzzing?
Well, many stocks are actually buzzing on the back of earnings, I would say. Earnings and volumes, of course. You have United Food Brands, which is Barbecue Nation, is up on the back of earnings, and volumes are trading at 10 times of its 30-day average. You have Reading Corp, wherein the volumes are at 18 times of its 30-day average. Again, this is an earnings impact that we are seeing in Reading Corp also. Talking about Yasho Industries, well, after the company has came out with their Q4 numbers, stock has been running. Stock has been buzzing, and this is the second consecutive day where you're seeing that gain. The stock is up almost 11% in trade. RK Swami is also one of the stocks which is again buzzing on the back of volumes though. You have Neogen Chemicals and Asian Energy again in buzz. Asian Energy, of course, on the back of Q4 numbers. There you go. The stock is up almost 15% in trade. Well, on the losers side though, you have Atlanta, you have IFB, you have CRM and Copran. Atlanta has actually come, is on the positive side. IFB is down almost 5%, and CRM and Copran are also losing in trade. But one stock which is in focus is Blue Spring Enterprises, of course, on the back of Q4 FY26 numbers. But what lies ahead and what's the growth outlook when it comes to next 2 to 3 years? We are here to let us know that. We are here joined by Mr. Kamal Pal Hoda, who is CEO and Executive Director at Blue Spring Enterprises. Mr. Hoda, welcome at NDTV Profit. Always pleasure to have you. We have seen quarter on quarter, at least we are seeing the improvement in your EBITDA margin. What's the target when it comes to this margin for FY27? And also, if you could help us with the growth that you are expecting in terms of revenue in 27.
Thanks, Varsha, and always a pleasure to come on your show. We, like you said, we've consistently grown margins. This is our first year, full financial year for our listing. We started the year in the Q1 of FY26 at 3% and closed the year strongly at 4% plus EBITDA margins, which has been our stated guidance. When it comes to next year, this 4% we expect with the 2 acquisitions that we have announced. Organically, the business is right now at 4%. With these 2 inorganic growths, we hope we'll be able to touch close to around 5% margins as we progress through the year. In terms of revenue guidance, the current year we closed with double-digit revenue growth and EBITDA growth. And we want to maintain the same momentum in FY27. So from our organic businesses, we hope we'll be able to grow close to around 15% organically. And to top it up, the inorganic acquisitions that we have announced, which we are hopeful to close, one of them at least within the current month and one in the subsequent month. With both these acquisitions, the overall revenue growth is expected to be close to 30% on a full year basis in FY27.
Okay. Okay, the growth you're talking about now, just wanted to check with you on this front. Are you looking to do any more acquisitions in FY27, which would propel the growth further?
Sumit, first and foremost, we would want to obviously integrate both these acquisitions, both financially as well as culturally, into our organizations. What we've also demonstrated through these acquisitions is there's a lot of deal discipline that we follow in our acquisitions. So, first and foremost, obviously, we want to integrate these two assets. And if there are more quality assets which fall within our deal discipline guidelines, we'll definitely look at it.
Sir, I was just looking at your telecom business, which had an impact due to the pause in capex. When do you expect that recovery, and how strong can can this segment see growth post revival, maybe?
Yeah, so this business in last 3 years has close to 30% CAGR growth it has seen, except last year, which has been an exception because, like you mentioned, slowdown of capex and new network rollouts that the telecom players have put a pause button. Right now it's watching the space. At least one more telecom company is seeing a bit of a revival, and we are hopeful. There are significant capex is announced, at least one out of the 4 companies in the FY27. We believe this year would be a year of low double-digit revenue growth for our telecom vertical. And once, the 2 or 3 large players in the telecom space, they bring in the next cycle of rollouts for the new networks is when we'll again probably see close to 20% growth. But for the current year, FY27, we see a low double-digit growth in the telecom segment.
Okay, and when it comes to the food business, what is the kind of growth that you're penciling in, and is there scope for further margin expansion here?
Yeah, so food business is something that, Sumit, we are very bullish about. We're starting with a new central kitchen in Bangalore within the current Q1, which should enhance our revenue growth. And then, of course, is the acquisition of LSG, which is the in-flight catering kitchen that we have acquired at the Bangalore airport, which also should commence operations for us in Q2. So combined basis, we are targeting 20% plus growth in our food business. Our food business on a margin side is presently around 8% EBITDA margins. And we hope through these acquisitions and efficiency in our operations, we can probably be in a touching distance of double-digit EBITDA margin. So from 8%, we'd like to move more near to 10% in our food business.
Right. And the STEAG, I don't know if I'm pronouncing this correct, STEAG Energy Services, this brings international exposure. How aggressively would you want to, scale global business from here? What's the target or percentage target that you have when it comes to international business?
Yeah, Varsha. So it's a very important acquisition, and STEAG is a very respected name. The asset we acquired from STEAG Germany, which has been in business in power plant operations for last 90 years, and STEAG India itself has been a 25-year-old company. They do have international presence, a very large contract in one of the African countries where the entire country gets power from a single power plant, which is run by STEAG. And also some presence in Middle East and Vietnam as well. So this gives us a starting footprint in international business, and we would want to leverage our presence through STEAG in the African market and the Middle East market to take some early steps within FY27 for some of our other businesses, which is, let's say, into industrial asset management space, as well as into the facility management space. Like I said, this year is also a year where we want to integrate first these assets well into the organization, and then grow on back of a strong integration.
Okay. Last time I believe we had this conversation when you did mention that the acquisition of LSG Sky Chef that you have done, you will look to partner and look to open new centers. So can we see that in FY27, given the fact that you're expecting the acquisition to close very soon? Sorry.
Sumit, our intent obviously in FY27 would be to integrate LSG into Blue Spring. And through that, what we get is entry into an entry barrier segment, which is aviation. As you know, the aviation space in the country is expanding with 100 new airports to get operational over the course of next 5 years. So what it allows us is to go and participate as and when these airports come up for auction or bidding in terms of its kitchen operations. For FY27, we do not anticipate that we will be able to add more aviation kitchens beyond the existing kitchen that we have in Bangalore.
Right. And lastly, the STEAG, you said that this will add 20% to your top line. When this is expected, what are the timelines?
So STEAG acquisition, Varsha, we are hoping to close within this week. So the transaction should get over within this week. and the LSD acquisition should take another 30 to 45 days.
Understood. Well, thank you so much, Mr. Hoda, for joining in and having a conversation with us. Thank you so much.
Thank you.
Well, this was Blue Spring Enterprises, expecting 5% of EBITDA margin, going forward. Well, let us also invite our guest for the show, Narendra Solanki, who's Senior Vice President and Head Fundamental Research Investment Services at Anand Rathi. Narendra, welcome at NDTV Profit. You heard the management of Blue Spring Enterprises. We've seen quarter on quarter good margin expansion that the company has seen. What's your view when it comes to this counter, and what will you advise to the investors considering the valuations into picture?
Yeah, good afternoon. First of all, disclaimer, we do not have any recommendation or coverage on this particular stock. So whatever I have heard from the management right now, so the results have improved. Earlier in past 2 quarters, the results were not very much up to the mark, but this quarter the results have improved. The space in which company operates is a very growing space, and it's an emerging space wherein you would be seeing a lot of companies actually outsourcing a lot of facility management works. So be it manufacturing, be it hotels, hospitals, and airports, and even maybe in future railway stations, etc. So the space is very growing. So the runway for the growth for the company is very encouraging. Now it only depends upon what are the growth plans and how soon the company and the management can scale up their business and take up the challenges with respect to both revenue growth as well as operating profitability. And this kind of a business generally remains operates in a very tight margin space. So keeping a watch on operating metrics would be very crucial for the investors investing into this space. So I think if they are able to control their operating metrics and optimize their operating performance, then I think the stock should perform well going in.
Right, before we move on to our next small cap stock, let's get in Sharad to understand what's been buzzing on the F&O side.
Well, largely for the indices front, there is a lot of volatility here, and you can explain the range bound movement, but it's of course Reliance there. That's where a bit of up move is coming in from the Sensex. Looking at Bajaj Finserv and M&M also, that's where a good momentum is there. But what's not working, there's a pressure coming in at least in ICICI Bank, Tata Steel and BL as well. Right now also it's largely a flattish kind of a move coming in as market is not getting a proper direction. But let's see what's there in stock specific moves in our radar. We have long build up for Hitachi Energy and Mankind Pharma. Interestingly, some select capital goods stocks are doing really well. Of course, Mankind Pharma is on the back of earnings. Short build up is coming up. Actually, this is a recovery happening, so this is a minor error. ABB is also seeing a good momentum here. Long unwinding, no major trade to be made. ICICI Pru, little bit of selling pressure continues from the second trading session as well. And lastly, I'd like to point up short cover. Actually, this is a short build up here. So there's a mix up here. Got Phillip and PI Industries. That is where a big sell off is happening, especially on PI Industries. But do remember, there's a con call also. You might see reversals or volatility in this counter as well. So these are the stocks which should be on your radar.
Right. Well, thank you so much, Sharad, for all the details. But viewers, don't go anywhere. Time for a quick short break. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what.
Welcome back. You're watching Small Cap Buzzers. Well, KDDL Limited is one of the stocks which is in focus. Let's pull up that chart as well. The stock is up 20% in trade, and this is on the back of Q4 numbers. But let's bring in Jasmeet to give us key details on the performance.
Well, thank you for that. Before we go into the key performance of the quarter of this particular account, let's quickly understand what does the company do. Well, the company operates as a watch component manufacturer and also is into precise engineering and luxury retail of watches. Now, if you look at the key three segments the company operates, is basically is into precise engineering of watches and also the luxury retail. Now, if you look at the Q4, company did a really good performance in the Q4. We see a strong set of numbers coming in, where the revenue and EBITDA saw a double-digit uptick, and even the profit ended on a green itself. So this is for the first time in FY26 where the company crosses the 2,000 crore revenue mark. Now, if you look at the key takeaways of this particular quarter, we see the strongest ever revenue growth in terms of the quarterly revenue. Further, we also see that the company sees the demand of Japanese brand rising, and the company targets to at least reach by 10 to 15% of compounded growth each year in next 5 to 7 years. While the company also gives an outlook for the Swiss demand, where they estimate between 20 to 25% of compounded growth in next 5 to 7 years. While lastly, they also see a high export potential in terms of Swiss watches and digital jewelry brand, and a target roughly 80 to 100 crore in the next 5 to 7 years. If you look at the key numbers, the overall revenue is up 37% and had reached the 575 crore mark. Further, the EBITDA is at 95 odd crores, up nearly 25 odd percent, and the PAT is an uptick of 9.4 odd percent and is currently at 34.5 odd crores. So all you want to do is a good set of numbers, and that's the reason stock is buzzing in trade today. It's about 20 odd percent.
Thank you so much, Jasmeet, for all the details. Narendra, what's your view when it comes to KDDL now? Considering the Q4 numbers and the stock is up 20%, what should investors do? Should they book profit, or should they hold it?
Yeah, again, we do not have any recommendation or coverage on this, but coming to the results, definitely the growth in the revenues was very impressive for the company, and this luxury space is very encouraging, and the consumer consumption patterns are also gradually moving towards consuming more luxurious item. Plus, the company also has a strong export opportunity of watch components. So I think that is the space where the company may perform well in terms of raising their exports. So if they continue to improve that performance, then I think it should perform really well for next further quarters.
Next stock in focus is Jai Bharat Maruti. Now, what could be the key triggers going forward for this counter? Let's get in Puneet to understand those in details.
Well, thank you for that. It's another stock that's locked in upper circuit today, and on the back of its quarterly results as well. So last 1 year also has been a decent performance, up 48% in the last 1 year. And the 5-year performance has been slightly, in par, essentially at up about 62%. So the return profile has been decent for the company. When you look at, some of the key triggers has been on margin improvement, which has been seen in this particular quarter. You've also seen a higher sale of volumes by Maruti Suzuki, and Jai Bharat Maruti as the name suggests, is one of the key suppliers as well. And you've seen a relatively better sales volume, and that has helped the company in its utilization as well at this point of time. Now, let me go across just the Q4 numbers. Revenue is up 25% at 766 crore. EBITDA, though, is up 78%, and there's been almost 340 basis point margin improvement coming in at 11.8%, and profits is up 3x at 79 crore versus 20 crores, but there was a 36 crore deferred tax benefit in this particular quarter. As mentioned, Maruti Suzuki had one of the strongest quarters in Q4, ending the FY26 GST-led era very strongly as well. But what is essential for this company is that they are also investing in phase 2 in their Kharkhoda plant that will help Maruti in its supplies as well. So the tune of investment is roughly 170 crores, and this will be done in 2 phases. And they've also approved another 350 crores for their other manufacturing plant as well. And these will be done in Haryana as well as in Gujarat for supporting the Maruti Suzuki volume. But overall, good Q4, and the streets also liking the fact that the margin improvement has finally come in this quarter.
Narendra, any view on Jai Bharat Maruti?
Yeah, again, do not have any coverage, but yeah, we definitely like the auto ancillary space, and the space is showing good growth numbers. Now coming to the company, I think the company has reported decent results in this quarterly release. However, if you compare on the valuation metrics, the stocks stands at a significant discount to its other peers. However, on an annual basis, the growth has been subdued. I think the new capex plan which the company is focusing on should bring in new revenue streams, which could also improve both in terms of operating efficiency as well as in revenue. And then maybe further we can see some amount of re-rating happening with this stock going forward.
Right. Well, moving on, Asian Energy, let's pull up that chart also. The stock is buzzing on the back of Q4 numbers. Strong numbers, revenue was up almost 57%. There you go, the stock is up 13% in trade. Even company has a strong order book of around 1,750 crore and volumes are buzzing at 15x. But how were the numbers and how did the company perform? Let's bring in Shivam for more details.
Well, yes, Asian Energy has been up around 14%, and the stock has touched around 8 months intraday high. And also this is on the back of the Q4 numbers where the revenue of the company has gone up by 57%. The EBITDA of the company has increased by 46%, and PAT has also seen a substantial growth of around 45%. Now the segmental performance, if we talk about the segmental performance, the oil and gas segment has done pretty well and has seen a substantial growth. The 68% of the current order book is coming from the oil and gas segments, and this supports the revenue visibility for further period. Now the facilities at Indora and Mewad has also seen a ramp up, and which is expected to drive the incremental revenue and the EBITDA growth from FY27 onwards. In case of mineral and other energy services, the revenue and EBITDA will pick up from FY27 with the execution of MCL Lakhanpur CHP project. Now looking at the few positive factors for the company going forward is the strong order book and inflow, where the oil and gas services is emerging as a key growth driver, and MCL Lakhanpur CHP project, as I mentioned, will create an opportunity in coal and material handling solutions. On the consolidation and expansion side, the Kuiper acquisition has been beneficial for the company as it provides a presence across the Middle East and Southeast Asia, and currently the company generates around 60 to 70 million US dollars, which is expected to increase to $100 million by FY29. And Olimax merger and assets has also been one of the key factors, as the merger is expected in FY27, which will add upstream assets of oil and gas, and this will bring 5 oil gas blocks and 1 CBM asset and 70 million barrels of hydrocarbon reserves. Currently, the current production of the company is around 2,500 barrels barrels of oil per day. Now, the post-merger, the company targets around 10,000 barrels of oil per day by FY29 and FY30. Now, other key points which need to be noted is that the company's focus is on increasing production on current fields and aim to bring other fields into production too.
Right. Well, thank you so much, Shivam, for all those details. Well, moving on, Quality Pharma, let's pull up that stock as well. I think it has come it's just up 4%, but this is on the back of strong con call that the company has, or rather the strong commentary that the company has given in con call. So first of all, talking about the guidance, so FY27 revenue guidance has been around 650 to 700 crore, which is termed as conservative by the management though. FY27 PAT is expected at 100 crore, no change in guidance over here. FY28 revenue is expected at around 1000 crore. So strong numbers is expected when it comes to this counter. Now, company has received 4 registration in Europe. Announcement is expected by May end to mid-June, and companies gradually, shifting from unregulated or semi-regulated market to regulated market, which has a higher margin. Now, onto the growth visibility, FY27 of Q3 and Q4 quarterly revenue may cross 170 crore, and post that the revenue may reach 250 crore level by FY28. Onto the margin drivers, where margin improvement will be driven by shift of high margin segments, focuses on peptides, oncology and biologics, and the oncology contribution already 25% of total revenue. So overall, a strong number we have seen in this counter, and a strong commentary is also coming from the management. So overall, this is why we are seeing the stock is up almost 4%. But with that, this is all the time that we have on this edition of Small Cap Buzzer. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all your stock related queries. So do start sending them if you haven't already on the WhatsApp number that's flashing on the top of your screen. You can also call us, speak to us, as well as our guest who will be solving those stock related queries as well. But before we do that, a very quick check of how the markets are doing, because we started off the morning with just only one Nifty 50 stock which was in the green. In the morning edition, we highlighted there was some green visible, and if you can pull up the heat map of the Nifty 50, that will show you where we've gotten today. So from just about one stock, we've now at least comfortably got into a 50-50 ratio. 25 stocks in the green. The 25th, which is Tata Motors PV, trying its best to stay there at this point of time, but it's been a day of recovery essentially. You've seen Hindalco continuing to be one of the biggest gainers for today, and it has been throughout the day. Bajaj Auto, Bajaj Finserv, Reliance Industries, Apollo Hospitals and Wipro are some of the other names that are still doing well and continue to do well in today's trading session. But pull up the heat map for the sectoral index also, and that'll show you that oil and gas, energy, auto as well as infra continues to do well. But from the morning, it's a much better green screen right now, and the advanced decline also, just to get you that perspective for the broader markets, because we started off the morning with essentially no triggers on the positive side. So throughout the day, try to mitigate that in terms of the gainers. They're getting there, but still almost a 300 stock difference between them at this point of time as well. And in terms of the individual movers, BSE 500 finally as well, lots of action essentially on what we're seeing on stock specific action because of results amongst others. Tata Communication is one where you've seen a change essentially in management, and that's driving the stock up today. PCBL and Bajaj Auto now also, Balaji Mines, Hitachi Energy and Raymond are some of the other gainers in today's trading session. PI Industries continues to be down and out today as well, and the conference call is at 3 p.m. so you do tune in for that as well. We'll cut to it, get you that perspective also. Z Entertainment, after a lackluster result and so much bearish momentum on this counter, there's essentially been a very lack of earnings essentially at this point of time as well. But let me go across and introduce our guest who will be solving your stock related queries. Avinash Gorakhshakar, the founder and head research of Avinash Mentor Research Services, now joining in on the fundamentals, and we have Sachin Janardhan, independent market expert on the technicals. Both of you, thanks so much for joining in. Let me go across and start with the stock related queries, and we have a caller from Chennai, and Lakshmi is joining in for the same. Lakshmi, very good afternoon to you. Welcome to the show. What's your query?
Very good afternoon to all of you, sir. So I'm having hello. I'm having
yes,
SMS Pharma.
You're audible, Lakshmi. Go ahead.
Yeah, I'm having SMS Pharma at 831 quantity at 390 average.
Okay.
So what is the long term and short term view on this?
And did you see the fundamentals for this particular counter when you bought into it, or did you see the charts, Lakshmi?
Yes, charts only, sir.
Charts only. Got it. Well, Sachin, good afternoon. Welcome to the show. What's your view on SMS Pharma? Lakshmi's bought her at 390. Should she continue to hold?
I think very good afternoon to all of you, and congratulations to basically the viewer, because I rarely find people taking their own calls, and that too the trend of the stock, especially SMS Pharma, is up on all the time frames, daily, weekly and monthly. So she can hold the stock, there is no problem. And what I can see on the charts is it has already surpassed its 52-week high and all-time high as well. And we can see 500 and 600 levels from a medium-term to long-term perspective.
That's the view on SMS Pharma. But the next question coming in on Apollo Tyres, and this is Jatin who's writing to us from Chandigarh. He wants to know, Avinash, that he's bought shares at 440. Should he still continue to hold for the next 6 months to a year? What would you recommend here? It's been a difficult time for commodities, largely because of what we've seen in the crude oil prices. So the tire stocks could see an impact. What's your view post quarter four? Any view?
No, I think, see, numbers for quarter four, Puneet, have been quite good. The management commentary has also been quite positive. But I think, clearly the first quarter of FY 26-27 is going to be a little difficult year, because as all of you agree, crude prices have gone up, the rupee has depreciated. So I think there could be a little bit of margin pressure which could be visible in the first quarter of FY27. But I think if the investor can hold on for the next, say, 12 to 15 months, hopefully once the geopolitical situation improves, crude prices start cooling off, then I think, the domestic passenger car and the commercial vehicle sector where Apollo Tyres is largely present is definitely going to grow at a very healthy pace. So my sense is, he can even average at the current level, but he needs to keep a time frame of 12 to 15 months and stay invested here.
Got that view of Avinash, but let's go across, take another query from Amchi Mumbai itself, and Jigar has a question for us. Jigar, very good morning, or very good afternoon to you. What's your query?
Hi, Puneet, good afternoon.
Good afternoon.
My query is on JSW Steel.
Okay.
I have 50 shares at about 1,027.
Okay.
I want to hold them for around 6-9 months. I want to add more.
Okay.
I'm not sure exactly at what levels to add. And also, can you ask the same thing to Parag Thakkar in the morning show?
I'll try to get that out, Jigar, but no promises there as well. But so you want a view, basically you want to add more, and this would be a chartistic view, right, Jigar?
Yes, that's right.
Got it. Sachin, on JSW Steel, you've seen actually a momentum on all these commodity plays. Is it still a good time to enter for Jigar?
Yes, he can add because the stock structure is very good on the daily, weekly and monthly time frame. And overall, what we can see, it is making higher and higher low patterns. So what we can see is on the upside 1375 and 1466. These are the targets which he can actually target for.
Got it. Well, the next question, and this one's an internal question that we continue to answer and take on the show, and it's on HDFC Bank. Our viewer Arvind Manjeshwar is holding some shares of this counter, and he wants to know if it's advisable to add more at the current trade. Avinash, every time we asked you this question, you'd be a very rich man if you got $1 every time we asked you. But just in terms of the performance, it's gone to 800 and come back to that 750 or level. Is it still a good buy, a good long-term bet?
See, Puneet, I think clearly HDFC Bank has not been a great market performer. And I think post the consolidation with HDFC, I think it will take some more time before the stock starts moving up into an upward trajectory. I think at least for the next 2 quarters, I don't think there are going to be any major triggers. If the investor has got a 2-year kind of call, then I think he can definitely add more. But there are many other alternative banks, something like a ICICI Bank or an Axis Bank, or from PSU banks, something like Canara Bank. I think the market always rewards growth in a much better way. As far as HDFC Bank is concerned, somehow post the Q4 numbers, the markets were not very happy with the numbers. If you look at ICICI Bank or Axis Bank, typically these banks were, more favored because the growth portion looks much better. So if he has a time frame of 2 to 3 years, he can add slowly in a staggered manner. But I think private sector banks like ICICI and Axis could give him a better alpha.
Better alpha there is what Avinash recommends. So hopefully that answers your question. But let's go across, take another caller now from Agra. And Gary is now joining in for a stock query. Gary, good afternoon. What's your question?
Hi, good afternoon. I'm holding about 10,000 shares of Vodafone Idea at just about 10 rupees. So is it a good time to sell, hold or accumulate more? I have a long-term perspective of about 2 to 3 years.
2 to 3 years. Got it. Well, Avinash, then let me come back to you because, another retail favorite stock in that sense, you've seen that murmurs potentially of potential fundraise that they may be doing. We saw the warrants also of 4,700 crores being announced in this quarter. Do you think finally there's something to look forward to, Avinash? And what's your view for Gary? Should he book out some gains right now because he is in some gains of almost 35,000 rupees? What's your view?
No, I think my sense is at least 20-25%, he's made a 30% kind of gain. And this gain has happened in a very short period of time. Obviously, the news flow and the narrative has been playing out. So I would say that, maybe 20 or 25% he can book out and he can hold on for the next, maybe 12 to 18 months. Because clearly, the bigger challenge for Vodafone is subscriber additions and secondly, reducing the debt on the books. Once the company starts making operating operating profit at the net level, then I think things could improve. But I think that may take a couple of quarters and they're planning another equity issue. So, we'll have to see what the capital structure of the business finally emerges because typically when the equity capital expands to a large level, then incremental gains on the stock price looks to be a little difficult. So I would say 25-30% he can book out and the rest he can hold for the next 12 to 18 months.
Got that view, Avinash. So hopefully, Gary, that answers your question. The next one coming in now, this one's again a very, very pertinent question at this point of time, and it is on Kaynes Technologies. Now, you saw the 19% downtake on the results last week. We also had a chance to speak to the management, and they have affirmed a few targets, but our viewer has bought shares at 3957. This is Chandan from Bangalore. So he's sitting on deep losses at this point of time. But Avinash, what would you recommend? Because he's bought almost 4,000 shares at a similar value of 4,000 rupees. So it's a very big chunk of investments he's done here. And the stock has corrected majorly from that level. Now, firstly, what did you make of the results, what the management commentary, and what would you recommend Chandan to do?
No, I think, Q4 numbers were disappointing because obviously the numbers were not up to street expectations. And earlier there was some corporate governance issues, which led to a little bit of selling on the stock. After that, the management clarified that everything is okay and there are no other corporate governance issues. But I think the fourth quarter numbers was disappointing. And I think now going forward, unless we see growth coming back, maybe in the first quarter of FY 26-27 and thereafter, then only we could see a gradual re-rating. So, if the investor has to make a decent risk reward, then I think he needs to take a long-term view of at least 18 to 24 months. These kind of stocks, Puneet, the bigger problem is they have always traded at a very expensive valuations. And therefore, any negative surprise if it comes in, the market, obviously punishes these stocks very badly. And that is exactly what has happened in case. So my sense is, if you have a 2-year kind of time frame, then stay invested. It's a good business, good management, but I think the damage has been done. And it will take some time before, the stock recovers again.
Got that view. But, let's go across and take another question now. This is from Shankar from Bangalore. And he wants to know, on Websol Solar, if it's a good time to buy 500 shares. It's a smaller counter here, Sachin. What would be your view?
The stock actually is in a process to change the trend from down to up. Let it happen. Basically, I would recommend to give a stop loss of 90 rupees. If the stock is trading above 90, then that is good. The challenge is on the upside here, there are multiple resistance like 125, 128, 130. So these levels, I don't feel the stock will take out in one go only. So it is actually a process of changing the trend. So it might take 1.5 months or 2 months to change the trend fully. So he can hold with a stop loss of 90 best.
Got that view, but let's go across, take another question now. This one, again, one of the casualties of the day, essentially on PI Industries. And, our viewer, Sriram from Chennai, has bought shares at 2,300. So the stock is PI Industries. We'll change that plate right now. But let's pull up the stock firstly. It's down 6.5%, 7% now. And, Avinash, reacting to results, of course, a lot more to watch out for in the con call today at 3 p.m. But how did you view the results, and is there something that you're watching out for?
No, definitely. I think, margins have been affected, and I think the numbers were very disappointing. So I think, Puneet, in today's conference call, market would definitely like to know what's the kind of growth trajectory the management is outlining for the next financial year. And will the fourth quarter performance be considered to be a one-off? Clearly, the company has a very strong presence in the agrochemical and the contract research, segment. In both these segments, we expect growth to, definitely grow in the next financial year. But I think hopefully what's the outlook of the management on the margins, on the top line growth, these things have to be understood and clearly, spoken at. And only then I think one can take a fresh review. So I think as of now, if the investor is holding on to the stock, it's better to hold. But once the conference call is over, I think you will get a better assessment of how the stock will behave in the near term.
Got that view, Avinash, and thanks so much for that view. Let's go across, take another caller from Hyderabad, and Anjani has a stock query for us. Anjani, very good afternoon to you. What's your query?
Yeah, very good afternoon, all of you, sir. I wanted to buy NMDT.
Okay.
Okay, what is the price to enter for long term and short term? And what is the target, sir?
Got it. And are you looking at the charts right now, Anjani, for this one, or are you looking at the fundamentals?
Charts only, sir.
Charts only, sir. Got it. Sachin, coming back to you on NMDC, is it a good time to enter? And if not, what would be the good time then? Any targets that you have for the near to medium term?
So she can enter partly right now, and on the support levels of 86 levels, she can rest of the she can enter. Overall, it will be a retest of breakout levels, and the targets will be 113 and 131 levels on the upside.
Got it. Also, Sachin, another one on Cohan's Life. Our viewers, Gaurav from Bangalore wants to know a good entry price. Again, a very volatile counter. You've seen a management change, and that did give some returns from the lows. But anything on the charts that you're looking at right now?
Stock is in a downtrend on all the time frames, basically on a daily, weekly, and monthly time frames, and continuously making a lower high and lower low pattern. So we will avoid such stocks wherein this is actually a disaster for investors, because it will destroy the wealth of investors, because every time it gets a bounce, so that leads to a bull trap, and especially on a good news, when the trend is down, it's a disaster recipe for investors. So avoid such stocks.
Got it. Well, a very strong opinion there, Sachin. But Avinash, just if I can just pose this question to you as well on Cohan's, because we saw that big run up from the lows for this counter, where there was a management change, ex-Cipla MD Umang Vora coming in. Results Q4 was a washout. But the question largely being, should investors wait for some commentary, some key aspect to watch from Umang? Because within Pharma, you can't have a change in a quarter or two, right? So would that be your opinion as well, as Sachin has highlighted, in terms of challenges on the technicals, continuing on the fundamentals? What's your opinion?
No, I think the stock will struggle in the near term, Puneet, and I think we need to get little more clarity from the management. And I would not be surprised that over the long term, the structural story remains positive. But in the very near term, at least for the next 1 or 2 quarters, we'll have to be very watchful as to how the company delivers on the ground and what's the kind of commentary, from the current management. So unless that comes in, the stock is going to remain in a very sideways kind of movement. Any near-term upside will depend on the commentary and the delivery of the numbers. So I think, whoever has got the stock should hold on. But fresh buying can be advisable only when you get these inputs from the management.
Fair point, Avinash, but let's go across and start our rapid fire round in this edition of Ask Profit. Avinash as well as Sachin, keep your answers as short as possible. The first one coming in from Tushar, he's holding K Fintech at 1030. So Avinash, he's down 20% from those levels and asking if he should continue to hold for the next 1 year.
Yeah, I think continue to hold.
The next one's coming in on Avalon Tech. Nomura initiated coverage, Avinash, on this one. Is there a pick that you're looking out in the EMS space right now for the next 1 to 2 years?
Yeah, I think from a 2-year perspective, one should hold on.
Next question coming in from Raghavendra Kumar from Bangalore. He's bought into Apollo Micro, but at 343. Asking Avinash, what should he do with his 800 shares? Is it a good time to take profits, or is being a defense play, it's a good one in the long term?
So I think company posted very strong numbers for Q4. I think very strong EBITDA margin. So continue to hold. I think the next financial year should be much better. So I would say he'll get a better risk reward if he can hold on for another one.
Got it. Well, Piyush Rai actually is holding on to Finolex Cables at 1145. Sachin, should he continue to hold or book out?
Finolex Cable overall trend is good. He can hold.
Hero MotoCorp bought at 5,444 about 5 to 6 months ago. Is it a good time to average, Avinash, or are you looking at some other two-wheeler play?
I think my guess is Hero Motor can be added. My sense is, the next financial year hopefully should be good. Monsoon is a very important factor, and I think rural demand, if it picks up, definitely the numbers should be better.
Got it. Well, the next question now coming in, it's on Siemens, bought at 2850, about 100 shares. Is it a good time to continue holding Sachin or book out?
He can hold. Basically, today is actually a good breakout levels. He can hold. There's no problem.
Got it. The next question that's coming in, it's on Cupid. Bought at around 119. Sachin, should he continue to hold?
The trend is good. He can hold.
On Muthoot Finance also, Sachin, is it a good time to buy for the next 3 months? Is what Dilip is asking.
Muthoot Finance, avoid.
Avoid. Okay. Next one's from Sumana from Dubai. She's bought into Gallant Ispat. She's down in this particular stock about 20 to 30%. Avinash, should she continue to hold?
Yeah, I think she should continue to hold. Steel sector should do well, and I think give a time frame of at least 6 to 12 months.
within the green energy space, Avinash, KPI green, NTPC green, or any other stock that you would suggest in that space?
No, I think KPI green could definitely be considered from a slightly medium to long term perspective. But definitely the larger players like even Vari or Premier Energies, if one takes a 12 to 18 month view, even these stocks look interesting.
Got it. Well, on Sanofi, Avinash also bought at 4753 by a view of Venkat Raman, and he wants to know a 1 year view on the stock.
Yeah, I think these are MNC companies, where typically already they trade at fairly expensive valuations. So I would suggest that, at higher levels, it's better to exit because the investor seems to have purchased at a slightly high level, which looks unlikely in the next 12 months.
Got it. Well, that is, the end of the rapid fire as well as this edition of Ask Profit. Avinash as well as Sachin, thanks so much for helping us solve all those stock-related queries over the last half an hour. Appreciate your inputs. But viewers, out of time in this edition of Ask Profit. Stay tuned though. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
It seems it is a melody moment for the markets as well. We have Nifty 50, which is at the day's highest levels, and that's why I call it the melody moment. Welcome to India Market Close with Mahima and myself, Hiral Dadia. You know, it's very interesting, Mahima, to actually see the melody moment, which has actually gone viral all over the internet. I mean, you can see the visuals over here where Prime Minister Narendra Modi is actually handing over a packet of melody to Melanie as well. And I'm sure I want to offer this one to Mahima as well, if she wants to try and have one and see how it tastes. Because I felt probably this is a generation which has not really been accustomed to melodies like the way all we were. And after this, what is interesting is what I want to show Mahima is the advertisement of melody. Let's pull up that one. If we can just have the visuals and even the audio around it. You know, this was the ad.
Melody khao, khud jaan jao. Melody hai chocolatey, melody hai chocolatey.
So that was a jingle.
सभी जवानों से एक ही सवाल, मेलोडी इतनी चॉकलेटी कैसे बनी? मेलोडी खाओ, खुद जान जाओ.
Do you remember this one, Mahima? Have you heard this one?
I have honestly not seen this ad, but I'm sure that everybody who's watching this at least knows the jingle ki melody khao aur khud ja jao.
And melody hai chocolatey, chocolatey hai melody.
Yeah.
That's the jingle.
Yeah.
And that's exactly what is seen here as well. And that's what the mood is looking like in terms of markets, is what I would have to say. Let's shift focus there. You have Nifty 50, which is at the day's highest levels as we speak, and that's the interesting part here, 0.2% higher, though the range is absolutely narrow. Let's pull up Bank Nifty on the screens as well, and you'll see the kind of schematics that are playing out. That also has climbed to the day's highest levels. Whether the contribution is coming in from the private banks or the PSU banks is the key question that we have to check. What are the trends indicating, Mahima, if you have to look at broader markets? Because then we look at the sectoral picture and the contributors separately.
So even the mid-cap 150 is trading at its day's high point as we speak, up by about 0.25%. Sharp recovery is what we're seeing in the small cap space as well. But, you know, both of these are having a very range-bound trade. I think that's the case for the benchmarks as well. But let's try to pull up the sectoral heat map and see as to whether things have changed there or not. Since the start today, Pharma was leading, but that's now taken a seat back. Oil and gas topping that chart, up 1.4%, followed by energy, auto, infra. Realty has also turned into green. It's interesting because
all of these sectors, Mahima, are the ones which were actually under pressure and have all gone into the positive, and that's the clear trend that you're seeing. That reversal that is happening tomorrow will be the weekly expiry as well. So that is something that probably is having an impact here. Pharma, in fact, which was the only positive sector, which is absolutely flat now, trying to go towards the negative. Let's look at the contributors in terms of Nifty 50, which are, or even if the heat map of Nifty 50, because that will give you a trend there as well. Still,
Hindalco
majority of the greens which we are seeing, or I would say it's actually 50-50 here. Hindalco continues to be there. You have RIL, which has actually taken a catch up there. Bajaj Auto, M&M, all of these auto names which were in the red top losers have made it to the top right now. What is under pressure is a BL, which was always there. IT has come off slightly, so Tech Mahindra is coming in here. A few of the consumption names, Eternal, ITC, HUL, Nestle are the ones which are trading under pressure. So it's a very interesting reversal. The ones which were trading in the positive in the morning have actually turned into the red, and the ones which are in the red have turned into the positive as well.
Actually, the advanced decline ratio would be interesting.
Correct.
Because that will show us the broad end of spectrum. Almost even Stevens, right? And we're almost
see the way we started off. Yeah,
yes.
See the way we started off with
So
really
wide.
1800 declines. It's come down to 1300, and your advances have actually moved up.
Yes.
So from 434 stocks that were advanced, we've actually moved up to nearly 1300 stocks. So interesting market in terms of trade today. In fact, let's quickly look at the key triggers that we should be watching out for. The index is neither here nor there is what we are saying. It is absolutely in a consolidation zone. There is strong recovery coming in from the day's lowest levels again. 23,400, that's the strong support level that you should be watching out for. And in terms of the resistance, 23,650 to 23,700, these two are the levels you should be seeing in terms of the resistance. Now, the bulls will need a decisive close above that 23,800 level to actually target 24,000 to 24,300. Now, if Nifty fails to hold that 24,300 level, 23,400 level, I beg your pardon, it could accelerate as well, and there could be selling pressure that could be coming in. Now, Bank Nifty, that has been weaker than the benchmarks, and that's mainly been led by private banks. You will see that if you have to look at the components of the Bank Nifty as well. You have the Bank Nifty, which has fallen in 8 of the last 9 sessions. So that's telling you something. This is indicating persistent selling pressure over there. And you will have to watch the immediate support at 53,000, which is the floor, and the 53,000 support, which is the floor, and 54,000 is the ceiling there. If 53,000 is broken, the next defensive wall is at around 52,680 to 52,800. So these are the levels that you should be watching out for as well in trade. But let's also get in. Nilesh Jain, Head AVP Technical and Derivative Research Equity from Centrum Broking, as well as Sameer Dalal from Natwaral Stock Broking joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Nilesh, let me come to you first in terms of levels. The recovery that has come in today seeming to be slightly strong. However, the range is absolutely narrow. And the weakness in terms of Bank Nifty, especially the private banking space, is something which is persistent. What is the setup looking like for you if to look at the next 1 hour of trade and getting into tomorrow's session?
Very good afternoon to you. Good afternoon, everyone. A very good rebound that we have seen from the lower levels today once again. Because if you see in last 6 consecutive sessions, if you see the structure, we have seen multiple attempts were made to surpass its 50-day moving average, which is right now placed at 23,730 levels. At the same time, Nifty has taken a very strong support in the zone of 23,300 to 23,400. So looking at the overall setup, we can expect a positive close today near about 23,650 to 23,700 zone. We have seen a sharp cool off in the IVs as well today. So that is also supporting the positive move that we have seen specifically in the second half of the session. So looks good as far as Nifty is concerned with closing perspective. If it manages to close about 23,600, that will be considered as a positive close. Then we can expect a follow-up move in the coming session on the upside towards 23,700 or 23,800. Coming to the Bank Nifty, that has been the weakest link on Sol, and where we have seen a lot of underperformance recently. So Bank Nifty needs to surpass 54,000 level on the upside. Then only we can expect a strong move on the upside towards 55,000. So as of now, all eyes will be on banking space, specifically private sector bank, where we have seen a lot of underperformance to continue. So just to sum up for the day, for the remaining 1 hour, we expect some sort of a positive setup and positive close. And for the coming days, we are likely to see a break above 50 DMA that is placed at 20,730.
And Nilesh, what about your picks for the day? Because things have moved, since the past 1.5 hour, right? A lot of sectors have turned green. Overall, your view with regards to what counters should one go ahead and buy and trade in right now?
Well, absolutely. We have seen multiple positive development on sectorial front, on sector-specific move we have seen in today's trading session as well. So first of all, within OMC space, after a long time, we are getting some bit of conviction coming back. So there could be possibility that we may see some follow-up move to continue on the upside. So HPCL, one particular counter that is on my radar, given the kind of a breakout that we have seen today from its 21 DM moving average. It has also taken support at its 50 DMA. So we can expect a follow-up move towards 390 to 400. So these are the two targets on the upside. First target would be 390, second target would be 400, and stop loss can be placed somewhere around 372. So that will be my preferred bet within OMC space. And coming to other stocks like Paytm, particularly this particular counter, looks like giving a good close and a good setup as well. So we may see a follow-up move in Paytm towards 1180 to 1200. One can keep a stop loss below 1120, and Paytm is also buy.
Okay, so that's with regards to the topics coming in. Paytm is also at the day's highest levels. Samir, coming to you, a quick question in terms of the rebound that's coming in from in the markets. IT has been a sector which has been trying to show that strength over the last 2 days. Today also it was showing its resilience as well when we opened up. There is little bit of profit booking that's coming in today, and you have Nvidia that will be reporting numbers overnight, where a lot of cues that the sector would be taking tomorrow. How are you looking at the setup in terms of IT currently? Would you be a buyer at current levels? Because valuations somewhere are very cheap right now. And if you have to compare the conviction for or valuations for large cap IT versus mid cap IT, it's reversed, where now people are finding large cap IT more attractive as compared to mid cap IT. How are you looking at it?
Yeah, hi. So first of all, thank you for having me on the show. When it comes to the IT sector, we've been saying for some time that we think it is a defensive kind of a play. We are not saying that this is a sector that's going to be giving you exceptional returns. You can expect anywhere between 8 to 10% CAGR returns over a 2 to 3 year period at the moment, at least the way things stand. Now, you talked about the fact that valuations are cheap in IT, or cheap relatively to what they historically used to trade at. But then the growth rates are also the lowest compared to what they used to be historically. So your valuation multiples are obviously moving in the same level or in the same direction that growth is moving. As growth tapers down, so is the valuation multiple tapering down. So to assume that growth is going to pick up over the next 1 year seems highly improbable. And hence, I continue to believe that I think the valuations are not going to re-rate up. So you're not going to get any valuation up. What you're going to have to work on is whether the growth can come through, and then the cash flows that pay out the dividends give you that kind of return. So anywhere between, including everything, 10% return. Now, a second thing I wanted to point out, which is also something important, is if you look at Indian IT services, the services of employees that they provide, it's very similar to what something like a Cognizant supplies, which is listed in the US market. Cognizant is trading at about 10 times forward earnings compared to our Indian ITs trading at 15 times. So we are still trading at a premium compared to what US believes, or US participants believe, that traditional IT, ERP employee kind of generating services should trade at. So is it possible that the valuation multiples keep moving down? That's a possibility given the fact that FIs still hold a large chunk of Indian IT services. And if they want to take a call that, look, I don't want to take the dollar risk, the currency risk, plus I'm getting Cognizant at a cheaper valuation, why not sell my TCS or Infosys and buy a Cognizant? So can it go down further? Yes, it can. Should technically, given the fact that India is a growth story, Indian IT keep falling? Probably not, but it's a tussle at this point of time. And the call we have is a defensive play, buy it with a very low expectation of 10% return.
So that's with regards to where IT goes. Let's quickly just address Samvardhana Mothers in Q4. Across revenue, EBITDA, margins and profits, the numbers have actually beat street estimates, and that's the reason why you're seeing that kind of a spike that's coming in terms of the stock as well. 3% up move coming in there. Interestingly, the margins have actually been in double digits at 11.1% versus a street expectation of 9.8%. Profits have also been ahead of expectations as well. In terms of absolute numbers, it is seeming to be good, but there has been a one-time loss of 194 crores during the quarter versus a loss of 46 crores on a year-on-year basis. In terms of individual businesses as well, wiring harness business, a 13% growth. Modules and polymer business has seen a growth of around 6%. And in fact, I will be getting my colleague Puneet to decode this for us better. But that stock is at the day's highest levels as we speak. Along with this, you have a Grasim Industries also, which has just reported numbers. If you can just pull up that one on the screens and see what's happening there. That stock is also seeing a spike right now. A net loss of 164 crores versus 288 crores. So the loss has narrowed when it comes to Grasim, and Mahima tracks the space pretty closely. Mahima, what do you have for us? A one-time loss of 82 crores versus a loss of 114 crores is what I'm seeing on the screens.
Yeah.
Revenues have grown, and if you have to look at the EBITDA, what is it telling you?
So basically that is on account of an exceptional loss, the one-time loss that we are seeing, and that is on account of an impairment of certain plant and equipment building that they've done with regards to their chemical Vilayat facilities. Barring that, Hiral, I think the standalone numbers look pretty impressive, because we've been seeing as to how the chemical side of the business for Grasim has been impacting their overall numbers. But this time it seems that the overall top line growth seems to be something that the street is probably liking. From a 8,900 odd crore to a jump of 11,000 odd crore is what we've seen. Cost of raw material slightly has gone up for them. Purchase on stock in trade is also gone up almost by 800 odd crores. So that's something which is putting pressure in terms of where the margins go. But overall, in terms of where the prima facie, the first reading of numbers go, I think it seems to be a good set of numbers. We'll have to see as to how each set of businesses have done,
I think
especially
the paint
chemical
business also will be,
exactly,
Builder
something
Opus
that
is
we'll
going to be the
tracking.
key this time
We'll
around.
have to wait for the press release to come out.
We'll wait for that, but in the meantime, let's even go across to Puneet, who's standing by to give us little more details with regards to Samardhana Motherson. Puneet, apart from the key numbers, any key highlights that you're picking up so far in terms of your first cut?
Well, thank you for that. It's definitely a very good set of numbers actually, and beaten estimates also quite handsomely at this point of time in quarter 4, where you've seen a lot of volatility, especially in the input cost prices as well. So when you look at, in terms of the EBITDA margin, I think that's one of the biggest beats that has come in Motherson's history actually at this point of time, where the EBITDA is up almost 24% on a YOY basis, 3,792 crores, and the margin at 11.1% versus what the estimate was at 9.8%. Despite a 16% quarter-on-quarter rise in commodity cost, and hence while this was more back-ended, so you could see some impact in quarter 1. I think 11.1 is one of the highest, given that the company announces further expansion every quarter, and this time around as well that has happened. So I just wanted to highlight that they've announced 4 new developments compared to last quarter, where 2 new capacities have been included, and that's for the packaging business, will be delivered by quarter 3 of FY27, and capacity expansion being announced for the wiring harness businesses, which will come in quarter 1 of FY28. And just in terms of what we've seen on the wiring harness business, the growth has been decent at 13%. We got some picture because of Motherson wiring numbers as well for that. But overall, we'll have to watch out for the commentary, especially on what he's seeing on FY27 growth, but also on the input cost impact, what could be expected in quarter 1 as well.
Okay, all right. So that's, of course, the view coming in on Samardhana Motherson. Puneet, thank you so much for getting us that first cut. But Nilesh, I'll quickly come to you on both of these names. Samardhana Motherson, firstly, the stock is, let's try to pull that up and see as to what it's doing right now. But your view overall on the charts as to what should one do right now, taking a position probably makes sense?
Well, absolutely. Prima facie, I think the numbers are good. That's the reason we are witnessing a positive impact. Even on derivative front, if you see, close to 10% of OI addition can be seen. So good long build-up happening in this particular counter. The stock is trading near, in fact, it has hit a fresh record high as well in today's trading session. So very strong chart pattern. And we may see a follow-up on the upside to continue towards 138 to 140 from a very short-term perspective and position perspective. I think it has the potential to move towards 145 to 150 as well. So keeping a stop loss below 130, it's a very good buy at current level from a short-term trading perspective, with a move expected to go towards 138 to 140.
What about Grasim? Because the last time that it touched, the high of 3,000 odd levels, it was not able to break its previous high. So what are the charts indicating there?
Well, absolutely. There are multiple resistances near 3,000 zone. And in fact, if you see, multiple attempts have been made, as you have rightly pointed out. So it is important that it should take out 3,000 mark decisively. Then only we can expect a strong uptick towards 3,200 to 3,400. But yes, having said that, at current level, one can accumulate this particular counter. There are possibilities that once this consolidation gets over, we can expect a move beyond 3,000 as well going forward. At current level, if somebody is already holding the long position, can keep a stop loss below 2850, and post breakout above 3,000, the next target would be 3,200 to 3,400.
So that's with regards to Grasim. But moving on, Viyash Scientific, which was earlier Sequence Scientific, but after the merger, it has delivered a standout quarter with strong revenue growth and a sharp jump in profitability. Varsha is standing by to tell us why we've actually got this as a stock of the day, seeing gains of nearly 11%. Varsha, over to you.
Well, thank you so much for that. Clearly a turnaround quarter, I would say, and company is doing a lot of things, going into high margin products which will enhance their margins. But starting with the key four numbers, because that's what the highlights are. Revenue is up almost 20%. Look at the EBITDA margin, sharp uptick over here, and which has translated into net profit. Now, why we have seen this strong turnaround in numbers? First is of course the Q4. If you see, is the strongest quarter ever for the company. Revenue growth strong at near 19%, as I said. Even EBITDA growth is also much higher at 64%, and the operating leverage has clearly kicked in when it comes to this counter. Now, what is changing structurally from low margin to high margin mix, which is what leading to this expansion in margin. Companies also from scattered operations to integrated platform, and also if you see, from company is diverting from leverage balance sheet to strong balance sheet. Now talking about merger benefits, because this is also playing out with the company. We all know that Sequence Scientific and Viyash Life Sciences merged in 2025, and the earlier merger has been now fully integrated, and one unified platform is actually improving efficiency. Cost synergies and operating leverage are kicking in, and management is guiding for more synergy benefits ahead, and also one of the reasons why you are seeing better numbers for the company. Also better business mix. This is where the key highlight is, because the formulation is growing at a faster rate than APIs, which is a higher margin one. Higher share from regulated markets like US and Europe, again a higher margin one. Then India, US and Europe all are showing strong growth, and this also improves quality and sustainability of earnings. Lastly, on to the pipeline and growth visibility. Well, 19 products in pipeline across APIs and formulation, and the new approvals and filings across US, EU and Japan. R&D integration is accelerating product launches, and more launches are expected going ahead. So overall, the story over here is company is shifting from low margin to higher margin products, and of course from semi-regulated markets to more regulated markets, or to regulated markets, which will enhance the margins going forward. So this is all the story when it comes to this counter.
It's a very interesting name, because before the merger with Viyash, Sequence Scientific was slightly under pressure somewhere, but all hopes were in terms of the merger going through, and that's what it has done to the business. Samir, any view when it comes to Viyash Scientific? Because a newly merged entity, the results are seeming to be really strong, and with Viyash, it's more of animal pharmaceuticals, which you're talking about.
So sadly, I never covered Sequence also before it was in its original avatar, so no view on this one.
Charts?
Well, even I don't have any coverage on this particular counter due to the limited data.
Okay, I mean, it's also interesting to see, right? 120% growth is what we've seen on FY basis as well. So FY26, the overall top line has grown. Margins have significantly improved and could improve further as well. So that's the key takeaway, and that's why we're seeing the stock with an uptick of around 11.5%. But let's also bring in my colleague Soumit Sarkar. He might take a while to while we get him mic'd up. I think we were talking about Viyash. The other counter which is looking very interesting today is Barbecue Nation. In the QSR space, it's not every day that a stock like this is zooming in trade. It's
locked
in upper circuit, up 20%. I think I'll go to
Were the
Sameer on
earnings,
this one.
were the earnings good for a barbecue nation? Because it is a still smaller counter, not really done much in the past as well.
Yeah, but I think the interesting move for them is that now they are going for a smaller format store. They've revamped everything that they were doing earlier, and that's going to work for them. Even they are going very big when it comes to store additions, but at the same time, they're saying that the store format is going to be lesser. So area per square foot is going to go down.
This gets me worried somewhere because you're talking about barbecue nation which is shifted. You're talking about a Westlife, which is also not doing that well the way it used to in the past. There was another company called Specialty Restaurants as well. And I think a question with Sameer on this is a must, I think, Mahima.
Yeah, I think he likes Jubilant, if I'm not wrong, right, Sameer?
Yes, I do like this space and, United Food Brands. So, well, look, the results do not really warrant a 20% up move, okay? Let's be very frank. Yes, we saw SSSG growth of 14% on a year-on-year basis, but this was because the numbers had been so subdued over the last couple of years that we are seeing these kind of growth. If you go back if you just scale back maybe 2 years back, you'll see that they've just barely reached, or they've not even reached what kind of sales per store they had 2 years ago, right? So, of course, there's still more room for growth. Now, what they've done, what they've changed for themselves is they've got a couple extra brands which are slightly more premium, which is Salt and Toscano. Salt is an Indian food and Toscano is Italian food. Those are also expanding rapidly. Plus, it's creating its presence globally. I mean, in the sense they're open, they've got 14 stores internationally or Barbecue Nation. So it kind of becomes a brand by itself, an international reach, and, it kind of draws in more people. The whole story of Barbecue Nation was initially the experience that they served, where you could grill things in front of you and then eat it fresh. I think to some extent that has become kind of passé, and that's why if you see the numbers have taken a bit of a downturn. But I think if consumerism is to come back, I think barbecue will do well. But does it warrant a 20% move up? Probably not today. But yes, I mean, it's good to see the stock up. We are very positive overall on the QSR space. We've been saying for a while that all of these counters, Westlife, Devyani, barring Jubilant Foods, who's actually been able to deliver SSSG growth, all of them have seen degrowth. So once consumerism, now I think it's going to get pushed back for 6 months because you're going to see inflation once again coming back with the rise in crude and diesel and petrol, which is going to lead to inflation across the board, because of which maybe people may not spend as aggressively. But this India story by itself for QSR is a 5-year story. And if you believe that, a McDonald's, which is only about Westlife, which is 500 stores in the country at the moment, well, 480 to be precise, can scale up to about 900 or 1,000 over the next 5 to 7 years. That is the growth trajectory. And then SSSG and operating leverages play out. These can be great investments from a 5 to 7 year.
Okay. We'll have to wait and watch and see as they pan out. But thank you for that, Sameer. But let's go across to Somit Sarkar, who joins in with all the chatter from the dealing room. Somit, I think some bit of interesting stuff that you will have today with the kind of rebound that's come in today's session. I'm not sure if the street is looking out for something which is sustainable, because the tug of war has continued.
Well, yes, benchmark seems to be in a consolidating mode. It's not giving a big breakout, either it's giving a big breakdown as well at this moment. And even volumes, if you look at in the cash market, they're quite subdued. In fact, they're down nearly 13% compared to what we had seen yesterday. So not much of an action. Few stocks still what dealers have highlighted in trade. Firstly, it's Godfrey Phillips. The buzz on the street is that a block deal might happen very soon. 15% of the promoter stake might see change of hands. So it's an inter-promoter transfer. Not that this stake will be sold to some external party. And also this block deal might happen in the block window, is the buzz on the street. So keep an eye out for Godfrey Phillips here. This stake sale has been a big overhang on the share prices of Godfrey Phillips. For RBL Bank, there are buy flows on the institutional desk. Both FI and DIs have been accumulating this counter, and delivery volumes, well, could be on the higher side for RBL Bank. And lastly, when it comes to DV's Lab, there are sell flows on the large HNI desk, is what dealing rooms have indicated, and dealers are expecting the Q4 to be a bit muted and weakish for DV's Lab.
From this, thank you, Somit, for that. Godfrey Philip, I mean, we did see price increases that were announced. BNK Securities was the one who put out the details yesterday on some of the categories. And now you're talking about a block deal, 15% between promoters. Anything on the charts, Nilesh, on a Godfrey Philip?
Well, Hiral, recently we saw an uptick and counter phase resistance at 2500. So that is acting as a very strong resistance. Where good part is that after the recent decline in last 2-3 session, it has reached to its crucial support at 2200. So looks like it may find support near about 2200 to 2250. And we may see a gradual uptick once again. The recent correction, in fact, has given a good opportunity. If somebody is looking to make a fresh entry, then keep a stop loss below 2180, and we can expect once again a move on the upside towards 2400 to 2450.
So that's with regards to Godfrey Philip. But moving on, it's the financial institutions which have now looked at a work from home kind of a culture. Some institutions have said, okay, we will go with it. They are embracing hybrid work. Some have said no. HDFC Bank is embracing hybrid work, and the lender will now allow 2-day work from home for corporate and business teams. You have IndusInd Bank and Axis Bank too, who are incorporating the work from home model. To discuss the nitty-gritties of what this would actually mean for the financial sector, joining us, we have Mr. Ashutosh Khajuria, former Executive Director at Federal Bank, and Mr. Dinesh Khara, former MD at SBI, to talk to us on the same. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. The reason I wanted to have this conversation with both of you is because you have embraced a similar situation back then during COVID, where it was 100% work from home. And now that we are starting to see a work from home, which has just started with, 2 days a week, yes, may not be 100% mandatory. I mean, from the PSU side of it as well. You have private banks, financial institutions who are trying to look at this kind of a model. Your initial comments, Mr. Khara, as to how do you see this actually panning out?
Well, as far as banks are concerned, and particularly banks like State Bank of India, though during COVID also, we ensured that all the branches kept on functioning, which actually meant that to ensure the wheel of the economy moving, it was perhaps must for us to ensure that people attend the branches. And also, there were, I would say that work from home, the way it has been adopted by HDFC Bank, etc., was not perhaps possible for us. So we ensured that to happen. But yes, of course, when it comes to the limited number of people who are not into the customer-facing roles, and on a selective basis, they were allowed to work from home. Or alternatively, whenever there was a quarantine requirements, then people were allowed to work from home. So that's how it was really looked into. But having said that, I must also mention that when it comes to various meetings, internal meetings, management meetings, etc., invariably those meetings were done from a remote location. So, which also means that the travel was minimized to a greater extent. So, I think going forward also, in view of the recent guidelines which have come in, that is the kind of format which is going to be followed and adopted. Because as far as branches are concerned, people have to come in and people have to work. But maybe travel intercity for attending various meetings, etc., that can certainly be minimized and that can be addressed through the virtual mode.
Okay, Mr. Khajuria, as Hiral was mentioning, right, you would have faced the same during COVID times, but that was probably, a temporary solution. Once things were stable, work from office was entirely bought back. Do you think that considering the way crude prices are, the way situation is right now, rather than considering this from a short-term perspective, this could be a possibility of a long-term thing, that this could be adopted permanently? What are your views on that?
So, good afternoon, everyone. I think I would look at differently. There are pros and cons. See, there is something, which in-person meetings bring in, and that is the energy to the discussion, and all sorts of things are there. But then, I think COVID taught us as to, even if we resort to this particular mode of communication, it's very comfortable. there's absolutely, if you ensure the security aspects and all that, I think it's a wonderful way to save on the fuel cost is one thing, and multiple other benefits which are associated with this type of arrangement, work from home. Uh, Number one, I shouldn't say that, but fact remains that it is at the convenient time of all the participants. So not necessarily that you are bound by something like 9 to 6 type of time schedule and all. And we have had occasions during that period when we used to have late evening continuation of meetings and all that. I'm not saying that in normal schedule in-person meetings we do not extend the meetings beyond some time, but then there are certain issues which you have to look at as to the logistics related. Some people have to catch flight and all sorts of things are there, particularly when we talk of board meetings and various other important communications and all. Wherein when you are operating from work from home type of mode, then all these things are totally ruled out. So you are not pressed for some reaching somewhere, and that traffic congestion and various other things are there. On one hand, it saves fuel. On the other hand, it saves time, and the rigor of traveling, every day to the office. So there are pros and cons. I think I'll go by that. And when the nation needs it, then I think nothing could be better than this type of aspect and all. Particularly looking at that we don't produce our oil in India to the extent we need it or exhaust it. So when you have 85 to 90% being imported, then I think it's wise to save on it in whatever way one can do, whatever way one can contribute to it.
Mr. Khajuria, good afternoon. This is Heenal here. Point taken that everyone will have to do their bit to actually become that drop in the ocean that helps us sail through this kind of a situation as a country. However, from an operational perspective, from an employee sentiment perspective, a quick view as to how things were back then when everyone was working from home during COVID. And do you think that has any impact structurally or from a strategy point of view if you have to look at operations?
See, I don't, I have not experienced any fall in productivity and all that. Let me be very frank and honest about it. And when we initially with lot of inhibitions and all sorts of apprehensions, we moved on to this type of mode. But once we were into it, I think we found it to be very, very convenient, and particularly looking at a global sort of pandemic and, saving lives was the prime concern and all. At that time, certainly this was the best option that one could have resorted to. Now, again, the situation is something which is, really, it's something, the need of the hour. So we are having, the dependency on a particular route which is blocked, and as a result of that, global oil prices have gone up and all. And this is the bare minimum that, the financial sector can contribute, or I would say in each sector, everybody has to look at, what all options they have. But I think for banks, financial institutions and all, this is a very good option to move to.
Mr. Khajuria and Mr. Khara, thank you so much for giving us your valuable inputs. PI Industries management is speaking on their con call. Let's cut across and listen to what they have to say.
We are demanding solutions for a safer and more selective and more sustainable solutions. Innovators and integrated R&D-led manufacturing and forward trust, scale up execution, and will be the long-term winners. Moving to our business performance for the quarter. We are continuing to demonstrate resilience underpinned by the breadth of our portfolio and depth of our customer relationship. More importantly, we believe the investments made over the 4 years and we continue to make have a meaningful strength of PI's long-term position to differentiate and move it into the next orbit. Our consolidated revenue for the full year has delivered a 67.137 million with healthy EBITDA margins of 25% and cash and balance sheet of 34,275 million, enabling the company to pursue further strategic investments for long-term sustainable growth. Our Pharma business delivered a 40% growth for the full year. We'll continue to strengthen customer engagement and innovators biotech companies will be investing in capabilities across process development, regulatory frameworks. We believe it represents of importance for long-term growth platforms, leveraging our deep chemistry capabilities, integrated facility between India and EU, and the operating model of strong innovation expertise. Let me now draw your attention to the biological, which has been our passion for over 2 decades, during which we have built one of the most comprehensive biological portfolios for the Indian market. Over the past 2 decades, the business has emerged as one of the fastest growing segments of our portfolio, compounding over 20%. Our acquisition of a differentiated technology platform has given us a global market access, and advanced R&D capabilities for significantly accelerating our growth ambitions globally. We believe our technology has the potential to address the next generation crop.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Welcome back to India Market Close on NDTV Profit. Let's just quickly pull up Nifty 50 on the screens and see what's happening there in this last 30 minutes of trade. You're nearly at today's highest levels. Marginal gains of 0.2% coming in there. Bank Nifty as well seeing gains of nearly 145 points as we speak. Let's get in Shivangi Sarda from Motilal Oswal Financial Services, and we have Pankaj Pandey, Head Research at ICICI Direct, joining in. Welcome to the show. Shivangi, in terms of levels to watch out for and the way markets have been range bound, your strategy and your top picks.
Very good afternoon, Hiral. So we've seen that markets have been a little lackluster from the last 4 sessions, with, of course, swings on the sides. But we've, somewhere failed to hold above 23,800 marks. But the good part is that we've also not broken the 23,500 zone. So overall, this range should continue for the index, 23,800 to 24,000. There are multiple hurdles here, which will be intact, but support-based buying will keep the index afloat. Of course, we are into the monthly expiry week, so a little bit of volatility will be expected. So buy and decline to continue here with these levels in mind. Talking about Bank Nifty, we've seen that there is underperformance here, although the banking index has picked up strength from the lower levels. But overall, we've been seeing some bit of lackluster move from the PSU names, which is drowning the entire basket. We are looking at 53,000 as a major support for the index. Of course, this is positional. And on the upside, 54,250 will be the next level to watch out for.
Okay, all right. And Shivangi, what about your picks for the day? What are the stocks that you're watching out for?
On my radar, first up is Vedanta, which has resiliently held on to the higher levels, consistently making higher top, higher bottom on the larger time frame as well. On any rise, we've seen that volumes have also been accompanied. So this, of course, is looking quite positive. Now, in the entire metal pack, we've seen this stock has been one of the most strongest names, and we're recommending a buy here. Even at these levels. So the next targets that we're looking out for Vedanta is 345 with a support of 326 levels.
Okay, all right. So that's with regards to where Shivangi's picks go. But I think let's shift focus and talk about, Jana Small Finance Bank. A minority stake acquisition by TVS Venu Group into Jana Small Finance Bank has raised concerns related to capital allocation by brokerages. But certain quarters are also positive on, certain brokerages are also positive on this development. And we have Puneet joining by to give us a perspective on both the bull and the bear side of this scenario for TVS Motors. Puneet, over to you.
Well, thank you for that. It's been a strong performance by the company in this meantime, but this one key acquisition and essentially a 10% acquisition by the company has just irked a certain set of investors because 5% of that has gone into the auto company, which is TVS Motors. So that's the first bear case that we have, that this could put the stock slightly under pressure at this point of time as well. But on the opposite side, Morgan Stanley in a note today came out and mentioned that they continue to be overweight, a target price of 4,327, and they feel TVS is a complete portfolio, essentially will help the company navigate the short-term pressures. They've also highlighted that it should trade at a premium valuations versus its peers because of the broad portfolio that is had across metrics, scooters, motorcycles, mopeds, as well as the electric vehicle scooters now. So that continues to benefit the company as well. But on the other side, Axis continues to highlight that a lack of clarity essentially on the well-defined capital allocation policy will continue to impact the stock in the near term. So you do see Axis putting out that point of view as well. When you look at the third bull and bear case that is related to Norton, which the company acquired roughly around 4 to 5 years back. Now, this is continuing the policy that Axis highlighted, that investment in the international subsidiaries is impacting the company's capital allocation policy. And Norton has reported over 1,000 crores in losses over the last 3 years. Product launch is expected to be in Q2 of FY27. That will boost the company's return, profitability, and a new segment in the super premium space, especially in the global markets. Now, those investments have to fructify in earnings as well. Finally, in terms of valuations, post-correction stock trades around 28 times FY28 price to earnings. It's not cheap by any means, one of the more expensive stocks compared to its peers as well. And that's the last one of 16 to 22 times price to earnings. iShares is somewhere between 25 and 26. But given all of this into perspective, it could be a very interesting opportunity now that the stock is corrected from the 3,800 zone to the current where it's trading at around 3,300, and begs the question as to which side is heavier essentially, and if these capital allocation decision gets more streamlined, at least in the near term.
That's an interesting take coming in there, Puneet. Thank you so much for that. Pankaj, let me come to you on a TVS Motors. I mean, the kind of erosion that's happened in the last couple of trading days after that investment in Jana Small Finance Bank, as Puneet was mentioning, it's irked a lot of investors. Your view when it comes to TVS Motors on the back of this news? And two, overall, if you have to look at the two-wheeler industry as well, anything that you like, because a lot of momentum and push coming in for the EV space now?
Correct. So in the two-wheeler space, what we like is Bajaj Auto, because it has been sort of gaining market share and carries a market share of about 24%. So that is our top pick. In addition to that, Royal Enfield is another company which we like. I think the company is going ahead with the expansion in terms of volumes. So it's a sort of premiumization trend play. I think TVS has already sort of done well, and when you see incidents like these, I think that is when the stock sort of consolidates or witnesses profit taking. So I think Bajaj Auto from a capital allocation perspective has been the best among the lot. And from a growth perspective, Eicher Motors is something what we prefer in the two-wheeler space.
Okay, all right. Now, the other counter that has remained in focus today is Dredging Corporation. Now, it's been a stellar FY26 for the company, plus it's turned profitable again as compared to where it was sitting in FY25 with losses. I think it's staged a sharp turnaround and returning into profitability in FY26. And we have Parth joining by to give us a fine print of what the earnings look like exactly. Parth, over to you.
Thanks, Mahima. So, starting with the key highlights, Dredging Corp achieved its highest ever turnover in FY26 at around 1214 crores, which was after they returned to profitability in FY26 after reporting losses in FY25. In Q4, in fact, we saw the PAT improve due to strong execution and operating leverage playing out during this quarter. In fact, if we have a look at the Q4 numbers, then revenue saw a growth of 3.4% to reach around 480 crores, while EBITDA was up 85.3% to reach almost 143 crores, while EBITDA margins improved to 29.7% versus just 16.5% year on year. The PAT also saw a huge jump of more than 300% to reach almost 87 crores. So the Q4 numbers were, the top line numbers were kind of flat, but the bottom line growth is what we have seen for Dredging Corp. Even in the management commentary as well, the management said that the company navigated a lot of operational challenges during the quarter, which were rising fuel prices, high operational costs and pricing pressures as well. But despite that, they were able to achieve that bottom line growth. And now they have guided to achieve more than 1500 crores of turnover in FY27. So they are targeting growth of upwards of 20%. Now the key things to watch going forward will be volatility in fuel prices, which might impact their margins moving forward, and also any execution delays or monsoon disruptions which might impact the company's current projects.
Okay, Parth, thank you so much for getting us those details. Shivangi, any view on the charts for this one?
So, of course, looking at this one, this hasn't been on my tracking list, honestly, but looking at the chart structure, we've seen that from the last two sessions, the price volume surge has been quite a lot. It has surpassed its previous hurdle zone of 1078, but is still, kind of hovering near that after a high of 1155. So my take on this would be that if it manages to hold above 1078, then the momentum could continue here. But again, volumes are thin here. So recommending trading stop loss to be continued here.
Okay. All right. So that's the view coming in on Dredging Corp. But I think the other, stock that's been doing very well in trade today, let's, try to pull up something like a Zydus Life Sciences, because yesterday the results came out and we saw a buyback coming in for this particular counter. Of course, it's cooled off from its day's high point, but still trading around 2% higher. Pankaj, any view on something like a Zydus Life Science? Do you think valuations are attractive enough to kind of make an entry right now?
So I'm sorry, I won't be able to comment because this stock is come in compliance.
Sure, no worries. Shivangi, any view on the charts for this one then?
Yes, definitely. Looking at this one, we've seen that, of course, the entire pharma space has been quite positive. And talking about this stock, we've seen that it has kind of made a bottoming out structure on the weekly basis. Previous, previous zone of 1030 has been surpassed, so that is a positive. But it has actually given up from the day's high today. So I would recommend a little wait and watch. If it manages to cross and hold above 1050, then we could again shift to a buy perspective here. But as of now, there are better stocks in this same space which are adding a lot of momentum and could be added on the radar list.
Pharma is one which is seeing some smart moves today. Let's pull up a 3M India, ABB, Siemens, Abbott India. Let's see what all of these counters are doing in trade as we speak. I'm talking about 3M India. Abbott is under pressure. 3M India is another one which is in focus as well. You have ABB also, which is another one. Few of these names which are seeing some bit of pressure, whereas ABB, which is at the day's highest levels. Siemens also is another one. Colgate, Palmolive, Cummins, a few of the names which are seeing some smart moves. Pankaj, any view when it comes to any of these, names like ABB, Siemens, Hitachi Energy? Some signs of momentum over the last 2 days is what we are seeing. Do you like anything from here?
So I think in terms of some of these MNC names which you mentioned, our sense is that while some of these stocks like say ABB or Siemens Energy are quite expensive, but one can sort of take a bit of longish view, and I think the entire pack looks attractive to us because I think power is one of the biggest opportunity which is going to unfold, given the fact that energy security is going to be paramount for us and even for a lot of other countries as well. I think besides that, if I have to sort of highlight probably some of the MNC names like Abbott also looks good to us. There we have a target price of around 32,000 odd. Overall, domestic growth has been pretty robust for most of the companies, including Abbott, except for the valuation. But I think now with the recent underperformance, the price also looks attractive at current levels.
Okay, so those are a few of the MNC names that we are addressing. Some are really trading with some smart gains as we speak. Sensex, June rejig is in focus as well. 3 stocks, Trent, likely to move out of Sensex, Hindalco, Shriram Finance, likely to get included. Shivangi, any strategy with regards to charts on Trent, Hindalco, as well as the Shriram Finance?
Very diversified stocks that you've mentioned here. Of course, consumption stocks are doing quite well today, but out of the lot, my focus, of course, trend is bottoming out and is giving a kind of a reversal signal from the important exponential moving average. So this one could be a radar for a quick short covering move, say about 3 to 4% odd move over here for trend. So definitely this one's on radar. And of course, apart from this, I'm liking Cummins a lot, which has seen a very good amount of short covering. Excellent volumes are adding up today, and the closing is signifying that there is momentum which will continue over here.
Okay, all right. So that's the view coming in on Cummins India. But, let's also talk about some of the names that have been buzzing in the trade throughout the day. And we have Shivam joining us with a list of those stocks. Shivam, what's there on your list?
Well, yes, starting with the capital goods. The capital goods stocks are buzzing with a strong momentum. And after CG Power, Siemens and Energy, now GE Vernova is expected to close a export order from US data center. And this order is said to be worth around 10 to 13 billion rupees. Now, this marks a significant development for Indian transmission and power distribution companies as they will finally break into the US market for DC transformers. Second stock is PCBL Chemicals, which has reported a weak Q4 result, and the carbon black sales has remained flat on a YOY basis. The domestic volumes were driven by higher local consumption, while the company has seen an export volume decline due to the increased logistics cost. In terms of margin too, the company has seen a contraction, which was mainly driven by the higher input cost. Now, third stock is C Info Systems, MapMy India. The company has reported a strong Q4 earnings, and the profit after tax of the company has gone up by 117% on quarter-on-quarter basis. In terms of margins too, that has seen an improvement of 116 basis on quarter-on-quarter. Now, this company has a strong order pipeline of around 1750 odd crores. Fourth stock is Deccan Gold Mine. The company has discovered a nickel and copper at its Chandigarh unit, and the company has said that they will continue the low impact exploration activities at the site. Now Deccan Goldman has also told to NDTV Profit that the company has discovered discovered this nickel and copper unit, which is a significant milestone for the company, and they will launch a mining lease application in 1.5 years. They will also fast track the drilling operations in next few months, and in terms of Kyrgyzstan mining operations, the company is on track with the timeline. Last stock is Avalon Tech, which has seen a brokerage upgrade from Nomura, and Nomura has initiated a buy rating with a target price of 1722 rupees. The brokerage has stated that the demand tailwinds from the emerging sectors such as AI, HVDC keeps the growth visibility high, and Avalon seems to be well positioned to capitalize the global structural demand tailwinds. Now the management targets 2 times the revenue over FY26 and 29, and this highlights the strong confidence of the management.
Thank you so much, Shivam, for that. Interesting names that you're highlighting. But we have Lenskart and Ola Electric. Both of them have just posted numbers. Lenskart profits are down 8.5%. Margins have come in at 21.4% versus a 17% on a Lenskart. And if you talk about their revenues, a growth of around 45% coming in there. I'm talking about Lenskart. We are down looking at Ola Electric. So a net loss of 500 crores versus a loss of 870 crores in terms of Ola Electric. If we can now switch back to Ola Electric, because we've just finished talking about Lenskart, but Ola Electric Q4. Revenues are down 56% on a Ola Electric. The number is coming at 265 odd crores versus a 611 crores. EBITDA loss of 281 crores versus a loss of 695 crores. If we can just pull up the intraday chart of Ola Electric and see how the stock is reacting, because there has been a slight improvement in terms of the loss number, but the concerning area over here is the top line itself has nearly halved. The stock is absolutely stagnant right now. No major downtick coming in there. It is where it is, but it's trying to inch lower. That's one of the concerning areas that we're seeing right now. A loss of 500 odd crores, revenue down 56%, EBITDA loss of 281 odd crores. Pankaj, quick view. Ola Electric as well as Lenskart, first cut in terms of both the numbers that have been reported so far.
So don't cover this stuff, but off late, what we have been liking in small cap space is good luck India for the opportunity across defense plus high speed rail. Then we have recently covered Sport King Infra, largely because the overall yarn spreads are expected to sort of increase. And in the defense space, Zen Technologies is what we have come up with because of the opportunity which will unfold on the anti-drone segment side.
So that's with regards to where, the question was in terms of the first cut, but because Pankaj does not really have coverage, we are looking at Zen Technologies, which fits his bill. But thank you, gentlemen. And Shivangi and Pankaj for joining us on the show. It's always a pleasure to speak to both of you. But moving on, in terms of where markets closing, we're just 2 minutes away. What's interesting is we are back above that 23,600 mark. 23,650 is what you're tracking in terms of Nifty 50 marginal gains of 0.2%, and similar trend with Bank Nifty as well. We'll look at the intraday chart shortly, but in terms of the advanced decline ratio, kind of even Stevens where we started off is what we are seeing, and the strength is coming in somewhere in terms of the broader markets as compared to the large caps. The MNC counters are the ones which have built up strength also in the last couple of hours of trade. If you look at the VIX, let's just pull up the VIX and see at what levels India VIX is right now. It has cooled off. We are at the day's lowest levels in terms of the VIX, 18.38. So there is that cautiousness that is still prevailing because we are at elevated levels. You can't say 18.38 is not an elevated level. Broader markets is going to be interesting. But before that, Mahima, you can take us through what's happening with regards to, there you go.
Broader markets, yeah. But I think advanced decline ratio is an interesting one because when we started the show, I think there were more declines as compared to where the advances go. But we've diverged, twice before that. And now we are seeing at least a slightly more, preference towards the advances. So buyers are more as compared to sellers slightly by a bit. But the midcap 150 has seen a stellar recovery from the day's low point. We're closing at the day's high point, up by about 0.4%. Same with the small cap 250 as well, now in the green as compared to where we were, just an hour ago. And a 0.1% of an uptick, but still at its day's high point.
This
BSE
is the highlight.
is going to be an interesting
This is the highlight.
one.
Yeah, let's just look at NSE 500 components and then we'll look at Nifty 50 today. NSE 500 or BSE 500, Eris Life, Tata Communication, Mines, PCBL, Hitachi Energy, CG Power. So a lot of those names which are doing good. And if you see in terms of losers as well, PI Industries earnings, C Infosystems, Z Entertainment, majority of them are on the back of earnings as we speak. Quick one in terms of Nifty 50 heat map to see where we are closing at in terms of individual stocks as well. As we close, Hindalco, the top gainer, RIL has actually done a catch-up, Bajaj Auto, Grasim, Finserv. Again, pretty much even Stevens on Nifty 50 as well. BEL, IT names, few of the consumption names and Pharma. These are the ones which have actually seen the pressure that has built up in terms of today's session as we speak. A quick one in terms of the heat map of sectors to tell you in terms of what's happened with the sectors. There you go. Oil and gas, energy, infra, defense, auto. You know that interesting reversal that we've seen from the losers to the gainers, and media the top loser, but obviously it was the entertainment which brought the sector down. FMCG, IT also has not been able to hold on to the two-day kind of gains that we've seen. There is pressure, and Nvidia earnings is the key thing that we will be watching out for. You know, there will not be a direct impact, but usually post the announcements that are made by Nvidia, there is that 1 or 2 quarter lag effect that starts coming in terms of Indian IT companies. So the commentary is something that we will all be tracking, Mahima.
Yeah, I think outlook is going to be important, especially in terms of AI, but and also with respect to how Google is also trying to build another Nvidia is going to be an interesting one to watch out for. So I think commentary is going to be the key one, and probably people are not wanting to keep on with their positions right now in the IT space.
Absolutely.
And possibly profit booking is what
and to add to that, your ancillary AI plays are the ones that come into focus as well, and that's why you have cap goods and power, which has been moving. But completely out of time with that. It's a wrap on this edition of India Market Close from Mahima, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit. You have Market Express next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that has happened in today's trading session. But before we do that, let's take a very quick look at the markets. First things first, range-bound trade is something that you were looking at on the last read. Nifty and Sensex traded in a narrow range with gains led by oil and gas as well as auto stocks and FMCG financial services on the back foot. Largely, you were looking at a range-bound trading session as well. When you talk about Sensex, over 100-point gain really coming through, and Nifty also hovering close to 23,700 in terms of the levels. Talking about most sectors that were ending in the green as well. So you do have oil and gas as well as energy that largely led gains, like I mentioned, and FMCG, IT, in fact, on the back foot. On the flip side, so those were some of the sectors that were not doing quite well. But that said, the bias was definitely in favor of green when you talk about the sectoral picture. Moving on then, let's talk about Rupee that closed near fresh record low of close to 96.96 against the dollar. Pressure building fast for the Indian currency with oil above $110 a barrel, as well as rising West Asia tensions hitting sentiment. Moving on then, let's talk about PI Industries that reported a disappointing set of numbers yet again this quarter. Now, when you talk about this particular stock, it was down about 8% there, about 7.5% at close as well. And the company has now missed estimates in 7 of the last 9 quarters, and that was something that was coming in as a key drag, with performance also largely impacted by customer delivery schedules. Revenue growth remained muted, dragged by weak exports and softness in the domestic business amid a broader global agrochemical slowdown. Now let's talk about the domestic front as well when you talk about PI Industries, and you're looking at high inventory levels. Add to that lower crop acreage that continued to weigh on pricing as well as demand, and the street is now watching out for execution improvement after 7 quarters of disappointment, and demand recovery is something that is something that investors are hopeful for going forward. Moving on then, let's talk about Zydus Life that is in focus with strong broker backing as well. So about 2% uptick coming in. When you talk about this particular counter, Macquarie in fact has maintained an outperform rating with a target price of close to 1100 rupees, following that solid all-round beat that you're looking at in the fourth quarter. Now let's talk about what the brokerages had to say, and they're remaining largely upbeat when it comes to the outlook, highlighting new growth drivers that could really sustain the momentum going forward. In fact, it has raised FY28 earnings estimates by 21%, signaling that confidence coming in execution and earnings visibility. The street is now going to be tracking how these growth levers translate on ground. Moving on then, let's talk about Bharat Electronics that saw a steady set of numbers in terms of growth. And you do have brokerages that stayed largely positive. Of course, that didn't manage to quite cheer the stock as well. But when you talk about the brokerage verdict coming in, it's Goldman Sachs as well as UBS that maintained a buy rating on this particular counter, target price of 475 and 500 rupees respectively. And while there is a slight earnings miss, a strong order book, robust cash position and healthy pipeline is something that kept outlook intact when it comes to brokerages as well. FY27 growth and margins also sharply in focus. Moving on then, let's talk about Hindalco's Novelis unit that sees pressure this quarter hit by a plant fire in the US, weighing on the profits. Now, when you talk about this particular company, they're expecting a faster than expected restart, while cost savings continue to build as well. And in terms of the brokerage verdict, let's talk about that as well, because brokerages in fact are staying divided. HSBC is maintaining a buy rating with the target price of close to 1300 rupees. Jefferies and Citi remain a little bit cautious as well, watching execution, cash flows and even demand recovery. Moving on then, let's talk about Mankind Pharma that reported a strong set of numbers led by steady domestic growth and improving margins. When you talk about this particular counter, it was buzzing away in trade, 3.7% uptick coming in on this particular counter. And when you talk about the earnings fine print, you do have the demand that stayed healthy across chronic therapies, while acute segments also saw a pickup. Profitability improved on better product mix and operating leverage. When you talk about Morgan Stanley, they also remain positive, maintaining an overweight rating with a target price of close to 2,500 rupees, citing sustained growth momentum. Moving on then, let's talk about Himadri Specialty Chemicals that moved a little bit higher, ended with that 3% gain also coming in. And this is after announcing further investment when it comes to battery materials firm Sicona as well. And the company is really stepping up funding through convertible notes, signaling continued focus on the EV value chain. Management has already committed significant capital, mind you, with more investments also lined up in phases. Moving on then, let's talk about a sharp turnaround coming through for something like a dredging corp that was buzzing away in trade. Look at that 8.5% uptick coming in after its fourth quarter numbers, and the company's clocked its highest ever turnover in financial year 26, also returning to profitability and how after last year's losses. When you talk about the fourth quarter performance, it's really standing out with strong execution and operating leverage, driving a significant jump when it comes to earnings. While revenue growth stayed modest, margins really expanded sharply, pushing EBITDA and profit sharply higher on a year-on-year basis. Moving on then, let's talk about IRB Infra that reported a strong profitability-led quarter. Now, when you talk about the net profit, that surged about 38%. When you talk about this particular counter, that was also buzzing away in trade, 4.5% uptick coming in. And the net profit surge was close to 38% on a year-on-year basis. This is despite a decline in revenue during the period. While top line saw a little bit of pressure coming in, operational performance remained firm with EBITDA growth and a sharp expansion in margins. Now, when you talk about margins, they've jumped significantly, highlighting improved operating efficiency, but also cost control. Let's also talk about Mangalore refinery that is in focus with a key infrastructure nod. Now, the company has received authorization from the Petroleum and Natural Gas Regulatory Board to build and operate an aviation turbine fuel pipeline. When you talk about this particular counter, about 1.8% uptick coming in. This pipeline is going to be connecting some facilities inside the Kempegowda International Airport, strengthening fuel supply logistics as well. And you're looking at a capacity of close to 2.5 million tons per annum and a 36-month execution timeline as well when it comes to this project. that's expected to significantly enhance the operational efficiency. Moving on then, let's talk about Karnataka, a bank that delivered a strong set of numbers. In terms of this quarter, you're looking at net profit surging about 62% on a year-on-year basis, supported by steady NII growth as well as robust operating performance. Now, when you talk about this particular counter, it was also buzzing away in trade, 6.5% uptake coming in, and the margins have also improved meaningfully, driven by a higher share of low-cost deposits, while funding costs eased as the CASA ratio really strengthened. Now, when you talk about the asset quality, that also saw a clear improvement with both gross and net NPAs declining on a sequential basis. However, treasury income, now that's something that remained under pressure due to elevated yields, even as the bank largely met its FY26 guidance. And on to PCBL Chemicals, that reported a weak set of numbers in the fourth quarter, with carbon black sales staying largely flat. Domestic demand remains firm, helped by higher tire exports. But export volumes take a hit as logistics costs rise. In fact, margins are also coming under pressure after a sharp increase in input costs weighing on the overall profitability. But the stock, on the flip side, was actually buzzing away in trade with an uptick of about close to 7%. And on to C Infosystems now, that posted a strong set of numbers in the fourth quarter performance, with profit more than doubling on a sequential basis. EBITDA margins also improving sharply and reflecting better operational strength really here. Now, the company said that its order pipeline remains robust at somewhere close to 1,750 crore rupees, signaling healthy growth visibility going forward. Moving on then, let's talk about Nomura initiating coverage on Avalon Technologies, with buy rating coming in and a target price of close to 1,700 rupees. Now, in terms of the word coming in from the brokerage, they're talking about how this company is well placed to benefit from the global industrial EMS upcycle and rising demand linked to AI-driven HVDC infrastructure. Nomura is also highlighting strong execution confidence. Coupled with that, management targeting a doubling of revenues over the next few years. And on to some business news now. Long-term yields in the US are flashing warning signs. The 30-year Treasury yield, in fact, surged to 5.18%, its highest level since the run-up to the 2007 financial crisis. And the spike is being driven by a mix of sticky inflation concerns. Right now, it's hovering close to those levels. In terms of the factors, you do have rising crude prices, widening fiscal deficits. Add to that geopolitical tensions in the Middle East, and markets are pricing in persistent inflation risks at this point in time. In fact, higher yields are now raising borrowing costs, with implications for housing demand, consumption, and broader economic growth. And on to the UK, that is softening its stance when it comes to Russian-linked fuels amid soaring energy prices and supply concerns. London, in fact, has relaxed sanctions when it comes to diesel and jet fuel refined from Russian oil in third countries as well. And the move also is coming in as disruptions in the Strait of Hormuz tighten global supply, pushing prices higher. While the government insists overall sanctions remain tough, this flexibility underscores growing pressure to secure fuel supplies. Airlines and consumers are already feeling the pinch as elevated fuel costs drive higher fares and pump prices. And on to China's policy stance that remains unchanged as of now. The central bank has kept benchmark lending rates steady for the 12th straight month, in line with market expectations. This is despite slowing growth and weak domestic demand. Policymakers appear in no rush right now to ease, supported by ample liquidity in the system as well. And the recent data, when you talk about that as well, for a little bit of a cue coming in, showing momentum softening with industrial output cooling and even retail sales hitting multi-year lows. And on to a massive labor flashpoint that is brewing at Samsung. Nearly 48,000 workers are set to strike after talks over bonus payments broke down, raising concerns over production disruption. Given Samsung's dominant position in the global chip supply, any prolonged strike could really ripple across markets, especially amid an ongoing AI-driven demand surge. While talks have resumed under government mediation, all eyes, in fact, are now going to be on whether South Korea steps in with emergency measures. And the stakes are high, not just for Samsung, but for the broader economy as well as global supply chains. And on to some national news now. A nationwide strike is set to disrupt medicine access today. Over 15 lakh chemists and druggists across the country are expected to shut shops and have already done so, a lot of them. Protesting against online medicine sales, the industry body says that deep discounting by large platforms is hurting small retailers and creating unfair competition. They're also demanding a rollback when it comes to rules introduced during the pandemic, which they claim enable misuse of online sales. The move could impact supply chains and patient access in the near term. And on to a significant ruling coming in from the Rajasthan High Court. The court has granted divorce, setting aside a lower court order, and clarified that cruelty in matrimonial disputes need not be proven beyond reasonable doubt. Instead, such cases will be judged on the principle of probabilities, easing the burden of proof in civil disputes. In fact, in a strong observation, the courts also criticized the age-old Ata-Sata system, calling it legally and morally flawed. The ruling could have wider implications, mind you, for how matrimonial cases are evaluating going forward. And on to the national capital and a weather update then. Delhi is bracing for an intense heat wave. The IMD has upgraded its alert to orange, with temperatures expected to touch 46 degrees Celsius. Now you're looking at a severe heat wave condition that is likely to persist over the next few days, with daytime temperatures staying well above normal levels. The national capital remains under an orange alert for the next 5 days, raising concerns over prolonged exposure and health risks as well going forward. Authorities are urging caution as extreme heat continues to grip the region. And on to international news right now. Now, PM Modi is in Italy for the final leg of his 5-nation tour, wrapping up a busy run of high-level engagements across UAE, the Netherlands, Sweden, Norway, and now Rome. Now, the India-Italy economic track is in focus as well. Bilateral trade at $16.77 billion back in 2025. Cumulative Italian FDI into India at $3.66 billion since 2000 through September 2025. And on a lighter note as well, the internet's favorite melody moment returned, and Melanie thanking Modi for melody toffees as well after their dinner and Colosseum visit. Moving on, then, the US stance on Iran continues to swing sharply. President Trump, in fact, has paused a planned military strike after fresh peace signals coming in from Tehran routed through Pakistan, raising some of those hopes of a possible deal. But in a quick pivot, Trump has also warned that military action, in fact, could resume if Iran rejects Washington's terms, keeping tensions on edge at this point in time. Even as both sides exchange proposals and a fragile ceasefire holds, the situation remains fluid, with talks progressing but no breakthrough yet in sight. Global geopolitics, in fact, is back in sharp focus as well, and Xi Jinping has hosted Putin in Beijing with full state honors just days after a high-profile visit by US President Trump. Timing is crucial, with optics closely watched as China engages both Washington and Moscow within the same week. The two leaders have signed over 20 agreements across trade and tech, while also pushing a broader vision of a multipolar world order. However, beyond signaling intent, there were limited concrete breakthroughs, highlighting continuity rather than a reset in ties. Moving on, then, global diplomacy is going to be turning to New Delhi this September. Putin is also set to attend the BRICS summit on September 12th and 13th, marking a key high-level engagement under India's chairmanship. The summit is expected to bring together leaders of major emerging economies at a time of rising geopolitical tension and shifting global alliances. Putin's presence also underscores continued strategic engagement between India and Moscow, with the BRICS platform gaining importance as a voice for the global south. And India-US ties are also back in focus with a key visit. US Secretary of State Marco Rubio is going to be arriving in the country from May 23rd onwards up until 26th. He's going to be here as well on his first official trip, signaling renewed strategic engagement. Rubio's 4-city visit plan, in fact, includes Kolkata, Agra, Jaipur and New Delhi, where he is going to be holding high-level talks and spanning areas like energy, trade, security, defense cooperation as well. So that's something that you're looking at. Visit is going to be culminating in the Quad Foreign Ministers meeting in Delhi, bringing together India, the US, Japan and Australia to discuss regional and global challenges. The timing, in fact, is significant, with geopolitics shifting rapidly and India emerging as a key partner when it comes to the Indo-Pacific. And Arsenal are Premier League champions for the first time in 22 years. The title is confirmed after Manchester City failed to beat Bournemouth, ending the race before the final day. It marks a historic moment for Mikel Arteta's side, who finally end their long wait and reclaim the Premier League crown after more than 2 decades. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And When the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Market ends at high point of the day after opening with cuts of nearly 1%. Nifty closes about 23,600 mark, while Rupee ends at record closing low of 96.83 against the dollar. The currency had recovered slightly after RBI reportedly sold dollars earlier in the day. Oil prices cools off today with crude hovering between $106 and $110 a barrel after Trump says that they are going to end the war quickly. But Iran's foreign minister signals tougher stance and threatens war beyond region. PM Modi and Melody go viral as PM Modi gives a Melody toffee to Italian Prime Minister Giorgia Meloni. PM Modi holds delegation-level talks with the Italian President, and PM Modi receives top military honor in Rome. HDFC Bank embraces hybrid work after PM Modi's austerity appeal. HDFC Bank goes 2-day work from home for corporate and business teams. IndusInd Bank and Axis Bank too are incorporating the work from home model. Gig workers hit by rising fuel costs flags concerns over volatile payouts and fewer incentives that are hitting their earnings. India is lining up over $1 billion in incentives to accelerate electric buses and trucks targeting private fleets over the next decade. Intercity operators could be the biggest beneficiaries as policymakers step up efforts to cut fossil fuel use and ease the energy crunch. Nationwide chemist strike today witnessed mixed response. Pharmacy associations are on strike against online medicine sales. Russian President Vladimir Putin meets Chinese counterpart in Beijing days after Trump's visit, calling the relation unshakable foundations. Putin says both nations have successfully withstood tests of strength and resilience multiple times. Hello and welcome viewers, this is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on national, international and the markets front. Let's begin this evening by checking the market action. D Street remained largely unchanged in the second half of trade today as Nifty tethered itself to around 23,600 odd levels. The Sensex rose a little over the 75,200 mark. Broader markets was bereft of any dramatic gains too. In fact, this cautious sentiment leaked into sectoral trends where media, FMCG and the IT indices witnessed intense selling pressure. My colleague Parth now joins us with all the details on today's market action.
So Nifty has ended in green today, up by over 0.2% and closing above the 23,650 mark. Hindalco and Reliance were the top gainers in Nifty, both of which were up by over 3% today. If we talk about the broader market indices, then Nifty Midcap 150 outperformed the benchmark by ending in green for the second day in a row and gaining over 0.4% today. This was led by Tata Communications and GE Vernova TND, both of which were up by over 7% for the day. If you talk about Nifty Small Cap 250, then it has underperformed the benchmark today, but it has still managed to close in green for the second day in a row, which was led by Eris Life Sciences and PCBL Chemicals, both of which gained over 7.5% today. If you talk about the sectors, then all the Nifty sectors ended on a mixed note, with Nifty Oil and Gas being the top performing sector, gaining over 1.5%, led by Hindustan Petroleum and Chennai Petroleum, both of which gained over 3% today. On the bottom side, we saw Nifty FMCG, which was the worst performing sector of the day, down by over 0.7%, led by United Spirits and Imami India. Now moving on to sectoral trends, we saw Nifty Oil and Gas, Nifty Auto, Nifty Realty and Nifty PSU Bank gain for the second consecutive day, while Nifty Metal and Bank Nifty have snapped their 3-day losing streak. Also, Nifty Pharma has snapped its 5-day gaining streak, while Nifty IT has snapped its 3-day gaining streak.
Well, thank you so much for that market action and the summary over there, Parth. Even as global uncertainties continue to keep markets cautious, Kotak Mahindra Asset Management Company believes credit growth for banks is slowly starting to improve. Speaking to NDTV Profit, Harsh Upadhyay, CIO of the fund house, said that he expects mid-cap companies to deliver stronger earnings growth compared to large caps going ahead. More importantly, the AMC expects double-digit earnings growth in FY27, although earnings in the first half of the financial year could remain under pressure. Listen into his view.
We do believe that overall earnings growth, while it may get impacted in Q1 and maybe a little bit in Q2 as well, and different sectors will have different kind of impacts. Overall, we still be in the double-digit zone for financial year 27, assuming that in the short term, we are going to see a resolution. And financial year 28, again, will be sequentially better than financial year 27.
Viewers, while we are just testing the waters of the first quarter of FY27, the Iran war shows no plausible signs of a conclusive end. As worse is that the rupee continues to be hammered in the process. As has been the case for the past several days, even today, the rupee hit a fresh record low of 96.96 against the dollar and then closed at a record closing low of 96.83 against the dollar. The Indian rupee first breached the 96 mark against the US dollar on May 15th, and just 5 days later, we're so close to 97. And the Iran war has been the core reason, triggering a domino effect on multiple economic levers to pressure the currency. Speaking of the war, first look at how oil prices have reacted today. International crude benchmarks like US WTI and Brent declined in trade as Trump clearly hinted at an imminent end to the crisis. Even US Vice President J.D. Vance struck an evident tone on ending the war at the recent White House press briefing. He said that he thinks the Iranians want to make a deal and also recognize that a nuclear weapon is the red line for the United States of America. Meanwhile, Iran has warned that resumption of hostilities would bring fresh setbacks for enemy forces. Taking to X, Iranian Foreign Minister Abbas Araghchi said that Tehran has gained military knowledge from previous conflicts and a return to war will feature many more surprises. Araghchi also said that Iranian forces are confirmed to be the first to down an American F-35 fighter jet. We've actually gotten Trump's exact remark that calm down oil prices safe for you. Listen into that.
And now we're blowing it away. We're blowing everything away, and we're going to end that war very quickly. They want to make a deal so badly. They're tired of this. Should have happened for 47 years. Somebody should have done something about it, and it's going to happen, and it's going to happen fast, and you're going to see oil prices plummet. They're going to come down. There's so much oil out there. They're going to come plummeting down.
Apart from Trump, guess who's going viral? Melody moment goes global as Italian Prime Minister Melanie shares PM Modi's sweet surprise video. Well, the chemistry between Prime Minister Narendra Modi and Italian PM Giorgia Meloni is once again grabbing global attention. This time, Melanie herself shared a video of PM Modi gifting her India's iconic Melody chocolates, a light-hearted moment that quickly went viral online. And before we get into the big diplomacy headlines, take a look at this now viral Melody diplomacy moment posted by Giorgia Meloni herself.
Modi brought us a gift, a very, very good toffee.
Clearly, what began as a light-hearted Melody moment online has now become one of the internet's most wholesome symbols of modern-day diplomacy. And beyond the viral camaraderie, PM Modi's Italy visit is carrying serious strategic significance as well. Prime Minister Modi and Meloni say India-Italy ties have now entered a decisive stage, evolving into a special strategic partnership. From defense and aerospace to AI, clean energy, and the India-Middle East-Europe corridor, Both nations are looking to deepen cooperation across sectors. The two leaders have also set an ambitious target of crossing 20 billion euros in bilateral trade by 2029. And amid all the viral moments, Prime Minister Narendra Modi also held delegation-level talks with Italian President Sergio Mattarella in Rome, further reinforcing the growing strategic depth in India-Italy relations. The Supreme Court has summoned cabinet records from the Finance Ministry regarding the waiver of Yes Bank's 81 bonds worth 8,415 crore rupees. Expressing sharp displeasure, the top court has directed Solicitor General Tushar Mehta to submit the cabinet note, meeting minutes and all documents behind the 2023 decision. The case traces back to Yes Bank's 2020 crisis-led reconstruction, where these high-risk bonds were written down to zero under an RBI-backed plan. While the bank maintains the move followed regulations, the court is reviewing a High Court ruling that termed the write-off invalid and upheld bondholders' claims. Moving on, viewers, rising fuel costs is directly impacting gig workers. They are under pressure as volatile payouts and fewer incentives are hitting earnings, even as demand stays strong. Platforms are now tightening spends, focusing on profitability, and that's breaking the link between growth and hiring. My colleague Rishabh now joins us with more details in this report.
Absolutely. What we're picking up in terms of the pressures that gig workers are facing is that with the fuel price hikes and also the sort of deferred incentive system that has come in because of the heat, there is some sort of pay pressure that these workers are facing. And this is despite the demand for their work and the work that they do and the sort of growth that quick commerce platforms are seeing. This is despite the sort of growth that we're witnessing there. What we're picking up is, of course, that across Blinkit, Zepto, Swiggy, Instamart, there are issues that are being flagged by these delivery executives around rising costs and the payouts not really meeting the expenses. What we're seeing is that apps are also reducing rider exposure. They're limiting order allocation during these peak afternoon heat hours. What we're also picking up is the fact that the rate cards remain unchanged. There is no sort of cut in pay there, but the sort of incentives that these delivery riders were earlier getting, that's not to be seen yet. What we're seeing is that they are also being incentivized to come in later in the evening or even during the night hours, and that is when they can earn a bit more, but that crucial day period is going to waste for them. What we're also seeing is that there is also the demand for gig workers that is continuing to rise, but supply is still trailing demand. This is, of course, according to TeamLease, which is a major staffing firm here in India. What TeamLease Senior Vice President A. Balasubramaniam has told me is also the fact that platforms are in consolidation phase, so they are no longer at a stage maybe a couple of years back when they would throw money at their problems, but they are at a consolidation phase. Either they're listed, so they are aiming for profitability, or they are going to be listed, so they want to be IPO ready. So that's the trend that we're seeing when it comes to the listed side of things as well. What we're seeing is that the aggressive sort of payout hikes that we saw earlier, those have also sort of been tempered down now. What we're seeing is also that the Q-commerce platforms are continuing to grow, and that is also hinging on the fact that they are delivering more and more higher worth items and not just grocery. It's moving to higher worth non-grocery items, and that's where a lot of this growth is coming for. So you don't necessarily need to hire more to deliver more in terms of value. What we're also seeing is that though there was a big worker shortage around the West Bengal elections, that is also tempered down. And the most serious shortages are being seen in the construction side rather than the government side. So that's what we're picking up when it comes to India's gig worker economy.
And it's not just FMCG giants aligning with Prime Minister Narendra Modi's austerity and efficiency push. India's banking sector too is increasingly embracing cost optimization and flexible workplace models. HDFC Bank is expanding its hybrid work policy, now allowing select corporate and business teams to work from home for 2 days a week. My colleague Nimit now joins us live from the newsroom on how exactly India Inc. is recalibrating workplace strategies amid the broader austerity and cost efficiency focus. Nimit, tell us.
Yes, so absolutely. What we're seeing right now is that the banks, and HDFC being the latest of 3 banks who has acted on Prime Minister Modi's plea to reduce fuel consumption in your general workplace and how you conduct business. What HDFC has told us is that they are implementing a 2-day work from home policy, but this is only for non-customer facing. For customer facing staff have to come to office. Now, this has also been implemented earlier this month by IndusInd Bank. IndusInd Bank very clearly said that they're also implementing a hybrid model, although they've not given the exact number of days, but they have a hybrid model based on a trust-based people's principle. Now, this takes us back to the COVID era when this was a regular norm and the infrastructure is already in place for this sort of functioning. And that's what we're seeing at Axis Bank as well, because Axis Bank has, since 2021 and COVID, has been implementing a 2-day work policy where 2 days are only out for customer-facing jobs. Now, customer-facing versus non-customer facing is very important here. We'll come to that with numbers in just a bit. But before that, also letting you know that public sector banks have also yielded the call. Now, while there's no mandatory policy from the government on work from home, there are austerity measures given by the Department of Financial Services, which say that you cut costs, cut fuel, cut unnecessary travel, and also move to electric transport systems, which is something that's being worked on right now. Coming back to the numbers now, this is where it gets interesting. How many people are actually going to work from home and who is this going to affect? If you look at the 3 banks we questioned, HDFC, Axis and IndusInd, they totally comprise about 3.5 lakh employees. Now, out of this, customer facing roles and non-customer facing, customer facing are essentially 60% while non-customer are 40%. This comes out to about 1 to 1.5 lakh people working from home at least 3 days a week, which is a substantial figure that will really help out on consumption of fuel, as was the plea by PM Modi.
Right, thank you so much for that, Nimit. And in fact, it's not just the banking ecosystem that is doing this, it's also Hindustan Unilever. Speaking to NDTV Profit, the company said the Indian economy remains resilient and proactive measures like these will help sustain growth momentum amid global uncertainty. And for more on HUL's response and what it signals for India Inc. as a whole, I have my colleague Rithima Bhatnagar joining us on this front. Rithima, what have you picked up?
So HUL has welcomed PM Modi's fuel conservation and austerity push. It says that PM Modi's call for austerity is a prudent step for long-term national stability, and it also tells us that around 97% of energy requirements of HUL comes from renewable energy, and it is also scaling up its EV systems across its supply chains via strategic partnerships. And not just this, it has also significantly reduced its foreign trips for its employees, and in fact foreign travel is now restricted to only critical business needs, and it also continues to encourage its employees to have virtual meetings and also follows a hybrid work model. And it also reiterates that this step by PM Modi says that Indian economy is remaining resilient, and these proactive measurements and measures will help sustain growth momentum.
Thank you so much for that, Rithima. And as very small pockets of India Inc. take these austerity measures that was pushed by PM Modi in view of geopolitical tensions, a nationwide strike called by the All India Organization of Chemists and Druggists has raised concerns over possible disruptions in medicine availability across several parts of the country. The protest is aimed against the growing presence of online pharmacies and app-based medicine delivery platforms, with multiple chemists associations extending support to the shutdown. The organization argues that the rapid rise of e-pharmacies is happening without adequate regulatory safeguards in place. Concerns have been flagged around prescription verification, unchecked access to restricted medicines, and the larger impact on traditional brick-and-mortar pharmacies. Meanwhile, both the centre and several state governments have assured citizens that access to essential medicines will continue uninterrupted. Hospital-linked pharmacies and emergency medical outlets are expected to remain operational despite the strike action. A major digital push is coming for EPFO subscribers. Labour Minister Mansukh Mandavia says members may soon be able to withdraw their provident fund directly into their bank accounts through the UPI payment gateway. For more on this big move aimed at speeding up PF withdrawals and making transactions seamless, I have my colleague Mahima joining us with details.
Right, so good news definitely for PF investors per se, because anybody who's used the EPF website knows how cumbersome it is to kind of just go ahead and withdraw your own money, right? And this move comes after last year's announcement by EPFO that they'll be working with NPCI closely to kind of help those investors withdraw money very easily via using UPI. And the update is that the Labour Minister Mansukh Mandavia has said that the testing of the facility has been now completed and it will be soon available for a lot of EPFO investors. So certainly a very positive one, because earlier a lot of times these claims used to get rejected and then you had to again apply. So all those hassles will go away. Just that certain portion of EPF still will be frozen, and a large chunk of amount will be available to withdraw with UPI. So that's most certainly a very positive news coming in for PF investors.
Thanks for that, Mahima. And the United Nations has lowered India's economic growth forecast for 2026 to 6.4% from the earlier estimate of 6.6%, citing global uncertainty and fresh economic shocks emerging from the ongoing West Asia crisis. According to the UN Department of Economic and Social Affairs, higher energy import costs, tighter financial conditions and inflationary pressures are expected to weigh on growth momentum. The report noted that India, as a major energy importer, remains vulnerable to rising crude prices and global financial tightening. However, the UN has also maintained that India will continue to remain one of the world's fastest growing major economies, supported by strong consumer demand, public investment and resilient services exports. The global body expects India's growth to improve to 6.6% in 2027. Meanwhile, the UN has also cut its global GDP growth forecast for 2026 to 2.5%. So it's not just India, but globally as well, warning that the West Asia conflict is adding fresh pressure on inflation, trade, and global economic stability. A major policy push may be on the cards for India's electric mobility transition. The government is evaluating a nearly $1 billion worth of incentive program to speed up electrification of privately owned buses and trucks, with a particular focus on intercity transport operators. My colleague Puneet now joins us with more details on what could be the centre's next big EV push. Puneet.
Well, most certainly, and I think there is of course a big story coming in on a $1 billion incentive that could be announced, and this will be of course distributed over the lifetime of the bus duration as well. So that could be 10 to 12 years. But even a policy push initiative on those measures will be a very strong one, and this will be targeting their privately owned. So currently, out of the 100 buses that operate in India, 95% are now privately owned. So that segment has to be looked at very carefully. Currently, the EV bus market is largely, the fleet size of things is being looked at from the EV side. But this big share will be for intercity bus operations, and hence a big push for that side of the business as well. Now, there will be interest subvention at this point of time. That could be one of the key reasons considered, as well as some partial credit guarantee scheme also could be announced. So you will see a large push from banks, especially to finance this. And since it's coming from the top, from the government, banks will be okay to give a lot more funding to private vehicles and private companies as well to change up their fleet. Now, that is the other push that they're targeting. And finally, in terms of some of the key beneficiaries, right? Because we've spoken about the electric pure play bus makers like Electra Green Tech and JBM Auto, Switch Mobility, which is a subsidiary of Ashok Leyland, as well as Tata Motors. These will be some of the key beneficiaries, but this will be key for the private vehicles. We've also seen that state governments like Delhi have already given the mandate to schools, for example, of 30% of their bus fleet to be electrified by 2030. But all such measures are now gaining traction, and you could see that benefiting the companies that are already placed in that space right now.
Right, thank you so much for that, Puneet. And viewers, as India encourages people to adopt more EVs, Russian President Vladimir Putin is on two-day visit in China, days after US President Donald Trump's meet with Xi in Beijing. Putin hailed the unshakable foundations of Russia-China ties during talks with President Xi Jinping in Beijing. Addressing an extended meeting, Putin said the relationship has withstood multiple tests of strength and resilience, driven by a shared goal of prosperity for both nations. He in fact said that ministries on both sides are working closely to deepen cooperation across sectors. The visit, a two-day state trip, comes shortly after a US presidential visit to China, as I highlighted before. And that's why it assumes even more importance. The two sides agreed to extend a friendship treaty first signed in 2001, and that's a key takeaway from that high-level meeting between Putin and Xi. Meanwhile, Meta has begun a major global layoff drive, notifying thousands of employees via email in a staggered rollout across time zones. Around 8,000 jobs, nearly 10% of its workforce, are being cut globally, with engineering and product teams hit the hardest. The move is part of a sweeping restructuring focused on boosting efficiency and accelerating AI-led transformation. While thousands are being let go, about 7,000 employees will be reassigned to AI-focused roles, and 6,000 open positions have been scrapped. The company is also flattening management layers, signaling a shift to leaner teams as CEO Mark Zuckerberg doubles down on massive AI investments. But surprisingly, Meta started notifying employees in its Asian hub, Singapore, reportedly at 4 a.m. It began with a simple instruction: work from home today. Employees across regions, including that in US and Britain, were told not to come to office. No town halls, no floor chatter, no visible anxiety in office corridors. Then the emails started arriving. Moving on, the Supreme Court has raised concerns over fruit-flavored vodka being sold in Tetra packs, calling the packaging very deceptive. Chief Justice Surya Kant made the observation while hearing a PIL seeking a ban on alcohol sold in inconspicuous packaging resembling fruit juice cartons or sachets. For more details on the court's observations and the PIL, let's go across to my colleague Nupur.
The Supreme Court today has issued notice to the centre and a sought response on a PIL that has raised the issue of alcohol being packaged and sold in Tetra packs. Now, the Chief Justice of India, Justice Surya Kant, today noted that such packaging was misleading, and the way some of the alcohol brands were selling vodka in Tetra packs, they could easily be mistaken for fruit juices. So, the PIL has in fact highlighted several such instances and has now sought intervention from the top court, and top court has in fact rightly issued notices to the central government and other authorities, and has asked that what are they going to do to regulate bottling of alcohol, especially alcohol being packaged in Tetra packs, which the top court had earlier also expressed concern about.
So the Supreme Court has said a big no to juice-like vodka packaging. But that's all the time we had on this edition of Profit 360. Stay tuned. This was Malika Mishra. Thanks so much for watching.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Interesting show of KYC where I get you hidden gems, interesting market cap, companies, and also the place where a lot of action happens, especially on the buying front in the open markets. And today a very interesting company has come, but before that I'd like to give you some hints. It's a bit difficult to guess. It's in a very complicated sector, but I'll try to simplify it for you. They manufacture polyester films and specialty polymers. Interesting company. Also, recently the company has come out with its Q4 numbers, and if you look at sequential basis, the company has delivered. That is where my interest came, and of course, promoters also were increasing the stake in this company. Stock itself is up 37% from March lows. It's a bit difficult company to guess, but try to do that. In the packaging segment, we have 5-6 companies. One of them is Esther Industries. This is what we are going to talk about. And why are we calling this company? That's the big question here. It's largely a small cap company. Why the interest? The question is on the Q4 numbers. There was a little bit of turnaround, and will that sustain going ahead or not? And remember, there's a lot of crude derivatives at play when you deal with a packaging company. So let's just look at the key questions. Why are we calling this company? The first one is definitely going to be there on the improvement in the trade environment. Is the momentum going to continue, especially on the trade tariff front? That is where the clarity has come in as of now for this industry. They have a higher exports also, and the rising raw material cost. Is that a concern? Is there a pass through there? All these questions we'll try to understand, especially learning the industry. And will there be any margin pressure in the first half of FY27, or the global pricing will offset that? That's the important question to be asked, and of course this becomes also important. Apart from this, there are some questions also which we'd like to focus on, and that is the implementation of plastic waste management rules. That's a major retrigger, especially in the recycling theme, and recently they did a 165 crore fundraise via warrants. Where will the application be? That's the key question to be asked. And the European Union's eco-design for sustainable product regulations. The next 2 to 3 years, there is more time left. What benefits does this happen? And this is very interesting, and this is what we will talk about. Esther and Loop JV. This is where the specialty angle comes in, and the company is moving towards that. So maybe this is an inflection point to an otherwise a commoditized business, and of course the capex expansion plans ahead as well. Will they take it? Will they kind of delay it on the geopolitical issues? That's what we'll try to figure out. But we have a turnaround specialist in this industry, so the conversation will be really strong. We have Vaibhav Jha, CEO at Esther Industries, where he'll talk about how the company might move ahead, especially whether it's at an inflection point or not. But let's try to understand Esther Industries करती क्या है. छोटी कंपनी है, promoter अपने stake ने acquire किया है थोड़ा, और that is where the interest has come in. 40 years old company. It manufactures polyester films, specialty polymers, and RPET as well. These are the recycled PET, to put that in perspective. But where are the applications? So this is of course there in the primary flexible packaging space, and we are seeing this long-term trend going ahead. Specialty polymers, they are in the niche areas. This is into the rigid packaging, textiles, especially in the technical textiles. That is where a little bit margins also come. Customers are in over 50 countries,
and a good exposure they already have. Apart from this, let's look at the other key details, and this includes 3 state-of-art manufacturing facilities across India. Some is there in Haryana, some is in Hyderabad. 20 granted patents they have, and a very important strategic partnership they have with Loop Industries JV, especially with Nike as an anchor customer. That's what we will be looking out. And 62% revenue comes from exports. That means the depreciation of rupee is actually aiding the company. They have a key customers. They include Godrej, Huhtamaki, Dabur, Britannia, Unilever, ITC as well. And also, if you look at the FY26 revenue breakup, still the 87%, the majority of that still comes from polyester films. This is the revenue segment that's around 13% coming from specialty polymers. This is where the value-added segment also lies. So it will be pretty much interesting how this product mix changes going ahead. And this is the installed capacity. You can see polyester chip, polyester film and RPET. This comes under your polyester polymers. And there's a second segment which we spoke about. This is specialty polymer. These are the installed capacities. But what's the key management commentary in this Q4 earnings? They are focusing on the premium specialty product mix. So that'll be interesting to talk about. RPET, there's a higher production and demand happening, and this is for the sustainable packaging, and this is the future I would like to talk about, especially if you're tracking this sector. Uncertainty is there in particular segment in specialty polymer, so we'll try to understand that from the management, and that was the impact in the Q4 numbers. But there are key concerns. Higher raw material costs and that input, is it going to impact more in the first quarter? Second concern for this stock is there's a lack of FI and DI participation, and that brings it to my next point, that's the lack of analyst coverage, and this is why we get these companies in KYC to you to make better and informed decision. Return ratios are also muted, and that is where the concern lies for Esther Industries. But is the worst over? That's my question. Another take I'll want to give, because the recycling business in India might drive alpha, and of course from foreign customers as well. Now they have an improved global pricing right now because there has been an increase in the Chinese origin prices. That's what the management has also stated. And interestingly, a lot of anti-dumping duties coming on the BOPET. This is one of the key products of theirs in their film imports, and this augurs well for domestic players like the company. BOPET films export headwinds are abating on the tariff clarity. That's what they mentioned. That's what we have seen in the Q4 numbers also. This is very important to note down that maybe the worst is over for the company and promoter buying continues in this counter. That is where the interest for me lies in Esther Industries. But let's try to understand more step by step in our KYC. What are the ratings we generally give to a company when we judge them? First and foremost, of course, the income statement, balance sheet, and cash flow is something which we definitely look at, and these are the most important ones. Then is the return ratios, especially I'll try to get you the ROC numbers to see over the period of 4 to 5 years how the company has performed. Shareholding, how much has been moved. Of course, FIDI is something number which I'd like to show and point out to you for this company. Street cred for the last 5 years, has the company actually made money or not? Valuations, it's a very competitive market, especially in the packaging segment. Is there a commodity at play, or is there a valuation comfort, or isn't? That's the key question to be asked. And lastly, the outlook, the medium term, long term and short term. I'll get you all of them in our rating parameters. But before that, let's start with the first rating parameter, and that is the income statement. And this is where a little bit of concern basis.
A joint action plan 2025-2029. And today here in Rome, we are further strengthening our relation all the way up to the special strategic partnership, the highest ever reached in the relations between our two nations. So I think it's safe to say that now Italy and India are closer than they have ever been. Our relations are now capable of expressing their fullest potential. This is something which, of course, has been achieved thanks to our teams, our ministers and diplomats who have worked hard over the years. It's something which is very much brought about by our productive systems, interested in one another, as proven by the fact that over the past year we celebrated 3 Italy-India business forums, but it is also due to the over 7 meetings that I have had with Prime Minister Modi over the past 3.5 years, during which we have gotten to deeply know one another and our respective points of view. We have also created an honest friendship based on respect and mutual trust. I have personally learned to appreciate the vision, the pragmatism and the leadership of the Prime Minister, as shown by how popular he is amongst his citizens after many years in government. And I think that this friendship of ours, this relationship of ours, has very much helped us to work so swiftly on strengthening our bilateral relations. As I was saying, today is a historic event because the relations between Italy and India are further strengthened. Now, what goals have we given ourselves? Well, we certainly want to foster our already strong trade up to 20 billion euros, all the way up to up from the current 14 billion by 2029. This is a very ambitious target, which can be achieved also by taking advantage of the potential stemming from the free trade agreement signed between the EU and India. This is a target that can be achieved also because our economic and productive ecosystems are highly complementary to one another. The size, the digital infrastructure, India's innovative dynamism combines perfectly with Italy's industrial strength, our manufacturing excellence, our ability to promote technological integration. This complementarity can lead to business, investments, quality employment, industrial cooperation. And from this point of view, we are determined to explore all of these opportunities fully. In this context, we are also engaged in promoting the Innovate India initiative, which will lead to the creation of an Italian center in New Delhi that can foster cooperation between our talents, our innovative ecosystems, our startups, enterprises, universities, and research institutes. And speaking of innovation, let me mention the joint efforts promoted by Italy and India to ensure that the development of artificial intelligence, which is the largest and most disruptive revolution of our era, can be responsible and focused on the human being. We believe that regulation, rules, and security need to go hand in hand so that artificial intelligence can unleash its positive potential by meeting the needs citizens have and by continuing to serve human beings. And there are a number of political initiatives that we have worked on. Let me mention that during Italy's presidency of the G7, we had a number of initiatives. India organized the AI Summit with the same goal in mind and on the same wavelength.
Our aim is clearly to enhance the complementarity between our two countries in many other sectors, and we have broadly discussed them today as well as last night. Advanced manufacturing infrastructures, energy, space economy, defense. This is a cooperation sector we are working hardly on and well. Critical minerals, agro-industry, maritime transportation, tourism and culture, which are something very important, an opportunity for two millennium-old civilizations. Important MOUs which are going to be signed today follow this path and aim at strengthening our cooperation in a wide spectrum of sectors. And today, the work of today will be made even richer after this statements to the press by the meeting among some of the main representatives of the business world, both from Italy and India. We want to have an exchange of views with them in order to understand how to better improve the synergies between the production sectors and the industrial world, and as far as we are concerned, in order to be able to attract more direct investments. And then, as we know very well, the strength of the relationship between two countries is not only measured by the depth of the political relationship or in terms of economic figures, but it is also indicated by the ability to bring our populations together, to be able to create opportunities for mutual mutual knowledge. That's why we decided to launch the Italy-India Year of Culture and Tourism for 2027, which is a unique opportunity to have our century-old cultures develop a dialogue and make them more and more connected. We have another feature in common. We are two peninsulas, two platforms, or logistic platforms, which are projected in crucial areas of the world, the Mediterranean and Indo-Pacific area. We think that strengthening the interconnection between these two important areas is of extreme importance. That's the reason why we wanted to further develop IMEC, which is the infrastructure corridor, economic corridor between Europe, Middle East, and India, which was established during the G20 summit. It is an initiative we strongly believe in because we think that it can unleash a potential, a wonderful potential for our trade, for our businesses and our relations. Italy and India share a joint vision on many of the huge challenges of our times: international stability, protecting rules, economic security, the resilience of the value chains, the promotion of peace, inclusive development. And we discussed many of the complex scenarios we are faced with. We talked about Ukraine, we talked about our commitment to achieve a lasting and fair peace. As to the Iranian crisis, we exchanged our views with the joint hope that the negotiations, peace negotiations, will continue and reach a positive conclusion in a framework which we know is very critical and very shaky. In both scenarios, we are increasingly interconnected, and Italy will continue to play the role. We shall not mention the fact that it is extremely important to have freedom on navigation. In the Indo-Pacific sector is where we share the same vision of a free, inclusive, and open Indo-Pacific, and Italy will continue to play their role. Italy and India will continue to play their roles, possibly together, to contribute in peace and stability. So, dear Prime Minister, thank you very much again for being here. This visit of yours is an honor for us and opens a new page in the relations with our countries. It's not going to be the last one in this long book that you are writing together with resolution, doing our work in the best possible way. There is an Indian word which states that very well, which is parishram. Parishram, which means hard work, constant commitment, fatigue, a word which I know is very often used in India, and it is often used in a very popular way of saying parishram hi sa falta ki kunjiai, which means tough work is the key to success, and we are used to build our relations in this way, with a hard work, which becomes success at the end. Thank you very much.
Your Excellency, Prime Minister Meloni, दोनों देशों के डेलीगेट्स, मीडिया के साथियों, नमस्कार। बुongiorno। मेरे और मेरे डेलीगेशन के भव्य स्वागत के लिए मैं प्राइम मिनिस्टर मेलोनी का हृदय से आभार व्यक्त करता हूं। रोम को विश्व में इटर्नल सिटी के रूप में जाना जाता है। भारत में मेरी लोकसभा कॉन्स्टिट्यूएंसी काशी, उसको भी अनादि और शाश्वत नगर माना जाता है। जब दो सभ्यताएं मिलती हैं तो बातचीत केवल एजेंडा तक सीमित नहीं होती, इसमें इतिहास की गहराई, भविष्य की दृष्टि और मित्रता की सहजता तीनों साथ दिखाई देते हैं। फ्रेंड, पिछले लगभग 3.5 वर्षों में मुझे कई बार प्राइम मिनिस्टर मेलोनी से मिलने का अवसर मिला है। यह भारत और इटली के बीच करीबी सहयोग और सामंजस्य को दर्शाता है। उनके नेतृत्व में हमारे संबंधों को नई गति, नई दिशा और नया आत्मविश्वास मिला है। मुझे खुशी है कि हम अपने संबंधों को अपग्रेड करते हुए स्पेशल स्ट्रेटेजिक पार्टनरशिप की घोषणा कर रहे हैं। फ्रेंड्स, आज की बैठक में हमने हमारी भावी साझेदारी को और सशक्त बनाने के लिए विस्तृत रूप से चर्चा की। भारत इटली जॉइंट स्ट्रेटेजिक एक्शन प्लान 2025 to 2029 हमारी साझेदारी को एक प्रैक्टिकल और फ्यूचरिस्टिक ढांचा प्रदान करता है। हम इस पर समयबद्ध तरीके से आगे बढ़ रहे हैं। हमारे साझा प्रयासों में द्विपक्षीय व्यापार के 20 बिलियन यूरो के लक्ष्य की ओर तेजी से बढ़ रहा है। भारत में मौजूद 800 से अधिक इटालियन कंपनीज भारत की ग्रोथ स्टोरी में सक्रिय भागीदार बन रही है। आज आयोजित किया